Okay, good morning, everyone. Thanks so much for joining us today for the Traders Summit. I almost said Traders Conference. It's not a conference, it's a summit. The difference being a conference is multi-days, a summit is a singular day, but what a day it's going to be today. We have a lot of great speakers. Can't wait to have them introduced to you. Oh, really loud. Hot. Sorry, let me turn that down. So, going to be a great day today. Let me do this. Let me show you a video real quick.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, I'm getting word from excuse me. Our video stream is not doing very well. Colleagues, please tell me now if this is any better. Going through messages. Yeah, we're supposed to be starting right now, but if I guess I'll go ahead and cut over to Jeff, and we'll see if the video is better as we go on. Just checking back. Give me just a moment, please, folks. Just checking back with my colleagues to see what the deal is. Okay, I'm still seeing that we're having bad audio and video. I can't explain that. Let me just check one thing, folks, really quick. See what the speed is going like. Oh yes, we are having a problem. I have really bad upload speeds. See if that's any better. We might have to switch over to our backup. Give me another moment, please. Please stick with us. Yeah, we are having an issue with that. Let me try something really fast. Okay, just another moment, folks. Stick with us, please. We're still trying to get things working optimally here. If not, we'll cut over to our backup system and just use that today. Give me just another moment, please. Okay, it's still not great. Yeah. So Jeff,
I'm looking for my dad jokes, but I don't have them here.
All right, Jeff, you're live.
Good morning, Maverick.
Sorry, I didn't catch it. Sorry, I didn't catch it down. I'm a little occupied over here.
You're fine. You're fine. Thank you very much, Greg. Good morning, everybody. It's good to see you. Good morning, Maverick, Rick. If there is some audio issues on the YouTube stream for Vincenza, Bobby, everybody else, we're switching to our backup server, which actually kind of takes Greg's whole setup out of the whole equation. So anyway, it's good to see you. If you are also watching us on YouTube, make sure to like and subscribe. Helps a great deal, and we'll be happy to see you. So Chris says, is there a schedule? Yeah, I'll send you actually a link to the schedule. It's metastock.com/traders-summit. I'll send that over to the link and give you the full schedule. So good morning, everybody. Good to see you. Thanks for coming. It's good to be here. All right, let's read a legal disclaimer. That'll be fun. Today's demonstration is designed to instruct you on using MetaStock and the company's software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor does it paid for the promotion of any security. No information contained in the presentation should be construed as investment advice or a solicitation to buy a security. So there you go. I'm told that the bandwidth on YouTube actually looks good because we're doing the backup. So you should be able to hear us well. If you're having any issues, let us know. But apologies for that. So apologies for the late start too. Before we do get started, I do want to say thank you to Stocks and Commodities for sponsoring the event. Actually, Chris, if you go to this URL right here, www.metastock.com/traders-summit, you can see the full schedule for today. But in any case, you can also sign up for a free issue if you're watching on YouTube and you haven't signed up. You can actually register and get a free issue of their magazine. They've been making it since 1982. Got about 17,000 articles, 1.3 million subscribers. Great magazine. Do a really, really good job. I really appreciate the support that they've given us over the years. Good morning, Sean. Good to see you. You bet. Here, there you go. You can actually should be able to click on that link too and go straight there. So in any case, we're of course MetaStock. MetaStock's a software company. We've been rated #1 in our price category for 31 years in a row. The thing I love about MetaStock is scanning, I scan every day. You can test trading ideas with it. You can do statistics. You can get real-time alerts, commentary, signals. Pricing for MetaStock starts at $69 a month. And if you click on the QR code, you can get an extended trial where you buy a month and get a second and third month for free. You can also go to the link there on the screen. So without further ado, I want to introduce Buff Dormeier. Buff's a really good volume analyst. In fact, he just launched 2 ETFs. They're MVFD and MVFG. Those are Monarch Value Factor Dividend, Monarch Value Factor Growth. So you might want to take a look at those. Very, very cool. They basically use a lot of the volume strategies he uses. So Buff, let's go ahead and bring you on here. I'm going to go ahead and make you the presenter. And how are you?
Hey, doing real good, Jeff.
Right, very cool. I'm gonna go ahead and send the screen over to you. Thanks for kicking us off this morning. There you go.
Hi,
You guys go.
you're more than welcome.
I've got your screen. I can hear you. I can see you, and I can. Everything's working great. So I'm gonna go ahead and get out of the way. Let you take it away with this.
All right. Well, thank you, Jeff, and thanks everyone for joining me today. I want to talk about today. We're going to talk about volume, and what I want you to understand about volume, that it's not only a valuable piece of market data, an indispensable leading indicator, but also the undiscovered market factor. But it's not just any factor. Volume is the factor that rules them all, because volume is the force that empowers price movement and sustains trends, making volume the monarch of factor investing. This volume factor is the missing piece bridging goals-based financial planning to technical analysis via tactical asset management. Okay. So volume is the unknown investment factor. As your volume evangelist, hey Jeff, can you guys see my R screen? Is that coming up?
Yes,
Hey,
it is.
Buck, yeah. What we can see is, yeah, your R screen.
Okay, fantastic. Okay. So as your volume evangelist, I'm going to provide you with the 4 rational points, all starting with the same letter R. And so here are the 4 R's of volume. First R is responsiveness. Volume provides quicker information. Volume leads price, which means changes in volume generally occur before significant price movement. The second R is reliability. Volume confirms price. So if price is the market's testimony, then volume is its polygraph. Volume validates and substantiates price. The more investors participating at a given price, the more that price point is validated. And this way, volume not only gets you into a trend movement quicker, but simultaneously increases the probability that that price trend is going to continue on in the future. The next R is risk. And if you can differentiate a legitimate trend from a suspectable trend and identify trend weakness early on, employing volume analysis should help you position you in a better position to reduce the risk in your portfolio. And number 4, if we're able to identify a trend earlier and have a higher probability of being positioned correctly, then we're putting the odds in our favor and positioning ourselves with the opportunity to make a better return. So generally, in a volume analysis presentation, I'm going to prove out these 4 points 5 days until Sunday. But today, we're going to focus strictly on the last R, that's returns. But before we get into that, let's first cover the fundamentals of technical analysis so that you know how and why volume analysis works. So we're going to start with the very basics, and it just doesn't get any more basic than price. But what is price? If I purchase a security today, what's my opinion? Well, I'm bullish. I believe the price will rise. There would be no other reason for me to buy it. But in order for me to take ownership, that order must be matched. And what's the seller's opinion of that security? Well, there could be multiple reasons that someone might sell, but most likely they're bearish. They believe the price declined. Therefore, price is the agreement to disagree. 2 different parties with opposing views of the future. That agreement is price in the exchange market. Price represents the conviction the emotion and will volition of the investor, and price is truth. It doesn't matter what people on the TV are saying, those talking heads, or the analysts and their price targets, or someone's view of intrinsic value. A stock is worth what it trades for, and the price represents all the collective knowledge of the markets. So if you don't believe me, just ask those leveraged short sellers. So why did the market go up last week? Or why did it go down today? Well, if it's going down today because there's more sellers than buyers, and that's technical analysis, right? Well, that's what we heard on the YouTube channel, but no, they don't understand. In the exchange market, the number of shares purchased always equals the number of shares sold, which equals the total volume exchange. So we can use this simple little formula, B equals S equals T, which will help you remember the buy volume is the sell volume, which is the total volume. They're all the same. So let's put this knowledge into practice. And let's say I get a signal for my newly purchased MetaStock add-on. And because I got that signal, I need to buy it now, the moment I receive the signal. And so I put an order in to buy 1,000 shares of ABC stock at the market. But unbeknownst to me, there's institutions selling 100,000 shares because it's reached their intrinsic value target. So they put a limit order to sell, and it matches with my order to buy at market. So the question is, who's in control? Me with the market order suggesting urgency, the limit order but with suggesting complacency, but 100,000 shares versus just my 1,000. Well, the answer is we just don't know until that order is filled. But when that order is executed, if that trade goes through on an uptick, it indicates my demand is greater than their supply. And if the trade goes through on a downtick, then there's more supply than demand. And these interactions are happening tens of thousands of times every second, 5 days a week in the market. And if the accumulation of those ticks are moving higher, then we know demand is in control. And if they're moving lower, then in a downtrend, then we know supply is in control, and that's visualized by the downtrend. A security that is being distributed, and if it's going down, that's a security that's being distributed over time. Now, what if there was a way to look deep inside these interactions of supply and demand to determine whether volume was supporting the price? Well, that's the goal of our volume analysis. So think of volume analysis like this. You're now the pilot of an airplane, and you desire the plane to go higher. So what do? You change the trajectory and aim it higher. But if you fail to provide the plane with more thrust through increased fuel, then that plane is likely to stall. Volume is the fuel of the market. It takes more and more people willing to provide more and more capital at ever increasing prices to keep the proverbial plane ascending. If the market's moving higher with fewer and fewer capital flows, then the market lacks the fuel or the force or the thrust to continue and may likely stall. So let's review together how to use volume analysis. And so before I go through these 4 quadrants, let's go through a couple terms. An uptrend is greed. Greed is needy. It always wants more, more, more. Where a downtrend represents fear. And fear is a herd mentality. Get me out, we'll figure it out later. Rising volume, that's force or energy. But falling volume operates under the laws of entropy. So looking at the upper left-hand corner, we'll start here. And here we have price expansion and volume expansion. This is the trend that's moving up with volume rising. So this is greed with fear, and the market's in a state of invigorated greed or strong demand. The uptrend is confirmed by the rising volume. The implication going forward would be bullish. Next, we have a trend going up, but on falling volume. So this is greed, not with energy, but with entropy. This market is under a state of complacency or weak demand. The uptrend is being contradicted by fewer and fewer people willing to participate at ever increasing prices. And the implication going forward is bearish. Next week, the trend turns down, the volume is rising, and this is fear with energy, where the market's in a state of fear or strong supply. Downtrends being confirmed by more people willing to sell at ever decreasing prices, and the outlook going forward would be bearish. And next, and the final quadrant here, we have a trend that's down on falling volume. This is fear with entropy, putting the market in the state of apathy or weak supply. This is the downtrend's being contradicted by fewer people willing to sell at ever decreasing prices, and the implication moving forward would be bullish. So let's go through an example of this. So here here we have a chart, and I've drawn in the trend lines for you, and I wrote in what the implications are. And beneath this here is one of the indicators that's available to you on MetaStock, the volume price confirmation indicator, which is designed to confirm or contradict the price trends. So the red line is the VPCI, and the blue line is simply a moving average, a smooth average of VPCI. By following these two together, you can get an indication of momentum within the volume price confirmation indicator. And the other thing to note is this dotted line right here. This is the 0 line. This represents is the VPCI positive or negative. When it's positive, it's confirming it's confirming price, and when it's negative, it's contradicting. So here we start out, the trend is down, and the VPCI is going down, but here at point 1, the VPCI turns up and crosses over its smooth average. And then here, at this point here, it crosses over the 0 line. And guess what? The markets, the stock starts to move up. The VPCI is moving up with it, so the volume is confirming the uptrend until we get to point 2, and the VPCI turns down, crosses under its smoothing average. This is a warning signal, but it's still above the 0 line until that point here, and then eventually the stock starts to move down until about this point right here, where we get this kind of V formation in the indicator, which is also often an indication of a capitulation signal. The indicator starts to move up, crosses over the smooth average of itself, the stock starts to move up, and at point 3 crosses the 0 line and the stock moves up again. So this shows us how to use volume to whether it's confirming or contradicting a trend. This information could be very valuable to you as an investor or trader. Next, we're going to go over our volume factor offense. So you got to know when to hold them, and you got to only know which when to hold them, but more importantly, which ones are you going to hold? And in volume analysis, we want to own the ones garnering the most capital flows. So let's go through the law of incremental returns. So let me give you this analogy here. So my daughter's in this travel soccer team, and there's a lot of requirements, and they usually have a game at least once a week, and then they have 3 practices. And I tell my daughter, if she goes to those 3 practices and gives it 100%, she's putting forth 100% effort. But they're also expected to do some training on their own on days they don't practice, 30 minutes a day. So if she does that 30 minutes a day, that's like putting in 110%. But there's some girls in the team that are, way better than others. And I said, if you want to get to that level and you're at 100% or 110% already, how much work do you need to put in? Well, she told me 10%. I said, no, actually, if you're at a 10%, you only need 9 more to get to 120. And once you're at 120, you only need 8% more to get to 30. And if you're at 130, you only need 7% more to get to 140. If you want to be at 150%, once you're at 140, you only put in 6% more. This is the law of incremental returns. And so when the markets are up, our game plan is we want to maximize those returns. We want to let our profits run. Okay, so this is the law of compounded returns or incremental returns. And what it tells us is when the markets are up, we want to allow our returns to compound, or we want to run with the bulls. So what powers the bull? What powers the bull is volume. And so I like to think of volume as a force. Volume is synonymous with force. And if I were to look at the definition of force in the dictionary, Webster's, it would look something like this. Force is a power made operative against support and resistance. In technical analysis 101, what is support? Support is an area where buyers reside. And what's resistance? Resistance is an area where the sellers reside. And moving on to technical analysis 200, what's an uptrend? An uptrend is a rising support line. And what's a downtrend? A downtrend is a falling resistance line. Moving on to technical analysis 400, volume is that force required to sustain those trends. So now let's look up force in the physics dictionary. And here's the definition. Force is a vector quantity that tends to produce an acceleration. And this definition confirms another major tenet of technical analysis, going back all the way back to the days of Charles Dow over a century ago. And that is volume leads price, meaning that significant changes in volume often precede major price movements. This statement also infers that volume plays a crucial role in momentum analysis, which is going to bring us to our volume factor offense. So we can better understand volume's role in momentum analysis through the laws of Newtonian physics. So let's look at the first law of motion. An object at rest remains at rest. An object in motion remains in motion at a constant speed and in a straight line unless acted upon by an unbalanced what? An unbalanced force. Yet, most all momentum analysis neglects force or volume. So if we were to rewrite this law of motion in market analysis terms, it might look like this. A price trend in motion tends to remain in motion at a constant speed and in a straight line unless acted on by unbalanced volume. My old friend Joe Granville might say unbalanced volume, but I think if he were to look at the first law of motion, he may have renamed that unbalanced volume. So what we can take from this definition is that volume is the cause and price is the effect. Yet if you're using momentum without volume, then you're solely focused on the effect and you're ignoring the cause. So volume is the unbalanced force causing price change. So let's look at some momentum illustrations that do not include the unbalanced force or volume in their calculations. Okay, so the first one here is, this is a price chart from the MetaStock software, and this is one of the indicators relative it's RSI. And so Newton's first law of motion suggests momentum and trends continue until volume changes. So there's two primary types of momentum. One is internal momentum, and that is looking at a stock's performance relative to its past self. So it's how a stock is doing relative to how it was doing. Okay. Then there's external momentum, which is a stock's momentum relative to some other benchmark, usually like the S&P 500. And the one we're looking at here is RSI, which is that internal relative strength, comparing a stock's momentum to what it was in the past. This is Wells Wilder RSI, one of the most popular relative strength indicators. So shown here is the result of S&P researchers Richard Tortello, who from 1992 to 2007 studied and backtested thousands of indicators and fundamental ratios in his book, Quantitative Strategies to Achieve Alpha. That's Quantitative Strategies to Achieve Alpha, and I'd recommend the book. Now, the vast majority of those indicators and ratios that were tested were fundamental. However, of the thousands of indicators Tortello tested, RSI had the strongest alpha. So this graph shows the results, again, from 92 to 2007, broken down by quintiles. And here the top quintile produced 6% alpha, whereas the bottom, the stocks with the weakest RSI, had negative 3% alpha. Alpha is how much did you outperform the benchmark. The benchmark in this case was the composite of securities. So you notice this asymmetry here, that the higher the RSI, generally the better returns. The lower the RSI, generally the weaker returns. Now, I did my own study on RSI, and my study was done from 2002 to 2023, and I used the Russell 3000 as my benchmark. And what I found out is during this period of time, 2002 to 2023, we had the actually the opposite results. This is a decile study, so the stocks with the highest RSI actually underperformed by about 2%, and the stocks with the highest, the lowest RSI actually outperformed by 7%. So again, these results show the exact opposite returns using RSI. And what that tells us is that momentum, particularly internal momentum, it can be flaky. Sometimes it works really well, and sometimes it works really well the opposite way. So the other type of momentum is external momentum, and relative strength compares a security's momentum to that of another security, usually the S&P, and that's what this chart is. So we have again the stock chart, and this is RS, or relative strength. How is this stock above this bar chart comparing to the S&P 500? And when the stock is outperforming, it's going up, and when the stock's underperforming, RS is going down. RS is generally the tool that comprises, when you see the momentum factor, they're usually using this relative strength. Okay, so here again we have the chart, same chart. Now we have RSI, and then on the bottom we have RS. So you can see this one, RSI is comparing it to itself and its past, and the RS is comparing the stock to the S&P 500. This relative strength is also, like RSI, available in your MetaStock software. So, as technicians and traders, investors, we should not be surprised that relative strength was also one of the very top producers of alpha in Tortillo's studies. It was, I think it was easily in the top 10 of thousands of indicators that he studied. So again, he studied from 92 to 2007, and the RS produced alpha of over 3%, whereas the stocks with the weakest RS had underperformed by 3%. So again, I did my own study, again from 2000 to 2023, to confirm relative strengths alpha. And the top decile RS components, they outperformed in my top decile study by 4. So this confirms Tortillo's results and many others that that high RS outperforms. The other thing I noticed here is that there's times when weak RS also performs, and that from 2002 to 2023 was one of those periods, and where also the weakest relative strength outperformed by 5% versus 4 over here at the top decile. So now let's look at Newton's second law of motion, or force, or volume. And volume analysis is understanding the amount of volume or force required to move a security or the object at a given distance or price change at a particular speed or momentum. So to look at this in analogy again, momentum is the acceleration of an object depends on the mass of the object and the amount of force applied. That is Newton's second law of motion, or momentum. The acceleration of an object depends on the mass of the object and the amount of force applied. In other words, the more volume or force being applied to price, the stronger the expectation should be of momentum. And so the analogy here is that price acceleration or momentum is powered through volume. F, or force, or being volume, is being placed on M, or mass, being trends. That's the equation we're trying to figure out. So what if we were to infuse now the volume data into our relative strength indicator, RSI? And when we do that, we create MFI, or the money flow index, which is an indicator that takes our RSI and volume weights it. And so here again, we have our chart of a stock. Here we have volume on the bottom. And here we have the money flow index, which basically takes RSI and weights it with volume. So here again, we have our chart again. This time we added RSI, so you can see how MFI often moves with RSI, but sometimes you see there's some contradictions. And those are the important points. So what happens with this when we infuse volume into the MFI, or into RSI, creating MFI? Well, we take our top decile results, which RSI lost 2%, and by infusing volume, we take an indicator that lost 2%, and we create one that gains 2%, just by infusing the volume data. Okay, this is the key one, okay? This is the strongest one. And yet this is the one that most everyone is missing out on. Okay, Newton's third law of motion, action and reaction. Every action has an equal and opposite reaction. The analogy here is the difference between price and volume exposes the asymmetry between price momentum and volume. And that delta, that asymmetry between the two is really the key in unlocking opportunities. So we're going to go through that next. Okay, one of the indicators that does that we've already talked about is the volume price confirmation indicator. So here we got the chart, here we got the volume, and what the VPCI does is it exposes the asymmetry between the price trend and the volume weighted price trend. And when that's up, like it's going up here, it's confirming this trend. When it's going down, it's contradicting it. And again, of course, when it's going up, it again confirms. You can see that this VPCI is way above zero, which is a strong indication. Okay, so the goal of VPCI is to verify trends. However, what I'm showing you in this study is that we took the top 10% of VPCI in the S&P 500, the stocks with the highest 10% of VPCI, so that would be in the S&P 500, that would be the top 50, and we buy those top 50, and then we, or excuse me, top 10%, so it'd be the top 50, and then we sell it when they fall out of the top 50%. And if we do that, we get this red line here, which produces approximately 3% in alpha over the 2 decades, 2000 to 2020. So check this out. This is one of my newly revealed indicators. I call it BMI, or the volume momentum indicator. And so here we're doing the same thing like we did with VPCI and trends, except as opposed to looking at price trends, we're going to utilize momentum. And how might we do that? What we're going to do here with the VMI, we're going to find the asymmetry between price momentum and volume weighted price momentum. What I've already showed you the two indicators, because our RSI here doesn't have any volume in the computation, but MFI down here does. And so what we're looking at here with VMI is this asymmetry, the delta, the difference between these two. That is the VMI. So what happens when we look at the top decile results of VMI? Okay, the asymmetry between momentum and volume weighted momentum. And when we invest in the top VMI stocks by decile, we improve on the benchmark's return of a little over 12% to nearly 20%. So big difference here by applying the asymmetry of volume momentum. So when MFI is greater than RSI, the volume price momentum is greater than the price momentum. So in volume analysis seeks to identify those issues with the greater volume price momentum than just price momentum alone. So a high VMI represents an opportune time to go long, whereas a low VMI suggests that it could be time to sell. So here what we're doing in this study, we're going to buy stocks when VMI exceeds 0.5. That means its MFI is greater than RSI anytime it's above 0.5. Okay, and then we're going to sell them, these same stocks, when VMI falls below 0.2. In essence, what we're doing in this strategy, we're proposing buying S&P 500 components with the most positive volume price momentum asymmetry, Other words, that when the price volume momentum is confirming, and then we're selling the long position when it clearly has switched to contradiction or a state below 0.2. So we tested the strategy from August of 2000 to May of 2022. The VMI returned 17% versus the benchmark only 6.4. So passively owning the S&P 500 index, it only made you 6.4 per, and it, I don't know if you can see it here, but it only produced a sharp ratio of 0.34. Whereas here we increased the sharp ratio to 0.93. This VMI indicator is available in my MetaStock toolkit, and is one that is very difficult to find anywhere else. That is available in the MetaStock toolkit. So let's go over this. To review, Newton's first law of motion: an object at rest remains at rest. An object in motion remains in motion at constant speed in a straight line unless acted upon by an unbalanced force. The analogy: volume is the unbalanced force causing price change. Newton's second law of motion. I'm just going to give you the analogy. Price acceleration is powered through volume. Newton's third law of motion. The difference between momentum and volume adjusted momentum exposes an asymmetry between the price momentum and the volume. So what we're going to do is we're going to take I showed you 3 winning strategies. We looked at relative strength, we looked at the VPCI, and we looked at volume factor, or we're looking at the asymmetry, or VMI. This last one's VMI, or volume factor momentum. And we're gonna combine these 3. We're actually going to take RS, but we're going to look at not only the top decile, we're also going to include the bottom decile, and we do that by making RS absolute relative strength. So we're going to look at absolute relative strength, VPCI, and VMI, and combine them into one indicator. And here's what it might look like. Here's a chart. Here is RS. Here is VPCI, and here is the VMI. And when we combine all 3 of those together and do the same back test, 2002 to February of 2023, and look at just the top decile results, the stocks that had the strongest of these 3 combined characteristics, we're buying the top 10%. We moved from 12%, a little over 12%, to 24.5% annualized returns, almost doubling the benchmark top decile results. Here are all the statistics of buying the top decile results and the other decile results as well, but I got the top decile highlighted here. And if you were to put $10,000 into the benchmark, it would have grown to $123,584. But if you were to put the 10,000 into this combination, it grew to over 1,053,000. Significant difference with our laws of incremental returns or compounding. Now, hopefully by now I've provided you with the compelling evidence that volume is not only a factor, but the factor that rules them all. But if not, let me leave you with just one last nugget. Okay, what I'm showing you here, when I look at highlighted here, is the Foma French model, which is the gold standard of factor investing. Okay, it's thought that in order for a quality, an aspect, an indicator to be a factor, it must have a p-value of 0.05. P-value is the null hypothesis. The probability is this chance. So 5% is thought to be the minimum standard, and many of the factors struggle to meet this 5% probability standard. But the best ones are closer to 1%. Okay, what I'm showing you here is Dr. Matthew Ludy's FAMA French model using a couple of my volume factors, capital weighted volume and the VPCI, and the results were published here in J. That's the Journal of Accounting and Business and Economics. And what it shows here that the p-value was not 0.05, not 0.01, but 0.0001. That's literally off the chart. It's in a class of its own, 100 times greater than the very best factors. So within your MetaStock add-on, I have you can purchase the volume my volume analysis toolkit, and here is I ran the analysis, or at least the screen last night, and I pulled up some stocks that hit new buys. So originally, this stock right here, KYMR, Chimera Therapy, initially signaled way back here in November, but we just got a fresh signal here just last night. So if it's red, that means that it's on a short. If it's green, we're buying. Underneath here is my trend thrust indicator. If you use MACD, you shouldn't be. You should be using the trend thrust indicator, which is like the MACD, except we're using volume analysis, volume ratios, and to improve upon that, and it significantly improves the accuracy and also leads the MACD. Next, we have the VPCI we talked about, the VMI, and then you also get my volume studies here, where you can see there's different colors, which represents different codes and that help you read the charts better. Okay, the next one that's signaled, okay, is MTG. That's signaled MTG. Notice that this one signaled back here, and then we got stopped out. By the way, I didn't mention that before. The green line is if you're short, that's a stop loss. And if you're long, the red dot represents a stop loss. So right here, I got stopped out. Then we're back in, and then we got another signal again just last night. Okay, so this is symbol NX. This one, of course, signaled back here in October, and then again signaled last week. Okay, this is gold, the gold ETF, GLD. Again, it signaled, this one just signaled late February, and again signaled at the end of the week. This is WLDN, Wyland Group. Okay, you can see the different colors here. It went long, we got long here, and we got another long signal here. You don't see the green arrow because it's already green. Okay, this is the same chart as before, but this is the weekly chart. Okay, this is FSTR, LB Foster. This one just signaled again last night. And I bring this up because this is the daily. So we got a signal on the weekly, but we also got a signal here. This is a fresh green arrow on the daily. And you can see here why the VPCI is just turning up. The TTI is just turning up, the VPCI is just turning up, and the VMI looks pretty high with all these green volume bars. So a couple things. So a couple of items here. I have a book out there. It's called Investing with Volume Analysis. It was 2013's Technical Analysis Book of the Year. That's Investing with Volume Analysis. My new book is going to be can be pre-ordered. You can just Google my name or the volume factor, and that is available for pre-order. Comes out July 2nd. And then I think that these have already been mentioned, but there's the 2 white papers that you can sign up for, volume analysis. And then you can also sign up for my weekly newsletter, Volume Analysis Weekly. So to kind of sum up, think about Yoda. And what did he say before engaging on an important mission? He said, "May the force be with you." Volume, my friends, is the force of the exchange market. If you take one thing out of the presentation, remember, volume is the force. And you, as an investor, you want to make sure you're on the right side of it. Any questions for me out there, Jeff?
Yes, sir. So early on, Chris wanted to know if you're using RSI 14.
Can you say that again?
Early on, Chris wanted to know if the RSI you were using was a 14-period RSI.
Okay, so in the charts that I showed, it is. In the studies I referenced, it wasn't. It was a 26 weekly RSI is what I used in the studies. Why 26 weeks? That represents 2 quarters or half a year. And anytime I do testing, I always use calendar based because otherwise people will try to optimize and try to change the numbers and make the numbers look good. I always use the calendar because you can't fudge the calendar.
Cool. Let's see. Yoka wants to know: are you using survivorship basis?
Yeah, I am using it. The studies that I showed show survivorship bias. Yes, they do.
Okay. Robert asked a good question. He wants to know: as a trading tool, would this be used for stock selection, trend assessment?
Absolutely. Yeah, it's a fantastic tool.
How about trend assessment and timing?
Yeah. All these tools. That's what they're geared for, is to help you validate or contradict the trend and also lead it. That's why volume is so powerful. It not only leads, but it also confirms price action.
All right, cool. And then a question from YouTube: what were the tickers for your ETFs again?
MV. Okay, so think about it this way. Volume is the monarch. So M for monarch, volume factor, VF. One is D for dividend, and the other one is MVFG for global growth. The dividend is designed for more of the income method of withdrawal, and the G or the global is more designed for the endowment method of withdrawal for those people that are financial planners.
Carlos wants to know: isn't volume distorted nowadays on purpose, like the reporting with volume?
So volume is lit, meaning that every trade that happens has to show volume, and it has to show it in a very quick period of time. So the volume data out there on individual securities is good, reliable. What traders will often try to do, or institutions will try to do, is they'll try to, if they gotta accumulate a big position and they don't want to move the stock, they will try to use tactics, let's say maybe buying on the bid, to keep, from keeping moving the price, but they can't hide their volume. That's the great thing about it. You can't hide your volume. You can mitigate how much you may move the stock by your operations, but you can't hide the volume. So volume is always lit. That said, if you're looking at index data, there's real serious problems with volume in index data. And I mentioned my 2 books. I talk about using volume and indexes and how you can repair that index data to relate to price, which if you're not using those methods, then you get some really serious problems with your data.
Very good. Thank you very much, Buff. That's the end of the questions. The symbols for that are MVFD and MVFG, Monarch Value Factor Dividend and Monarch Value Factor Growth. Buff, I want to say thank you for coming in. You can also get the book on the pre-order. I did type the link into the description of the chat, so go ahead and click on that if you'd like. Buff, thanks for joining us today. That was really, really good. I appreciate your time.
All right, thank you.
All right, very cool. Let me do this. Okay, we'll just make a couple changes here. Okay. And as Buff said, he showed it, there is an add-on that's available. We've had it for a number of years that use all of his volume studies. We just updated it this year. Mario, thank you for coming. I'll make sure to pass that on to Buff as well. It includes 2 expert advisors, 2 explorations. So yes, you can use it for scanning, whoever was asking that. You can test the trading ideas, see how well they work. You can test them to see what stocks they work on, et cetera, et cetera, et cetera. 24 different indicators as part of it. So all the ones that he covers in his book, here is a list of them. I'm certainly not going to read all of this, but he's got his stop losses, his spread, his ease of movement, his volume, his VFI, the VFI simplified. It's got some twigs in there, all of the indicators that he actually uses to do that. So in any case, the systems are volume trend momentum, volume trend thrust. The lease for this is normally a subscription product. It's $150 per month. What we're doing here as part of a special is if you want to get it, we will give you the 2nd and 3rd month for free. So obviously Buff's very, very good at what he does. It's got ETFs that he's running now and all that kind of stuff. If you pay for a month, we'll give you the 2nd and 3rd month for free. It does require MetaStock to run $150. That's basically about $50 a month to use it for 3 months. If you don't like it, if you're not happy with it, if you want to cancel it, you can do that. And you can go to, but you can sign up at 800-882-3040 or metastock.com/saleschat. This is an add-on for MetaStock, so it does use MetaStock to run. If you need a copy of MetaStock, we will give you a trial or an extended subscription to that as well. And as we go through today, a lot of the people that we'll have speaking are going to be talking about methodologies that they use for trading. And most of them are built into MetaStock. So we are going to put together a bit of a package that's called the Summit Traders Pack. It's going to include those Buff Dormeier's analysis toolkit indicators. It's also going to include Vince Vora's Victory Method 2.0, the Power Bundle with Super Signals and Trend Radar, as well as Serge Berger's Vertical X Pro, some training that's available from Oscar Carboni, 3 months of Learn MetaStock, and then Unleash Your Power. So normally the total price for this would be $6,528. If you do it all as a bundle today, it'll be $2,436. And we're going to talk about some really, really good methodologies, some really very popular methodologies that have been very well loved. So great value. You can do that at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can go to metastock.com/saleschat. Just looking over here, we did have a question a little bit earlier about the recordings. The recordings will be available. They'll be mailed to you at the end of the day today. They're also up on youtube.com/metastock. And if you're watching us on youtube.com right now, on our MetaStock channel, if you haven't liked the video, like it. It helps a great deal. Say hi, that helps. Subscribe to the channel if you're enjoying what you're learning, if it's helpful for you. like and subscribe. We appreciate it. It helps a great deal. So there you go. Before we go to the next speaker, I want to say thank you to Stocks and Commodities for being our sponsor today. They've sponsored every single online traders summit that we've done. We've been doing them now 14 years. So there you go. No, Daniel, that's not normal. Everybody can hear us. If you hit start broadcast, it'll start it for you, but the broadcast is going. So that's not normal, but there's been a little bit of weirdness with GoToWebinar. So anyway, if you're watching us on YouTube and you want to get a free issue, you can go to metastock.com/traders-summit. It's one of the bonuses for today. Great magazine, great partner of ours. Love it. So with that being said, and then of course we're MetaStock. If you just want to do a trial subscription to MetaStock, like I said, 31 years, it's been rated the best software in its price category by the readers of Stocks and Commodities. We're going to talk a lot about scanning, testing ideas today, forecasting, and all of the tools that have helped MetaStock be rated the #1 software program in its price category. So there's a reason it's been rated #1 31 years in a row. If you want to do an extended offer or an extended trial of MetaStock, you can give us a call, 800-882-3040. You can go to metastock.com/sales chat, and you can also click on this URL code or this QR code. So in any case, our next presenter is also very smart, very, very good trader. I love the design elements that he brings into not only his trading ideas, but how he kind of makes everything understandable and how he actually kind of makes everything clear. Very, very good designer, somebody we like a great deal. I like you a lot, Daniel. Although I can't hear you.
Hey guys. Hey Jeffrey.
There you go.
Hey everyone. How's it going?
Good. How are you doing?
Pretty good. Yeah, it's another week. Monday
Yes.
morning. Yeah, it's gonna be an exciting one.
I made you the presenter, so
Right.
I'll make sure we can see your screen before you go on.
All right, let's just do this. Give me 1 second.
I can see MetaStock.
Oh, you do? Already?
Yeah. Already. Well, I see a scan. That's my favorite thing in MetaStock is scanning.
Yeah, that is true. So hang on, let me just get the proper screen. You should see my slides now. Is that the
Yep.
case?
I
Perfect.
can see it.
All right.
All right.
Okay, guys. Perfect.
It's your turn.
Let's get started then. So, well, welcome everyone also from my side to this awesome MetaStock event at the end of March 25th. My name is Daniel, and I am with tradingindicators.com. And I'm greeting you guys from beautiful Montreal, which is the headquarters of Trading Indicators. We've been based out of Montreal ever since we existed. And, before I get really into today's talk, I'd like to perhaps give you a bit of background information of what makes us perhaps a bit different from the typical educator that you would see on these conferences. So first of all, before I do that, thanks Jeffrey, thanks MetaStock for inviting us to this event. It's always awesome to be here. It's always awesome to showcase how well our tools are working with MetaStock. And Jeffrey mentioned it before, especially with the MetaStock scanner, because it makes it so easy to find interesting trade setups. What we have done is we are all our team, we're trained software engineers, and like Homer, my business partner, she has a PhD in user experience design. And we have Niklas, who's a software engineer who I recruited straight from the university. And I myself also have a PhD in computer science. And for the longest time in my career path was, I want to become a professor in software engineering. And, I went through all the levels, but did my master's, my PhD, my postdoc. But you know what? At the same time, I was always fascinated as far by the world of trading. And so I trade on the side. And, as you start off, you tend to make all kinds of trading mistakes. So when I did the same thing, I overtraded, I took too much risk, I revenge traded, I traded when market conditions were not right. And after donating quite a bit of money to the markets, I realized, oh man, I need help. Trading is not as straightforward as I thought it was. So for me, needing help as a software engineer, it meant I need better tools which will help me make better trading decisions. And this is what this talk is all about. I will showcase to you one of our latest innovations that work great with MetaStock, which will help you to pinpoint symbols, to find symbols with interesting trade setups, where the odds are in your favor and where everything comes together. And this is what this title of this talk is all about: Confluence trading with AI, with artificial intelligence. So stay tuned for that. All right, but before I get started, let me talk about this here. Just hypothetically, let's imagine if it were possible to know the odds of having a successful trade before actually taking the trade. How would you handle this? How would you trade? Well, I think the answer to this is quite straightforward. If it were possible, for example, to say that, hey, the success rate or the chance of winning my next trade is 73% and 27% would be the losing rate. How would you trade? Well, I guess you would only take the trade, enter into the trade, if the odds at the time of the trade are in your favor. And if they are not, you would stay on the sidelines. I think this just makes sense to everyone. And you know what? We have developed a technology which aims at predicting these odds for you. So you know before entering into a trade whether the odds are in your favor. So if you're interested in that, please stay towards the end of this presentation. We're going to show you all about how this works and how you can get hold of this technology. All right. Now, as I mentioned before, I have been on these MetaStock events, which I love, quite a few times. And the last appearance was in February, at the end of February, where MetaStock had its big February event. And in that talk, I called out a trade idea, which was to go long Arista Networks, a stock in the S&P 500s. And it was not going long straight at market. It was via limit entry, where we wanted price to pull back a bit first. Entry was at 270, stop was at 251, target at 295. So I called out this trade because we had a beautiful entry signal here, and also some of our other, the odds were in our favor as well. All right, so let's see how this trade worked out. So let me quickly switch over to MetaStock. And here I've pulled up the very same chart, and you can still see my old annotations from back then on the chart, where I drew this beautiful trend channel here, so I could see that the stock really has been in an uptrend for quite some time. Here we have the entry signal from February 29th. Yeah, and this was our entry price, our limit entry. We're around here. So we wanted the price to pull back, which it did very nicely. So it was to be predicted, because I do not like at all to chase a trend. This is something I trained myself to do or to avoid very early on. And I would never enter into a trend trade, for example, all the way up here, where we just at the upper end of the trend channel. Because what typically happens in these cases is that you're going to see a pullback towards the lower end. And I want to avoid these pullbacks. So I would never do this. So for all my trade entries, I basically enter by limit order, where we first wait for a pullback, which has the great advantage that our entry price is going to improve. But perhaps most importantly, our reward risk ratio will also improve, because now we can put our target towards the upper end of the trend channel at the time, and our stop loss would need to be somewhere below this trend channel. And by waiting for a pullback, you're going to increase or improve your reward risk ratio. In any case, so we had this beautiful entry signal here. The odds, which I'm going to talk about just a bit later, at the time of the trade were in our favor. I think they were around 80%. So I called out this trade. The pullback happened. We entered at 270 at this level here, and then we hit our target. This was the green line, which I called out back then, just a couple of days ago, just last week. We hit our target. Since then, price has even moved higher. Now, one thing, and then I'm going to go back to my presentation. You probably may ask yourself the question, well, does it still make sense to enter into this trade right now? Because we can see it's been an uptrend, and the uptrend seems to continue. But if you ask me, I would not do it, because once again, if I extend this a little bit here, we are at the upper end of our trend channel. And to me, this is chasing the trend. I don't like that. I would wait once again for a pullback towards the lower end of the trend channel. As long as you're making higher lows, you can see this very beautifully here. So you had a low here, then we made a higher low here, another higher low here. This trend is completely intact and healthy. So chances are there will be a pullback once again towards the lower level, and this then would be a great time to re-enter into the trade, ideally if it's accompanied by another entry signal of our indicators. All right, so this was the trade from February, from the end of February, but I also have something prepared for you for today. So this is going to be my trade, my personal trade for today. All right, so this is again a long trade for a stock which is in a healthy uptrend. You can see it here, which is Copart, ticker symbol CPRT. It is in the S&P 500s in the industrial sector. And once again, we can see a little bit here that we are somewhat near the upper end of the trend channel, but we do have an entry signal on the last bar, on Friday's bar. So I ran the scan on Friday. And I would recommend to enter long this stock when we see a pullback towards 55. So I drew this little circle here. This is the 55 area. Our target would be towards the upper end of the trend channel, and our stop loss around 48. A reward risk ratio of 1-to-1 in this case. And you know what? It took me about perhaps 15 minutes to find this trade, which I find very interesting. And in this presentation, I will show you how I picked this trade and why. Well, and even I'm also going to show you how I picked the previous trade, because as you will see, it actually becomes very straightforward when you use MetaStock. All right, so, but enough built up. Let me talk a little bit about our team. So we are tradingindicators.com, and this is our online store where all our trading tools are hosted and made available to our clients. And over the years, we've been out there for more than 10 years now. We have built way over 500 different trading indicators, fully automated strategies, trading dashboards, trading scanners. We cater to clients all over the world. A lot of clients in the US, of course. We are from Canada, so we have Canadian clients. We have clients in Europe. Me being German, of course, we cater to the German market as well, to Asia, South America, Australia, and so forth. We cater to retail traders, trading educators, institutions, and we all have one common objective, which is to become better traders through the use of sophisticated tools. And one such tool I'm going to show you today. All right, now, but before we really get started, let me also quickly remind you that trading does contain substantial risk. If you trade, make sure to only use risk capital, which is capital that should you lose it, it will not or should not affect your lifestyle. When it comes to backtest performance or hypothetical performance, or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance. All right, so now that the lawyers are happy, let's get into it. And this was our original question. Is it possible? Is it somehow possible to predict the odds of your next trade before entering it? Can this be done? Well, the easy answer is yes, it definitely can be done. We have developed a set of indicators which actually print out directly on the price chart, or in case of MetaStock, in the expert commentary, the suggested odds of winning your next long trade or winning your next short trade. So this can be done. We can print out these odds. We can calculate something. But the real question is, what are these odds? What are these percentages actually telling me? Remember, I just read the disclaimer where I was reading out, hey, anything based on historical data, and these odds are calculated based on historical data, is not necessarily indicative of future performance. So is there any value in seeing these percentages moving forward, moving into the future, moving into our next trade? So we have asked ourselves the very same question. And to get to the bottom of this, we have conducted a very comprehensive test, an experiment, where we developed a swing trading system, which would trade all the big US stocks, so 85 big US stocks like Tesla, Apple, Microsoft, IBM, and so forth. And we let this run for about 1 year, 9 to 10 months. Over the course of this test, this experiment, 6,827 entry signals, both long and short, were generated. Each trade lasted approximately 1 week. So it's really a swing trading system. So we had the system in place, and then we looked at the performance. And the first performance we looked at was the performance, what if every single signal would result in a trade? So 6,827 entry signals would result in 6,827 trades. And this was the performance that we've got. Oof, rough, not pretty. Nobody in his right mind would trade such a system because it's obviously a losing system. You can see it here. We did not make any money of that system. So that was not pretty. But then we did something. We added a filter to our signals where we would only take the signals where at the time of the signal, the odds were in our favor. Remember, this is what this talk is all about. Is it possible to calculate these odds? And are these odds actually telling me something? Are they useful moving forward? So we applied this filter where we would only take a signal when at the time of the signal, the odds were in our favor. And this was the resulting performance. So we filtered out 2/3 of all signals because the odds were not in our favor at the time of the signal. And this left us with only 2,599 sweet spot trades. And look at the difference in performance. All of a sudden, we had a winning trading system where equity was growing up over time instead of losing it. And this gave us so much motivation and confidence that there is value in our odds predicting technology, that we designed an entire suite of indicators based on this concept. And in this presentation, I'm going to showcase to you how these indicators work and what they do. All right. Now, every of these indicators, there are 3 of them, is equipped with our odds predicting technology. All right. So let's see what these indicators are all about. We call them the Power Bundle 360. We chose the name for a reason, the 360, because each indicator in that bundle serves a particular purpose. We have one indicator for trend entries, one for finding reverses and pullbacks, and one for finding breakouts in a sideways market. So basically, every trading style is covered. This is where the name comes from, the 360 degrees, or full round trip. And of course, each of these indicators has our AI-assisted trading technology, which will attempt to predict the odds of your next trade. All right, so before we look at the charts, let me give you a quick overview of what each of these indicators does. The first one is our trend trading indicator called 1, 2, 3 strike. It is designed to find strong trend entries. And in our book, a strong trend entry is an entry where we have 3 things coming together. We need to have directionality, so price needs to be moving up or down for quite some time. We need to have an increase in volume and an increase in volatility. And if all 3 factors are coming together, an entry signal is generated because there's evidence that the trend is going to continue with a certain likelihood in its direction. Okay, so this was our trend indicator. Our counter trend indicator, or an indicator for spotting reverses and pullbacks, is called divergence cloud. So you probably have heard of the concept of divergence. It's pretty common out there. There are many different forms of divergence. And really what a divergence is a discrepancy, a disagreement between a price move and an underlying indicator. For example, you may see that price has been going up for quite some time, but perhaps a MACD reading is going down at the same time. So they disagree. Even though they should be aligned, they don't. And this is often a telltale sign that something's up. Something may be happening. And this could be that the trend is coming to an end and may reverse. This is what the concept of divergence is all about. Now, what we have done, we have developed our very own flavor of divergence, which we call volatility divergence. We've back-tested and tested this over and over again. And it seemed to us that this is the most telling form of divergence. So we have built an indicator around this called Divergence Cloud, which will show you entry signals when exactly this form of divergence is found. I'm going to look at the chart in just a bit. And the last indicator is called Volatility Crusher, an indicator designed to detect strong breakouts. And in our book, a strong breakout is a breakout where price will continue in the breakout direction for quite some time after the breakout happened. And you can imagine how you as a trader can take advantage of that, because you would, in quotes, simply enter in the breakout direction in anticipation the price will continue in its move. All right, so enough theory. Let's look at some charts. So I'm going to switch over to my MetaStock charts. And the first one we're going to look at is Pfizer. So let me find Pfizer right here. And this is the daily chart of Pfizer. And of course, Pfizer has been in the news a few years back because of the whole COVID crisis and the vaccines developed by Pfizer. I made beautiful new highs, but since then, the stock has been under a lot of pressure. So we have this long-lasting downtrend now in Pfizer. Let's have a look at the indicator applied to this chart, which in this case happens to be our trend indicator, 1, 2, 3 strike. So it's applied to the chart, and what the indicator does, it will print these arrows onto the chart. So big green arrows like this one here for long entries, and these big red arrows for short entries. So you can see it here with a long entry and here with a short entry. Now, you probably would agree with me that entering into a trade is important for sure, but you know what? What is just as important as entering into a trade? It is to manage that trade and eventually get out of the trade. There's one anecdote I like to tell, a little detour. There's this anecdote that two traders coming to it. Let's say 2 day traders. They're teaming up in the morning and they attempt to trade, let's say, the S&P 500 E-minis. All right, so trader Tom, let's say, decides, okay, at 9:45, I'm gonna go long the S&Ps. And trader Mike, let's say, says, okay, well, I'm gonna go short at the same time. So one goes short, one goes long. And at the end of the day, both are profitable. And you may say, how is this possible? Well, the answer is it's trade management and timing your exit. Because it is possible to have completely opposite entries and still make the trade work out for you by finding the right time to exit and manage the trade. All right, so having this said, entering into a trade is important, but exiting is just as important. This is why we have equipped all of our indicators also with exit suggestions. You can see these here. So here with our long entry, then one suggested exit is here. We call this long partial exit LPE. Here another one, here another one, and then we will close out the trade when a signal in the opposite direction occurs. The number of exit suggestions can be configured in the parameters of the indicator. So that's a user setting. And the same for the short one here. Here we had a short entry signal, one partial exit, another one here, and then we closed out the trade when a long entry signal in the opposite direction occurred. All right. Okay, so far so good. We have these entries and exit signals, but you may ask, hey, where is this odds predicting technology? Where can I find it? Good question. Well, in MetaStock, you can find it in the expert commentary. So right click on the chart, you're going to go to expert advisor and then to commentary. You can see it here. All right, so this will now open up the commentary. There we go. Okay, let me just drag this up a little bit if I can find the right handle for it. Maybe not. And here, down here, you can see, okay, for this stock, Pfizer, on the daily chart, my odds of going long, of winning my next long trade is 65%, and winning my next short trade is 63%. And this is as of March 25th. And these odds are constantly updating. So tomorrow, the odds may be a bit different. It's not going to be radically changing because there's not so much new price information coming in on the daily chart, but they will update. And if you're on a smaller time frame, we're going to look at some smaller time frames later on. These odds will update much more frequently because more bars, more price data is coming in, and the odds are recalculated. All right, so we can see that the odds are, fairly okay, 65%, 63% for the short side, a bit better for the long side. And this is over a long period of time. All right. So what does this tell me as a trader? Well, it basically tells me that the win rate, the historical win rate of my signals are around, say, 65% or 63% in the short side. All right, so we know this, but let me now show you where the real power comes in. So just like every other indicator, also our indicators, they do come with some settings that you can change and tweak. Okay, so let me open up these settings. It's not really important what exactly these settings do in particular. For this, we have documentation, but I want to show you how you can use the odds to determine whether a change in settings was actually beneficial or perhaps counterproductive. So we're going to go to the settings of this indicator, click edit, and let's change, for example, the setting of, let's see the volatility period here from 7 to 21. So I'll put this in 21. It doesn't really matter what this parameter does. For this, again, we have documentation and videos, but let's change it. I'm gonna say okay and close this and refresh my chart. And let's observe what will happen to my percentages here. So I'm gonna say refresh, all right. It's recalculating. It takes a second or two to do that. And once recalculated, we can now see, oh man, they have improved. Look at them. They're now 72 and 76%. Wow. Okay. We have improved the performance of the indicator. And we can see this not just by looking at the entry signals on the chart, because they are different now. They have changed and they're historically speaking, they are more performant. But we can also see this in hard numbers down here. All right, improved just by increasing that parameter. Let's do it one more time. So now we are at 72 and 76. Let's perhaps increase the settings or this value a bit further. We increase it from 7 to 21. Maybe let's go to 32 and see what happens. I'll close it again. I'm going to refresh this chart, Pfizer on the daily, and let's see what happens once this is recalculated. Oh, now we're at 50 and 80. Huh. Okay, it changed. Short efficiency really went up a lot. And you may be happy with that because Pfizer has been in a long-term downtrend for quite a while. So perhaps you are inclined to go short Pfizer. Or you have a short bias for Pfizer. You would only consider this direction. So as you can see here, you get hard evidence as soon as you change the parameter. What was the effect of that? But you know what? You may now say, oh man, this seems a bit tedious. I have to always go into the settings, change the parameter, click refresh, see what the odds are. So this can take quite some time until I find some good parameters. Isn't there a better way? Well, there is. And because we run into the exact same issue. Man, this was too tedious to do it manually. And as traders, you don't want to waste your mental energy of changing settings and parameters. This is not good energy spent. You want to focus your energy on pulling the final trigger on when to enter or when to exit from a trade. That's what you should be focusing on, not on how to adjust these settings over and over again, because they would have to be readjusted whenever you change time frame or whenever you change symbols, because they might be different for each symbol. Wouldn't it be great if it was possible to have the indicator find the best settings for you? Well, it is great, and we have developed exactly that. In the latest generation of all our indicators, we have built in something what we call an auto optimization feature, which will find the best settings automatically for you. So you don't have to do all this tedious work. So let me show you how this works. And this is available in the latest generation of these indicators. So I'm going to apply now the latest generation. I'm going to say attach. I'm going to go to our indicators as soon as this opens up. It just takes a little time sometimes. There we go. So all our indicators are grouped under trading indicators. So I'm going to apply our latest generation of 1-2-3 strike, which is our trend indicator, which is called 1-2-3 strike AO. And AO stands for auto optimization. All right, so I'm going to click OK. It will now be applied to this very same chart, still Pfizer on the daily time frame. And let's see what happens with the signals on the chart and with our odds now that we're using the optimized settings. So I'm going to go down here, and we can see now with the optimization, we now get an efficiency rating or win rates, a prediction of 80% for the long side and 85% for the short side. So it's even further improved. And this was possible because the indicator will find the best settings for us. And you can actually see that what these settings are right here. So it's written out directly in the expert commentary. And we have all kinds of additional things built in. I can't go into all these, but for example, you could tell the optimizer, hey, optimize only for the short direction, because personally I have a short bias on Pfizer. I'm not interested in going long Pfizer at this point, because well, you can see it here. It's been going down for quite some time. I really have a short bias. So optimize only for one direction or the other. That's possible. You can also tell, hey, how exhaustive the optimization should be, and so forth. So there are lots of different things built in, but this is all documented in our videos and support material. For now, it's more the concept that matters. Okay, speaking about concepts, there may be a question out there. I didn't see it in the Q&A so far, but you may ask, does this only work for stocks on the daily time frame, or does it also work on other asset classes, or perhaps intraday timeframes? And the answer is yes to both. These indicators can be used on any asset class, be it a stock, a futures contract, FX, crypto. It doesn't matter. It will work. It will also work on every time frame. We're going to have a 30-minute or an intraday time frame example later on in this presentation. So the answer is yes to both.
Hey, Daniel.
Okay. Yes.
There was a question that came in from YouTube that I wanted to pass on. Is that all right?
Yes,
all right.
Go ahead.
He's like, William wanted to know, are you talking about forward testing?
No, there's no forward testing involved. This is based on backtest data.
Okay, thank you. That's it.
Alrighty. Okay, so let's change it up. Let's go to a different symbol, GE. Just to change it up a bit. We're going to stay on the daily time frame, but GE is a super interesting stock. Not sure if you're aware of what's going on with that symbol, but it has been on a tear as of late. So if I zoom out a little bit, look at this beautiful stock, which has been in a very strong uptrend. You can see it here, massive uptrend of GE, now all the way up almost to 180. We did have a beautiful long entry signal here around 130, let's say, which has given us 3 exits already. One around this area here, 145, one at 155, and this one at 165. And we still have one more exit, one more leg to go for this long entry. So it's a beautiful stock. The indicator works great on GE. But one thing I wanted to point out to you is if I go to the odds down here, look at this. Our long efficiency is 87%. So the predicted win rate of winning your next long trade is 87. And for short trades, it's 69, which is not bad, but not as good as the long efficiency. And you know what you can do as a trader is you can focus, if you have such a discrepancy, only on the long signals and ignore the short ones altogether. Why would you, enter into a short trade if the odds are not as good as they should be? This is exactly another use case of having these statistics calculated for you, because they will show you, hey, this stock, obviously because it's such a strong bullish stock, has been working better in the long direction at an 87% success rate. So when the next signal comes around, a long signal, you could be very confident, hey, there's a very high probability that this signal is going to result in a successful trade. Should a short signal come around, you may stay on the sideline. Hey, I don't want to go short right now the stock. First of all, it's very bullish. And secondly, the odds are not as good. And sometimes, or actually oftentimes, staying on the sidelines is the best trade advice that you can get. All right, so let me move on because I want to show you 2 more indicators. I'm going to speed up a little bit. The next one is UPS. So let me open up UPS here. Yet another stock on the daily chart. All right. So in this case, I have applied our divergence cloud indicator to this chart. And the first thing you see here is that some of this indicator, some bars are colored, this little greenish color here, and the other ones are a bit more pink. And it overlaps a little bit with the natural bar color of MetaStock, but you can see these different colors here every once in a while. And these are indications that, at certain moments, this stock may have had bearish divergence or sometimes bullish divergence. And again, a divergence is always a telltale sign that, hey, perhaps a trend a predominant trend may come to an end and reverse in the opposite direction. You can see it a little bit here. So we had this, this big down move here, and then early on, look at this one here, we had a long entry signal generated based on divergence, telling us, hey, this bearish trend may come to an end and perhaps reverse in the long side. So then we had this upwards move, and then later on we had this short entry signal indicating, hey, this little uptrend is coming to an end and reverse. And you can see this quite often here. It has worked out quite nicely, where we get these really early entry signals when a trend reversal is imminent. And this is exactly what this indicator, this divergence cloud indicator, is designed to do, to find you these early entries. Of course, it's not going to work out every time. It's quite complicated to find these reversal points. But the beauty about this is, you can typically, for a counter trend entry, you can put your stop loss quite nearby. And if you're wrong, if it doesn't work out, then you don't lose too much. But if you are right, you may get into this new trend at a very beneficial price. So that's one of the advantages of counter trend trading. And of course, also this indicator is equipped with our odds prediction technology. You can see it down here. 70% to the long side and 73% to the short side in this case, which is pretty decent. All right. Now, let me give you one more example of our divergence indicator. I'm going to change it up completely right now. I'm going to go to Bitcoin. So Bitcoin has been in the news quite a bit lately. It's been completely recovered from this huge drawdown that we had a couple of years back and made all-time highs. All right, so this is Bitcoin on the 30-minute time frame, so completely different use case. But once again, we have applied our divergence cloud indicator to it. And as you can see here, the entry signals, they work really nicely as well on certain cryptos like Bitcoin. We got your short entries here, take little dips in the market. If you long entry signals, of course, you have your exits and so forth. And of course, you also have, once again, your odds prediction technology. All right. So this is all possible. And just lately, when was this? I think this was on, it was yesterday. So Bitcoin cryptos trade 24/7 every single day. So yesterday we did have a beautiful long entry signal, Bitcoin. And look at this beautiful follow through today. Of course, we had this big up dip. Now Bitcoin approaching once again the 70,000 level, perhaps on its way to make another all-time high once again. And if you would have entered into this trade here, you would have been quite lucky to take advantage of this big move. All right, so this was Bitcoin, and but I have one more indicator, and we need to speed it up a little bit because I tend to talk too much. Let's change it up one more time to Accenture, ACN. This is the daily chart once again, and here I have applied our last indicator for the time being, which is called Volatility Crusher. And this is our breakout indicator. This one works a bit different from the other two indicators. It will also give you these entry signals here, both in the long and short direction. Actually, just by chance, we do have a nice short entry here, Accenture. So let's see what's happening. This actually happened just today. So we have long and short entries, but remember, this is our breakout indicator. And here the idea is that, it will find areas where price is about to break out or already has broken out. And the idea is that once such a breakout is detected, price will continue in the direction of the breakout for a bit longer. Not like a huge trend trade oftentimes, but for a bit longer. And this was taken into account when it comes to calculating our targets for this indicator. You can see here for this long entry, the target is hit quite soon after. And actually, typically we have two targets. It's just because this bar was so big, it hit both targets at once. So here, one long entry hit both targets in this bar. Here we had another long entry where we had the first target at this point here, and the second one shortly after. Here we had a long entry where we hit target one, but then got stopped out when this bar happened here. All right, and right now we do have a beautiful short entry. And if you were inclined to perhaps follow this signal into a short trade of Accenture, what would you do? Well, you would, of course, do some basic technical analysis. I'm going to cover this in just a bit. This is a bit of a bullish stock, so maybe you want to be careful with a short entry. But you would also definitely consider your odds. And look at this. Statistically speaking, over our look back period, every single short signal has been successful. So this is something that's very rare. It's of course doesn't happen all the time, but here every single short signal has been successful. And you may wonder, okay, what are these two different values? We have 2 times short efficiency. Well, we calculate for 2 look-back periods. One is for the what we call the optimization period, which I think is set to 1,000 bars, and the other one is for the entire amount of the bars on the chart. And oftentimes, if they are the same or very similar, this is also some kind of telltale sign that you are not curve fitting the indicator by doing the auto optimization. Something really interesting that I only saw this today. This could be, an interesting idea to go short Accenture, and for a quick short scalp with a target perhaps nearby. All right, so this is Accenture, and let me quickly go back to my slides because I do need to speed up a little bit. To recap, we have seen that each of the indicators in the Power Bundle 360, they come with their own entry and exit signals. They run everywhere on every time frame, on every asset class. They can be used by day traders, by investors, by swing traders alike. They all come with our real-time win rate predictions or statistics. So they all have them built in, which will help you to make truly insightful decisions. And they also come with our auto optimization technology, which will find the best parameters for you, so you don't have to do it manually, which saves you a ton of time. But there's one more thing I need to show you. One last piece. And this piece is called Confluence. We have developed a 4th indicator. We call this super signal based on the concept of confluence. So confluence may sound complicated and fancy, but it's really not. It's really just a fancy word where when the good stars are aligning, or when it comes to trading, when multiple indicators are lining up and are forecasting the same price move. That's really what it's all about. Here, a quick example, unrelated to the power bundle. But let's see what we have here on this chart. We have a descending trend line. So this is a downtrend. The trend is your friend typically. So once something is trending, chances are that it's going to continue to trend instead of reversing. So downtrend for this trend line here. We are also approaching the SMA 200 here, which oftentimes acts as a natural level of resistance to the upside. And we just had, this big down move, and price has been retracing a bit, and it's now retracing towards the 61.8 FIB level, which is, a level which is often reached by retracements, and we're overbought here on the stochastics. So all of these are telltale signs that, hey, we are bearish. This is a bearish move. And this is exactly what Confluence is all about. Multiple different indications are forecasting the same price move. In this case, the same bearish price move. All right, so we have built a 4th indicator based on this concept, which looks for confluence between our power bundle indicators, the 3 indicators which I just showed you. So how does this work? Well, depending on the degree of alignment, the super signals indicator will either give you a bronze, silver, gold, or platinum signal. Bronze signals happen quite often. Platinum ones are the rarest, which almost never happen. And they all require different degrees of alignment, which you can see here. But once again, we have documentation for that. So let me show you how this works. So quickly back to the chart. All right, so I'm going to open up Iron Mountain. Once again on the daily time frame. And once this opens up, you can see that our super signals indicator is applied to the chart. And let's just see what we can see here. So for example, here, we can see that we just recently, just a couple of weeks back, we had 2 nice silver long signals with a beautiful follow through. We can see that we have a whole bunch of bronze signals along the way, which I mentioned it before. These are the most frequent ones. They happen quite often. And if I just zoom out a little bit, see if you can see something else here. A bit more. This is the one I wanted to see. Look at these. These are very rare. These are gold signals. Gold signals happen if at least 2 of our indicators are having an entry signal on the very same price bar, which is quite rare because 2 indicators having a signal on the very same bar doesn't happen very often. But if it happens, just like here for the long direction or here for the short direction, you may see a very nice follow through, because then there's really strong evidence, hey, this is something special in the market. And because it is not common that two indicators, which are based on completely different calculations and principles, are having an entry signal on the very same bar. So this is what these super signals are all about, which is the fourth indicator that we have developed. All right, so let me go back real quick. So you've already seen that we do have bronze, silver, gold, and platinum signals, but we have also added a feature which allows you as the trader to create your own super signal based on your own conditions. You can mix and match conditions. For example, you can say, I want 1, 2, 3 strike the trend indicator to be long, and perhaps volatility crusher to be long, a long entry signal on the same bar, and so forth. So you can really define your own signals that way with mix and matching your conditions. All right, so this is also built in, but now in order to make a full round trip of today's presentation, because I mentioned to you that it took me about 15 minutes early on today before this presentation to find my trade of today. So how did I do this? Well, I used the MetaStock scanner, which is a great tool to figure out which symbols are currently having entry signals. And this is exactly what I've done. All right, but we pushed it a bit further, because I not only ran a scan to see which symbols have signals, but I also used the scanner to find out which of these signals, because there can be quite a few. If you're scanning through thousands of stocks, and you can do this with MetaStock, you may have, 50 symbols with signals. But I also used the scanner to find out which of these signals are having the best odds of resulting in a successful trade. Sounds like futuristic? Well, it kind of is, because this requires generation 3 scanning, something that is possible with MetaStock and some very other select platforms, but typically it is not possible because this really pushes scanning to the next level. So what have we done? So generation 1, just to give you a bit of context, is simply scanning for plain old signals. You may scan through 1,000 symbols and get maybe, 20 hits which currently have a signal. That's all you know. This symbol has a signal. You don't know anything else about it. Generation 2 is to run the same scan for symbols which have signals, but you can also see directly in the scan results which of these signals have the best odds directly in the scan results. And this will allow you to sort and rank your signals, so you can focus on the most probable ones when you do your manual analysis afterwards. Saves you a ton of time once again. We pushed it even one step further. Generation 3 scanning does all this, what Generation 2 does, but it will use individually optimized parameters on per symbol basis. So for IBM, let's say, you use optimized parameters for IBM. For Tesla, it's going to be different. NVIDIA, it's going to be different, and so forth. So for each symbol, the scanner will do an optimization for that particular symbol, and then scan it. Do you see how different this is from Generation 1? This is exactly what we were able to accomplish in conjunction with MetaStock. That's really a really sophisticated way of scanning. Now, so I ran this scan, and the beauty about this is that all these scan queries that allow you to run these kind of scans, they're already built in. So for you as the trader, you just simply have to click on start. That's all you need to do. So last night I did this. I ran the scan, and these were some of the results I got for my scan for divergence clouds. In fact, I'm going to switch over real quick to MetaStock. I'm just going to open up my Power Console. There we go. And these were the results right here, which I got from Divergence Cloud. But let me quickly just close this up just a second, because I want to show to you, if I can find my Power Console. There we go. Here it is. What you will get with our indicators. You will get in the Exploration tab here of your Power Console MetaStock all these predefined scan queries, which simply allow you to run these scans. You can scan for entry signals. You can scan for symbols which had an entry signal maybe a few bars back. They're still bullish and long in that long trade. You can scan for that. You can scan for open trades. You can scan for divergences. You can scan for divergence, entry signals, and so forth. You get all these predefined scan queries here. And one scan I ran yesterday is this one here, the divergence cloud AO entry signal scan. And if you look at the report, which comes up right here, we can see that, I scanned through around 1,000, I forgot, around 1,100 different symbols. And I can see here that, of these 1,100 different symbols, if I sort this here, how many? 1, 2, 3, 4, 5, 6 of them had currently a long entry signal. And for the short side, just out of curiosity, we can see that, oh, even more. We have 1, 2, whatever, maybe 10 or 12 of them had short entry signals. Now, typically, I don't really like to go short any stock. It's not something that I personally like to do, but if you were a short trader for stocks, you could consider all these different signals. But I prefer personally to stay on the long side when it comes to equities. So on the long side, let's look at our entries here. We had 1, 2, 3, 4, 5, 6 entry signals. And of those, so these were the stocks of entry signals. But here on the right-hand side, you can see what are the predicted odds for each of these entry signals. The long percentages. So for this one, Arcosa was 74%. For ATN, 56%. Copart, 88%. F5, 70, and so forth. Which makes it very simple for you to sort your signals. And guess what I've done? I've done exactly this. I picked the one with the highest percentage, which happens to be Copart, this one here. And this is exactly what I called out as the trade idea. So if I open up this chart real quick, you can see that, okay, for Copart, once this loads up here, just move this over a little bit. I'm gonna hide real quick my, it's just this recalculating. And then we're getting towards the end of this presentation, of course. Once this is recalculated, I'm just hide the commentary to make this a bit faster. All right, so you can see here that we did have yesterday or over the weekend a nice long entry signal here, and the odds were at 88%. That's what we saw on the scan. All right, now we can also see that this stock is in a really nice uptrend. Yet again, in a stock which is really trending hard. It's been on a tear for quite some time, but we are a little bit towards the upper end of this trend channel. You can see it here too. So I don't really like to enter here directly because we're too close to this upper end and a pullback may happen. So what I suggest for the trade of the day is to wait for this pullback. You know what? A pullback is not very unlikely. It may happen, especially since we're here. So I would wait for a pullback towards this level here, around perhaps 55 or maybe 53. Put my stop somewhere around here at this lower swing point and my target towards the upper end of the trend channel. I really like this trade because we had this long entry signal here. It's been a long-term uptrend. And once again, if I go to the expert commentary, I can see that, hey, the odds really are in my favor for this particular trade. So once this opens up, you can see here, it's at 90% across all bars. So 90% of all long trades have been successful for this particular stock. And this is how I picked the trade. This is exactly how I found this trade of today. Long entry for the pullback, and then my target at 62, stop loss around 48, reward risk around 1-to-1 for this particular trade. Let's see next time when I come on MetaStock how this trade would pan out. All right, so to wrap up, so if you're wondering, are these indicators for me? Let me tell you one thing. It doesn't matter whether you are a day trader or a scalper or a swing trader, perhaps an investor. These indicators will accommodate every trading style, and they work on all time frames and chart types, period. They also work with any asset class. It doesn't matter whether you trade stocks or FX or futures or cryptos or something else or options. They will work with any asset class and symbol. And if you're a bit of an engineer like me, and if you believe that cool tools can make your life easier and can make your trading life easier, then these indicators are definitely for you because they will do most of the heavy lifting for you because they have the odds prediction technology and they have the auto optimization feature built in. Both are huge time savers, and most importantly, they will push the odds further towards your advantage, which is what you want as a trader, because you want to take the trades which have the highest odds of succeeding. All right, now we have prepared a little special for you, especially as a big thank you for joining me today. And I know I talk so much, so for listening to me for this 1 hour presentation. we have put together a super special for you, which includes all our super signal indicator, which you've seen, which looks for Confluence. We also include all our power bundle indicators like 1, 2, 3 strike, divergence cloud for finding reversals, and volatility crusher. Each of them is equipped with our win rates prediction technology and with our auto optimization feature, which will save you so much time. Now, as a big thank you, we decided, so normally this retail is 1,497. This is for life, of course, so you would never have to pay anything else. But as a big thank you, we decided to include 2 bonus offers to this. One is our trend radar indicator, normally at $299, and we also are going to invite you to our weekly trading sessions. They happen every Tuesday at noon Eastern, so next one is already tomorrow at noon. You will be invited where you can learn tips and tricks about each of these indicators. You're going to get our outlook on the market, and it's a great way for you also to ask questions directly to us should you have questions. So normally this retails at $997 a year, but you will be invited for free. And to top things off, we're also going to slash down the price to only $997. This is for a lifetime offer. And all you need to do to take advantage of this offer, the Super Traders Pack Special, is to go to tradingindicators.com, which is our homepage, /MetaStock, which will redirect you to a MetaStock page where you can take advantage of this special offer. So tradingindicators.com /MetaStock. Just real quick, if you're wondering what is this trend radar indicator, I didn't even have time to talk about this. Well, it's an indicator which looks like this, which shows this little heat map-like visualization directly underneath the price chart, so it doesn't clutter your price chart, which is a great way to find or to see at a glance what is my short-term trend, medium-term trend, and long-term trend doing. And we use it all the time if we are trend trading to time our trend entries, because we love to enter on pullbacks. This is what we do. I think trend traders should always enter on pullbacks, not at the upper end of the trend channel. So this is great for finding your entries, but also for finding your exits as well. We're going to add this indicator as a bonus to your Super Signals Traders Pack. And bonus number 2, I mentioned it, is an exclusive invitation. This date is wrong. Next one is tomorrow. Every Tuesday, we have our live market sessions at 12 p.m. If you make the purchase today, you will be invited for tomorrow's session at 12 p.m., which is a great way to ask questions and to learn tips and tricks and our take on the market. All right, guys, so if you want to take advantage of this, tradingindicators.com /MetaStock. All right, Jeffrey, are there any questions? I know I've talked a lot, but if there's a question or two, maybe we can take it real quick.
We got a couple. Let's see. Rick wants to know. Actually, Sean says awesome. So that's good. Glad he liked it. Native Gamer says, I like this. I'm glad I didn't miss this session from YouTube. So that's cool. Awesome. Rick wants to know, in order to optimize, do I have to run a system test?
Nope, just an exploration. That's it.
Okay.
It's built into the indicator. That's the beauty. The indicator will do the optimization. You don't have to use any back testing or system testing. It's built into the indicator.
He also is wondering how he can make sure that it's not overly curve fit.
Yeah, and this is something we teach. So one thing, if I go back to MetaStock here, one thing I like to look out for to make sure it's not curve fit is I want to see that the win rate over the optimization period, you can see it here over the optimization period, is similar to the win rate over the entire number of bars on the chart, right? Like here, for example, for Copart, my trade idea, they're very similar, 88% to 86%. So if they are similar, then this is to me a good sign, an encouraging sign that we did not curve fit it.
That's all the questions. Thank you.
Right.
Also want to point out, if you want to grab that, you should. You can also go to metastock.com /sales chat if you have questions. You can also give us a call at 800-882-3040. You do such a good job of designing that stuff out, Daniel. I really think you raised the bar. I appreciate the work you do.
Great. All right. Thanks, guys. So thanks for listening and have a great conference.
All right.
We'll see you soon. Bye, guys. Yeah.
Goodbye. Okay. I'm going to go ahead and just do a few things real quick here. Okay. And let me go ahead and make myself the presenter here. I'll go ahead and show my screen. And I'll go ahead and turn my camera on as well so you can see me. All right, cool. Daniel does such a good job on showing kind of everything that comes in there. It's been a very, very popular add-on. Of course, as part of the offer today, you're going to get the Power Bundle 360. You're going to get the scanner, the exploration. You're going to get the system test. So he does talk about how everything is automatically run, and you don't have to run the tester at all. But if you want to run the tester, you actually can, Rick. So if you want to kind of go and compare the results that the DLL is providing for efficiency and kind of get kind of like a breakdown of the profit and loss and the wins versus losses and the reward versus risk and all that kind of stuff, it's all built in. So you can still do it if you want to. So Bill, I did ask the question about the forward testing. He said, no, it's not forward testing, but you can do that in MetaStock. So like, for example, if you wanted to do a forward test on these particular scans or these particular methodologies, typically what you do is set your dates back in time, and then you kind of go in and look at the chart. So no, his DLL does not do forward testing though. So good. Anyway, let's see. You do have the ability to go in and customize everything that's using, and he is going to include as part of that special super signals, the power bundle, the thing. You can go ahead and go to tradingindicators.com/metastock. You can call us 800-882-3040. You can also visit us at metastock.com/saleschat. You're welcome, William. Sorry if that felt we did it. I was like, we did. I didn't miss it. Anyway, yeah. In any case, we are going to talk a little bit about the Traders Action Pack. As part of it, you're going to get a brand new update to Vince Vora's Victory 2, a very, very popular add-on. Has some really, really cool stuff that we're going to show you in just a minute here. You'll get the Power Bundle 360, that super signals and the trend rater. You'll get Vertical X Pro. You'll get 3 months of Buff Dormeier's analysis toolkit. You'll get a training class from Oscar Carboni. 3 months of learnmetastock.com, which is a premium subscription site. Obviously, MetaStock's a huge toolbox. We've been working on it for decades now. It's been rated #1 for 31 years in a row. So really help you take advantage of all of the tools inside of MetaStock, like scanning and testing and all that kind of good stuff. So normally the price for everything today, if you just bought it on our website, you can do that. It'd be $6,528. We've given a huge discount on it. We've discounted it down to $2,436. So if you want to do that, it's a great way to start with MetaStock. You can go to metastock.com/summit deal. You can scan on that QR code that I made over there. You can give us a call at 800-882-3040, or you can go to metastock.com/saleschat. So I guess the cat is out of the bag. Oh, before I talk about that, I want to say thank you to Stocks and Commodities for being such a long-running sponsor of all of the events that we do. If you're watching us on YouTube and you want to be able to get freebies, you can get a free issue of Stocks and Commodities. You can get some white papers. All of the presenters today have freebies that you can sign up for. If you haven't registered yet because you're watching on YouTube, go to metastock.com/traders-summit and go ahead and get signed up, get registered. You want to do that today. It won't be, because tomorrow I'm going to go ahead and send everybody their list, and you want to get that free issue. But we really do appreciate Stocks and Commodities. Such a great magazine. I've been writing articles on technical analysis since the 80s, and they do a great job. I appreciate them. So there you go. We're, of course, MetaStock, and we've been talking about it. We'll talk about it more in a bit. Our next presenter is Vince Vora. Vince is a longtime partner of MetaStock. He released a very, very popular add-on called Victory. In fact, it was our best-selling add-on of 2020. And he's done a really, really good job with it. People love it because it's very simple. It kind of gives some really good setups. You can use it with some of the analysis techniques that he's going to talk about today. So Vince is a great system designer. The other things I like about Vince is he's very easy for me to understand. If he explains something, I generally get it the first time. And he's developed a number of really, really good systems over the years for MetaStock. So without further ado, let me go ahead and bring you on here. How you doing, Vince?
I'm doing great, Jeff. How are you?
I'm great. Yeah, I can see you.
Great.
Oh, you look great today.
There you are. How are you?
I'm good. Yeah. Let's see.
Good.
Let me go ahead and make you the
Thank-
presenter. Hey,
Yeah,
I,
let me
I
share
was
my
reading.
screen.
I was just reading your market recap. Or
Oh, were you?
For I think you sent it around yesterday.
Yes.
Made
Yes,
me
the
want to
Sunday
take a look at a few stocks. So, all right. Let me go ahead and get out of the way. It's your turn. Go.
Okay, thank you so much. I really appreciate you having me on again. I'm Vince Vora, and like Jeff said, been partnering with MetaStock for several years, and they're great. The whole team there is fantastic. Today, I want to talk about our Victory Method 2.0. We created our first version of Victory back in 2019, I believe it was. We spent a lot of time with Jeff and his team there, and recently we made some upgrades, so I'm really happy to share that with you. So a big thank you first to Jeff, to William, Kelly, the sales team there, everybody at MetaStock, just a fantastic team. Let's get into this. I'm Vince Vora. I'm the head trader here at Trading Wins, and I've been doing this for almost 4 decades. I've done just about everything that you can in this industry, but my focus over the past many years has been on coaching students and running our membership, and we have a great group at Trading Wins. And over that time, I've designed several systems. One of them, which has become my baby, is Victory, and I'm happy to share it with you. Before we get started, I just want to say that trading can be risky, so please don't trade with real money until you're completely comfortable with the system you're trading. Now, having said that, let's show you our Victory 2.0 here. So some of you may be familiar with the first version. If you're brand new to it, don't worry. I'm going to cover it from start to finish. Basically, in a minute, I will explain what all these symbols on the chart mean, and more importantly, how you can use them to trade and be a consistently profitable trader. So what I like to usually do is take a top-down approach, meaning have a look at the overall market and try to gauge where, an index like the S&P 500, the Nasdaq, the Dow Jones, what they're doing, and is the trend, in line between those indices. Are they all trending strongly higher? Are they all trending strongly lower? Or is it a mixed picture? That's what I try to gauge before I break it down and try to go find trades on individual securities. So one of the things we've done in the past is not only look at a chart like the QQQ here, which is the ETF of the Nasdaq 100, which, as you can tell, right now is very bullish. Has been trending nicely to the upside for quite some time and looks fantastic. Normally what we would do is we would go look at 2 higher time frames. I prefer to trade mostly off the daily chart. I'm mostly a swing trader these days. So I would normally go look at the weekly and at the monthly time frames to make sure that the overall trend on all 3 time frames were aligned. We can now do that in a much quicker, much easier way here. But before I get to the actual symbols and this ribbon that you're seeing down here, what I'm going to do is right-click on my chart and apply a different template. Now, these are in alphabetical order, so for all of mine, you need to go down to the bottom where we see Vora here, and I'm going to highlight Vora Market Overview Multi-Time Frame. So once I apply that, it's going to bring up a template with the Dow Jones, the S&P 500, the Nasdaq 100, the Russell 2000, and then all the separate sectors from communications, consumer staples, energy, financials, etc. And it's going to do so all on one screen. So just a heads up, when you load this template, it will take a bit of time to load, usually about 25 to 30 seconds or so. There you go. Just because it's bringing all these symbols, all the data from these symbols in at one time. All right. And so based on the time frame on your chart, which right now is daily, if you look across, you'll be able to tell whether, most are green, meaning they're trending higher, or red trending lower. And, in one quick glance, you can get an idea of whether, the market is very bearish, like we were back in here in September, October, right? Or mostly bullish, like we then were in November, December. It's just one quick, easy glance, and you can spot what the market overall is doing. And you can change the time frame here. We can go to a weekly, a monthly, an hourly, whatever you want, and it'll show you what the current trend is for that time frame for all of these symbols, right? The market overall and the different sectors, all in one glance. So it's a fantastic addition. I love it, and it's going to save me time rather than going from the chart of DIA to the SPY to the Qs and flipping time frames on each one. I now have it all in one quick glance here. Okay, now let's go back to the daily chart of the Qs and have a look at these symbols and what they mean. All right, victory, the whole intention here was to have a system that not only identifies a strong trend, but helps us identify the momentum behind that trend. When you're trading with trend and momentum on your side, you have a very serious edge in the market, and that's really what you're looking for. If you can find an edge that is on your side, in your favor, the majority of the time, it's very difficult not to be consistently profitable. So I'll explain as we go through. So what we're looking at here, there's a bunch of arrows, both green and red, and those are obviously buy and sell signals. Now, what I'll say right off the start is that the intention here is not to take every single signal. We will train you on exactly which ones we prefer to take versus the ones we prefer not to take. But now we've made it even easier with the ribbon that you see here, and I'll explain. So there are two types of arrows. There's if you hover over it, it'll tell you what it is. This is a long, obviously. Now you'll notice that some of these green arrows are smaller and lighter in color versus some that are darker and thicker. And if I hover over the darker, thicker one, it'll say HPB. That stands for high probability buy. All right. If I hover over one that is a high probability sell, you'll see it has HPS. Okay, so that is the addition. Initially, they were all either just green or red. Okay, now we have the greens that are the original algorithm, the original setup. The ones that are high probability ones, we've added another layer to the algorithm, making it even safer, even more accurate. So this is highlighting times you might want to take longs or shorts that have an even bigger, that are giving you an even bigger edge in your favor. Okay. Now, you'll also notice that there are some dots, some green or red dots. This is the same criteria that comes together as the smaller, lighter green arrows, the original algorithm. The only reason there are dots instead of additional arrows is because we're already in a trade. So if it gives us a buy signal, from that point on, it will color all the candles the same color, all green, until it's telling us to exit that trade. Reason being, it helps the trader remain disciplined, not scared out of a trade. And then if the algorithm comes together again, it's highlighting another buy signal. So if we're already in it, we don't really have to do anything, or we can add to that position. But if we miss the first one, we now have another opportunity to get in. If then we see a TP, you can see that's a take profit. That's a suggestion that you may want to take some of the position off, not all of it, maybe a third, 20%, whatever. However you prefer to do it. I prefer to do it in thirds. You take a third off, and then if you get another signal, you can put that third back on. Okay. If it's another arrow while we're already in a green trade, in all likelihood, it's going to be a high probability arrow. So not only did it meet the same criteria as the algorithm here and here, but it added another layer to it, and which means the trend has gotten even stronger. and is even more likely to give us a winning trade, okay? And that's why you're gonna see that. If you ever see a change in color, whether we go from green to red or to yellow, yellow means, you don't see many yellow bars here, but a yellow bar means you shouldn't be long or you shouldn't be short. You should be on the sidelines. So any change of color means you exit the full position, not a third or 20%, however you want to do it. It's a complete exit if you get a sell signal once you're in a long trade, okay? Doesn't mean you go short. Does not mean you go short, okay? We have specific rules, and I'm going to give you those rules in a minute. That'll tell you which longs to take and which shorts to take. But any change of color and you're out of there, okay? And then down here, we have these two ribbons. And this is a new addition, which I absolutely love. What this does, and if you look to the far left, there's one that says weekly and one that says monthly, and that is because we are on the daily time frame, okay? So normally, like I said, what we want to do is if we spot a buy signal, we want to look at the weekly and we want to look at the monthly to make sure that they are already in a buy setup, that they are in line with what we're seeing on the daily, okay? And now we don't even have to change time frames. All we do is look down here and we know what color the bars are on the weekly and what color the bars are according to the victory indicator, that is, on the monthly. And you'll notice as I'm flipping through charts that the areas where they're aligned, meaning you have green up here and you have green on the weekly, green on the monthly, those are your strongest, where you get your strongest trends, okay? And we'll look at several different symbols. The most popular these days is NVIDIA, okay? And please enter symbols if you want. We can have a look at anything you want here. But as you can see, it's been trending strongly for a while. And there you have it. The two ribbons are solidly green, have been for a while. And NVIDIA continues to post gains here. So when you have a strong trend, not just on one time frame, but on multiple time frames, it increases your odds of success. When you have momentum behind that trade, it increases it significantly. How can we tell what the amount of momentum is behind it? Well, this line here, as you can see when I hover over it, is a 20-period simple moving average. Not exponential, not weighted, just simple. A 20-period simple. What we're looking for here is slope in the direction of the trade. So if you're getting a sell signal here, but the 20 is sloping higher, why would we short that? Well, there's no way we would short that. It means we're going against the current trend and against the current momentum. What that's telling us to do is exit, okay? Now, sometimes it gets us right back in, all right? But the reason why it does it like this is because it's a security measure, right? If the trade isn't going to work out, like we enter here, for example, it moves up a little, but it's pretty much flat, and then it starts going against us. We want it to get us out of that trade immediately so that our loss is kept to a minimum. Because what we want to achieve, what you should be striving to achieve as a trader, is number one, to have more wins than losses, but number two, make sure your wins are much bigger than your losses. With that kind of math, you can't go wrong, and you will be profitable consistently over time. So what we try to do is avoid areas of consolidation, such as this, okay? This is just a sideways consolidation, and this happens quite a bit. You know, it's very normal to see a nice strong move up or down, followed by some sort of consolidation, followed by a breakout and another move on that stock. So these areas, they're fairly easy to spot when it's been consolidating for a while, right? When you go back and look at this, you can easily tell that it's been in a range, right? And you can take your trend line tool and draw a line across the highs, right? and across the lows and spot that channel, right? Fairly easy to do it after the fact. While it's happening, not so simple. So what we do is use that 20-period moving average. And if it's more or less flat, we rule out those signals. Now, you'll notice here that the arrows that are within these consolidation zones are all the original smaller ones, lighter in color. They're not the high probability ones. Okay, so now we've been able to identify what the higher probability ones are. But again, when you're a spot consolidation like that, what you should be looking for is a breakout from that channel, either up or down, okay? And at that point, if you have already a trend in that direction set on the weekly and on the monthly, your odds have already increased significantly, right? If you have slope on the 20, they're that much more significantly in your favor. So what you want to try to do is stack the odds in your favor and only be trading the best of the best setups. Okay? Now, for those of you who trade on fundamental analysis, you can use this as well as part of your overall plan, meaning you do your fundamental analysis first, you identify what you consider to be the most solid companies out there, and there are many services that will do that for you as well. And then you take that group of stocks and you run them through this filter here and find the ones that are not only solid fundamentally, but have a solid trend, lots of momentum, and are confirmed by the higher time frames. Okay, and if you prefer to trade on a different time frame, you can use the same method just with different time frames. Meaning, if you're a day trader and you want to trade on a 5-minute time frame, well, folks at MetaStock have created a template for us for the 5-minute. All right. So if I put on the 5-minute template here, you'll notice that it gives you the 15-minute and the 30-minute trend. So the two higher time frames. So you can spot, and here's a high probability signal with slope, right? We look to our left, there isn't a lot of overhead activity, okay? Very little overhead resistance. And what does the weekly show? Green, or sorry, the 15-minute and the 30-minute are both green. And there you go. If you get another one, you can add to that position. You can take a third off, put a third back on, and then you exit there. Okay, so a real nice position move here. And these are not small moves either. This one was from about 285 to the exit here. It was about 415. I mean, a massive, very quick move here. And if you prefer to go a little higher, there's also a template for the 30-minute chart. Okay? You apply that, and now the two higher time frames are going to be the hourly and the daily time frame. Okay, so it's super simple. Let's look at a different security like Apple. You can use this regardless of whether you prefer to trade on a very short time frame, on a medium-term time frame, or if you want to be more of an investor and trade on the weekly or the monthly. Now, if you go to the higher time frames, like the weekly, right, what you're going to see is the monthly ribbon, right? We didn't go any higher than the month. We could have went to quarterly or yearly, but most people don't use those charts. So if you're on the weekly and you see green here, and especially the high probability signals, and the monthly time frame is also green, those are the trades that you want to focus on. If you go to the monthly time frame here, it's going to show you both, and you can really see on the monthly time frame how well it highlights, or how using the higher time frames puts the odds in your favor. let's go just run through a few stocks here. Let's see. Let's throw some out there. Costco, for example. Let me know if anyone wants to see any symbols. It's hard for me to keep track of the questions here while I'm doing this. Let's see. There's Costco, right? So pretty flat, and then once we got alignment, it's just been off and running ever since, right? Let's see. Sean's asking what TP is. TP is just a suggestion of where you might want to take partial profits on the order. So if you got in here, you could take some off here and bank it, some off here. If you see another dot, which is a re-entry, or especially if you see another arrow, and especially the high probability arrows, you want to add that back on. Now, I do want to say, with this, you should have a money management plan, okay? And you know, in the training that we provide with this, I discuss that. And what I always suggest is never to put more than a specific percentage of your overall balance in any one trade. Okay, the highest I would go is 5% of your overall balance in any one trade. So when I say that you can add here, or add here, and add here, I don't mean if you already have 5% here that you add another 5, another. No, you don't want to do that. But if you start off with 5, okay, and then say you take 2% off here, and then you get another buy signal, you can add that 2% back, right? That's what I mean. Or you start off, say 1%, and then just keep adding along the way, okay? But we will cover all of that in the training that we provide. Sean is also asking for the US dollar. We can do the US dollar index. What is it here? Is it .dxy?
It's, I believe, .dxy.
Yeah, .dxy.
And since I broke in,
yes.
William in YouTube would like to look at Tesla when you have a chance.
Tesla, absolutely. If you're gonna put a symbol, also let me know the time frame if you want. Let's go back to the daily time frame of the dollar. See where we're at now. The dollar index. Here it is. So the dollar had recently pulled back. Now you can see that on the weekly time frame it's turned. So the daily and the weekly have turned. What we're waiting for now is the monthly to fall in line. Now the dollar is just surpassing this pivot high here. If it can get above here, I think it'll have an even stronger move. But right now, it's in a bit of a range, waiting for one more of the time frames to align. Okay, but again, if you look at these setups here, when you're either both green or both red, that's where you have the highest edge in your favor, right? The biggest edge in your favor. And that's what you really want to focus on. So, Sean said he wants to see it on the weekly, I think. So let's go to the weekly and see what that looks like. Here it is on the weekly. So we had this down move here. And remember, since we're on the weekly is not going to show anything. This, what you're seeing on the chart, is the weekly, and this is the monthly. And then we put in a bit of a base. We started to turn, and then the monthly fell in line, right? And you start to get a slope on that 20 MA, which tells us not only are we trending strongly, but we have a lot of momentum on our side as well. And we went on quite the run here, okay? So, and again, you could enter at any one of these dots or arrows. These are the high probability ones. But what you'd want to do is make sure you exit the full position on any change in color. You can take partials at the take profit, but you want to exit the full thing. Now, if, say, you prefer to just, take, say, only the high probability signals, you're not concerned with take profit, etc. You have your own way of doing this. You can come down here, go to the expert advisor, go to expert properties, click cancel, and now here are the symbols. So I can uncheck the ones I don't want, right? So to take profits, I can take those off, and then it cleans up my screen a little. If I only want to focus on the high probability buys and high probability sells, I can remove everything else. So it's totally customizable. It's a great way that Jeff and William and their team put this together. So yeah, again, the key here is trading with trend and momentum. And yes, you can add other parts of technical analysis to it. As Sean is mentioning, ascending triangles, etc. Of course, and we go over a lot of that stuff with our members. We have a membership group where we meet 3 times a week on Zoom, live on Zoom, Mondays, Wednesdays, Fridays. In fact, I'm meeting with my team as soon as I get off this call, again for an hour or so. We cover all that. But let me show you a few other charts here. Let's look at crowdsource. Let me see if there's any. Jeff, let me know if there's any other symbols. Oh, I apologize. Someone wanted to look at Tesla. We will look at that in just a second here. So CrowdStrike here on the weekly, we had this high probability buy here back on September 1st of last year. The monthly was absolutely in line, right at the same time here. Came on. And ever since then, it's taken off. Now, if you ever see blank spaces here like this, it's because the indicator needs a certain number of bars to calculate the formula, right? So that's why you don't see it back in here. But again, if you look at when red on red, right, the majority of them will go in your favor, and same with green and green. All right, let's look at Tesla. Tesla's been a wild one. It's extremely popular back in here. Some beautiful moves. Here's a high probability signal here, the green one. There it is, HPB, right? Here's another one, all right? And then you exit your position there, all right? Now, if you are seeing the regular buys, okay? Let me run through quickly the way I trade it, so you understand how conservative I am and how safe this strategy can be. All right. When I'm looking for a trade to enter, what I'm looking for is number one, a signal. Okay, that's the starting point. But then I'm looking for the actual bar that has that signal to be close to the 20. I don't want it to be far from the 20. When you get far, you tend to snap back, and I don't want to get caught in that. So I look for that. The other thing I look for is where's the closing price on that bar, right? Is it near the high? Is it near the low? Is it in between? Where is it? So if we're looking for a long position, I'm looking for that close of the day to be near the high of the day, so in the upper portion of the bar. If it's near the bottom, I won't disregard it completely, okay? But it won't be my first choice. And after that, the only way I'll enter that trade is if it takes out the high of that day. So the very next day, can we overcome that high? If we do, then we're free to take the trade. The other thing we look at is how close are we to an all-time high, for example? And the reason why we look for that is because we don't want any overhead resistance, okay? Now, so we look at support and resistance as well. And again, all this stuff we will train you on extensively in the training class. But what I'm looking for is slope, the bar near the 20, the close near the high, no overhead resistance, and an earnings date that is far away. I don't want to get caught up in earnings. Earnings usually cause a gap. I don't want to risk that. And then I'm looking for the confirmation of the higher time frames. And if you have all of that together, your chances of having a winning trade increase dramatically. We've done the research. We've not only tested this with years of data going back, we've tested it in different environments and on different exchanges. So we've gone to exchanges around the world. this has been testing, US, Canada, Australia, UK, over in Asia, all over the place. It's consistent throughout. Why? It's based on simple technical analysis. And when buyers are in control, price tends to go up. When sellers are in control, price tends to drop. And what our rules and the algorithm do is help you identify who's in control. Is it buyers or sellers? And that's why it works so well. So a lot of times when I develop a system, especially when I present it, the very first thing I'm challenged with is someone will pick a time in the past when the market had a violent reaction to something, right? So for example, you go back to 9/11, or they'll go back to, in this case, the COVID, right? And say, well, would this system have caught that, right? So how many of you remember, for example, GME, GameStop, and AMC, you know, the whole Reddit, Roaring Kitty thing? There's a movie about it, Dumb Money, I think it was called. It was just entertaining as well. I liked the movie. But for example, those stocks were, you know, almost close to bankruptcy, and suddenly they took off because those groups were, I'll say, promoting it, and I think they were all talking about it, and they're all talking about jumping in. So here's GameStop, right? Completely flat, right? And then not only do we get a buy, we get a high probability buy here. There's the higher time frame confirmation, right? And off it goes. It comes all the way back. We get another high probability buy. It takes off again. We get another one. It takes off again. So the algorithm behind this, there's only a couple of simple indicators behind it, but they are indicators that when you combine them, it makes it almost impossible to miss a trend. It really does. Sometimes it gets you in a little late, but it's almost impossible to miss that trend. Have a look at AMC. Okay, same thing, right? So this told us to get in here, was not a high probability, nor could we confirm the higher time frame at the time, right? Then we got a re-entry here, okay? And we were just moving from neutral to green on the higher time frame. Here, we had the higher probability one, right? And you're solidly green, and off you go. So it doesn't matter whether it's a penny stock, whether it's an index, whether it's a Forex pair. Well, let's have a look. How many of you trade crypto? Bitcoin, for example. Bitcoin's been going crazy. Have a look at Bitcoin. Now I'm on the weekly chart. Let me go back to the daily chart. Okay? And have a look at the recent move. There it is, right? Now, here's another great example that I want to tell you about. A lot of times, what we try to do is avoid the consolidation area, right? So what we do is we wrap around a couple of rules around these signals so that we try to pick out the ones that are more in our favor, as opposed to the ones that are not going to give us a very good chance of making money, right? So there's only two ways that we can take a signal that does not have the slope of the 20 in our favor, right? This one's a no-brainer. Why? Because not only is it a high probability one, so we know we have that extra layer of confirmation, but look at the slope on that 20, right? Very significant. So, and we have the higher confirmation, and there it is. So these are the obvious trades that you always want to take. This one is just a regular long, isn't a high probability, but look at the slope on the 20 was against us, right? So there's two rules, and any one of them that are in place at that time will allow you to take that trade versus not. One is that if you get this signal and you're above, you clear a prior pivot high, you can take that trade. Or if you move forward, you come back and you retest the 20 significantly, meaning it pulls back to the 20 and then bounces off it, like that and holds support, then you can jump in. So on this one here, we did not have a close above a prior pivot high. But at this point, when we get the re-entry, we have that retest of the 20. And we have the higher confirmation. So you could have actually taken this portion of the trade and then taken a third off here, add the third back on here, and off you go, okay? But if you prefer to be super conservative like me and stick to the higher probability signals and only take the ones with slope, near an all-time high, etc., you know, again, that's where the edge is in your favor the greatest. All right, let's see. Any other questions? Let's see. Let's go over some more symbols here. What do we want to look at?
We're out of the YouTube. There's a request for GE.
Oh, sure, absolutely.
And then also, William said, don't forget to talk about Tesla, but I think you did.
Yeah, I did talk about Tesla. Now, I'll go back and look at where we are right now on Tesla on the daily in just a section. Just I'll give you my opinion on where we're at. GE has been phenomenal recently. Have a look at the move on GE. Now, there's an exit flag here. Sometimes the system will go from green immediately to red. Sometimes it'll give you an exit. But right behind it, there is a long setup there. I highlight it right there, okay? And you have slope, and you have confirmation, and you look to your left, and there's nothing but blank space, meaning there's no overhead resistance, and that's how great of a trade it's been. Now, you'll also notice here that there are no take profit signals, correct? Why? Because the system recognizes the strength of the trend and doesn't even bother to suggest you take profits because the trend is as strong as it is. It's only when it starts to weaken a little where it's suggesting you bank some of that money so you don't give it all back if it continues to pull back, right? But if you just look at the areas where the higher time frames are in line, right? Those are clearly the areas where you have an advantage, right? This is why we do this. So again, you want to take quality companies and you want to identify the areas where buyers are fully in control or sellers are fully in control. Let's go to Tesla, back to the daily, and have a look at where we're at with Tesla right now. You see, the two higher time frames, the weekly and the monthly, are both telling us that it's weak here, that we should not be buying, but we should be shorting, okay? And we just had a high probability short here, but let me zoom in here. So if you can notice the high sorry, not the high probability, the open, high, low, close bars, right? So look at this bar here. We got that high probability sell at the close on Friday, right? But look at where we opened the day versus closing the day. So for a short sell, we want to be near the low of the day. We were opposite, okay? So we won't do anything unless we take out that low. So today it's popped up again. Now it's starting to give back some of its gains, but if it comes back and takes out that low, I would definitely want to short this. Why? Well, look at the slope, okay? You have a high probability short. You have the two higher time frames confirming it. And if we go to the monthly time frame, where it shows us all the data, look down here. There's very little support nearby. Next support comes in where you have all of this activity down here, which is like closer to 20. So I've been saying for a while in our group, over a year now, that I'm honestly feel that the day's going to come when we see a $20 print on Tesla, okay? And it's just because very little support down here. Once it clears a key low, and to me it was this low here, you know, just under the 200 mark. And now here we are at 172, and I think this is going to continue. But opinions don't mean anything. I want to stress that. I have opinions like everybody else. I don't trade off opinions. I trade off of what buyers and sellers are actually doing. See, what you see on the chart, these are actual transactions. They're not opinions. So price action means everything, because there's a difference between, going on a presentation and giving your opinion versus actually putting your money into something and betting on it. So what you're seeing on the chart are people actually putting their money to work, not just having an opinion. And what victory clearly tells us here is that sellers are in control. And what happens generally when sellers are in control? Price drops. And so that's why we're expecting it to continue, okay? All right. So, Sean makes a point. He says, I agree, but Neuralink will raise the stock again. You may be right on that. I don't know. But when you'll be right on that? When you notice or can tell on the chart that buyers have regained control, right? Believing that is one thing. If you were to get in now because you believe that and you're willing to hold for several years for that to happen, in the meantime, you may suffer through a drawdown. And it could be significant until that day turns around and it starts going up. So my point is, why put your money to work now at that, right? When you could put your money somewhere else that has a trend that you're looking for. And then when Tesla turns and buyers regain control, then you put your money back in there. You always want your money to be working for you, not sitting flat, not sitting dead with a drawdown. Why sit through something for months or years before it actually starts to make something for you? That's my argument. That's why I prefer to trade with this. But you may absolutely be right about that. It's a very interesting thing. Certainly the first patient, I think, from what I see, has been working out. Let's see. Exactly. Sean says NVIDIA was 112 during COVID. Correct. And look at it now, right? But there were also times where there was a drawdown. I always said, and Apple is the one I always use as an example. Sean, I've always said, if you look at just fundamentals, right? You look at a company like Apple, and yes, now their, iPhone sales started to slow, et cetera, whatever. But if you look at their balance sheet, how much cash they have on hand, and so it's really hard to argue that there's a better company out there, or at least a safer investment fundamentally than Apple. So if the market did exactly as the financials are, you should never see a down day in Apple. But yet we have them, right? It's all based on what the expectations are for the future. So you never know exactly what's happening, and I wouldn't even ask why something is happening. Just ask what's happening right now, and price will tell you. So right now, Apple is in a short here. Now, we don't have a confirmation of the monthly time frame. We only have the daily and the weekly. So we're waiting, but should we drop below these lows, I think Apple's going to go for a ride lower. I think the higher time frame is going to fall in line, and we're going to see much lower prices there. Okay, now we're getting tight on time. Let me show you a couple of other pieces to this that are excellent. If you go to the top right, click on View, and click on Expert Commentary, it's going to pop up a box here, and it's always going to default to the most recent candle. Now, this is telling you where we're at, and it says the victory system is currently in a short position. And it also gives you a suggested trailing stop figure, so that if you're long this, but you can't watch your screen, you got a job or other commitments, and you're going to walk away from your machine, you can set your stop at a certain price. Now, you can move this little triangle here from bar to bar, either by clicking over a bar or by using the arrows up in here. So you'll notice that here, if we move to the bar where it was giving us the short setup, it'll tell us that it's currently in a short sell opportunity. And then from that point on, it'll start populating that trailing stop, and it'll just move it. If you notice that the bar before was 174.73, it went down a little. Now it's 174.21, etc. So it helps hold your hand throughout the life of that trade. It also tells you a bit more about myself and trading wins. And when you're first about to enter a position, it'll give you a suggestion on if you're trading it with options, you know, what kind of expiry date, what kind of delta you might want to look at, a few helpful hints that way. Also, if you go to the top left and click on Power Console, it'll bring up this box where third tab down on the left is Explore. Now, this is where you want to select the system that you want to scan for. Okay, again, alphabetical order, mine are all at the bottom here. Okay, but what you'll notice is there's like Vora Victory, which is the original algorithm. Then there's Vora Victory filtered. What that means is we filter the signals for slope. We only accept the ones that we consider having a high degree of slope. So it helps us avoid those flat areas, those consolidation areas, right? And now we also can scan for the high probability setups. Now, if you right click on any of these, sorry, let me try that again. If you right click, you can just say add to favorites. So rather than scrolling down here every time, you just go to your favorites tab and you have them here, okay? The ones you want. And you can also scan for the re-entry ones, these dots, okay? Now you come down here and you select the market that, or the group of securities that you want to scan. Okay, there's anything for here, all different exchanges around the world, etc. I like to do US optionable stocks, okay? But I'm going to take that off for a second. That's way too many. There's 5,800 there. Let's try to run a quick search on the 30 stocks in the Dow Jones and say the NASDAQ 100 here. Hopefully we'll find some. Then you can select your time frame. I'll select daily, but you can do weekly, monthly, 5-minute, 30-minute, whatever you want. This will confirm what it is you're scanning for. Click on Start Exploration. It'll bring up this box, and it'll show you up here the number of charts that it's reviewing. 125. We're almost done. There it is. It's super quick. It's found one, UNH. Okay. Now, if you had a long list here, this is where you want to use these columns. So you'll notice new long is 0, new short is 1. If you had a long list here, anything with a number 1 would mean that is the kind of setup it is. So looking at this, before I even open the chart, I can tell that it's not a long setup, it's a short setup because the number 1 is here. Then it gives me the degree of slope. So if this was a long, it would have a positive number, not a negative. But anything over 5 is considered significant. This is a -7. It gives me the close level so I have an idea of what the price of the stock is, and then the symbol. And you can sort by clicking on these columns if you want. You can also highlight it. You can copy it to your clipboard, paste it in your watch list, whatever you want. You can print it, or you can just click Open Chart, and that'll open the chart. So right here you can see it. And quickly, we can try to judge, is this the kind of setup we want or not? We have, first of all, a high probability sell. That's a good start. We have a candle that is close to the 20. We also have, currently, I know it's not the end of the day, but it's pretty much at the low of the day, which is what we want. We also have the higher time frames in line, both short, right? So then our next thing is to look to our left and determine, is there a lot of support or resistance, right? This one looks like there might be some resistance. But basically, that quickly, we can tell whether we have a valid short setup or a valid long setup. And if you have a list, what I'd prefer you do is compare one to the other and select one or two that are the best of the best. Okay, that's what we do on a daily basis here, and we go from there. I am very tight on time here, so I'm going to pass it back to Jeff. He'll let you know how you can get yourself a copy of this, and if there are any other questions, I'm happy to stick around and answer them. Jeff.
Thanks, Vince. Great job.
Thank you.
All right. Let's see. A couple comments. William says, thank you for looking at Tesla again, Vince. I've been using your system for a while. I'm very happy that I did. I wish I would have done it before. So,
thank you.
Thanks, William. Also, let's see. Sean says, great presentation. So, do you have any thoughts on Jen? One question that we do have in there is Jen wants to know, is this good for binary options?
You know, I don't really, I can't say I've ever tested it on that. I mean, it's technical analysis, so it might, but I've never taken a serious look at binary options. I would imagine so, but I can't confirm. Yeah, sorry.
Sounds good. That's it. Let me go ahead and kind of talk a little bit about some of the other stuff. And I do appreciate, before I let you go, I want to say thanks again for all the work. I was writing kind of like what we call a brief on the product Victory 2, and I'm like, oh yeah, we added this. Oh yeah, this was cool. Oh yeah, I shouldn't forget to talk about this. So hopefully I won't forget anything important while I'm going to talk about it for just a minute.
Thank you again, Jeff, to you, William, and the whole team there. Really appreciate it.
All right, cool. Thanks, Vince.
Thanks.
Also, if you had symbols and we didn't have a chance to look at those symbols just due to time, send us a chat on with us. We'd be happy to pull you a chart. Here's a quick one of CCL for you, Michael. We did have a little bit of a high probability buy here. You can see that the weekly and the monthly are also kind of in a bullish zone according to the Victory 2 system. So, but if there's charts that we haven't looked at and you want to see them, and you want to kind of see what they look like, get in touch with our sales team. We would be more than happy. And you can do that. I'm going to go ahead and type and talk while I do this at metastock.com/sales chat. Another thing that I thought was really cool that I want to show before I get into the little PowerPoint, I love the fact that we have kind of like this daily view where you can kind of see what the weekly is and the monthly is. And you don't have to remember to do it. It just does it for you. It's part of the template. It shows them up. You can do that on like on a 5-minute chart as well, in which case it'll pull the 30 and the 60-minute, or you can do that on a 60-minute, in which case it will do the hourly and the daily. And that automatically happens. It just tells you what kind of state the victory is in. The other thing I wanted to show is here's a kind of the market overview template. And this is actually a layout that comes in as part of it. I've changed one of the time frames, but right here you've got well, this would normally be a daily, a weekly, and a monthly. So you can see what all those sectors are, all those indices, what they're doing in real time. You can see them right here on the chart. Now the other thing is you can apply this to any time frame that you want. So if I, as a user, want to see what kind of sectors are moving today, what the markets are telling me today, I actually moved this down to a 30-minute. And I'd actually just kind of put a highlight at 10 a.m. to this morning so I could see where today was. You can see exactly kind of what's happening during the day. You can use this on any time frame. You just literally tell it what time frame you want. Now, actually not any. Once you get up to monthly, there's not quite enough data to load all the sectors. So anything below monthly, you can actually apply this, and it'll give you data for it. So very, very cool stuff. A lot of stuff that when we were initially saying, well, okay, with Victory 2, one of the things that, and it has been a super popular add-on. It's been one of our it was our best-selling add-on in 2020. But I think a lot of the reason people liked it was kind of the simplicity of it. You could kind of go through it, you could kind of go through a little bit of training, and everything was very, very straightforward. What we wanted to do is we wanted to kind of apply a few extra things, like the ability to look at the higher time frames without switching to them, the trade profit opportunities, the high profitable buys, but also kind of keep everything very, very simple to read. And so I think we've done a really good job at that. I love kind of the way those multiple time frame overviews look, and they can kind of give you an idea for the sentiment of the market and what sectors are moving, which ones aren't, what they're doing. And all of it's just at a glance. It's easy to look at. It's not overwhelming. There you go. In terms of stuff that we added to Victory 2, we've got the high probability buy setups, the take profit areas, the multiple time frame views for daily, 5 minutes, 30 minutes, and then that market dashboard that then shows you what the market is doing. So, and there's a picture of it, and there's a picture of that. So you've got your take profit suggestions. Again, those are suggestions. We had questions in the chat. Doesn't mean you have to get out. Doesn't mean you have to take profits. It's just a suggestion that we might be having a bit of a pullback, and it might be a good idea to take some profits. Okay, you've got now your high probability setups, both long and short, and then you have your multiple time frame analysis, and all of that happens right on the chart for you. It's all kind of just delivered for you, for you to look at. So, and then there's that strategy E that we just looked at. So. Vince is good at this. He talks about how you can use it to scan for information, to find signals, all that kind of stuff. And very, the expert advisor. I don't know that we showed this today, but the expert advisor is really, really good. You'll notice here it's going to tell you what the slope is, whether it's sloping up or down. It's going to tell you what you're looking for if you're looking at a signal. If you're in a long position, you'll notice right here it's going to give you a stop loss right in the commentary. And so with this expert advisor, you're going to get entry recommendations, you get exit recommendations. You get suggestions for options like, okay, if you're conservative, look at this. Here's the deltas that you want. Here's the time. Here's the expirations that you'll be looking for on a daily basis, right? Trend analysis using the slope method that we developed with Vora, your take profits suggestions. And then if it's a high probability buy or sell, it's going to actually highlight that in the commentary and on the chart for you as well. So very good upgrade. In terms of the system tests, you have your Vora Victory, your filtered, and then just if you're taking the high probability, those are all included as system tests you can use. The other thing that we're actually going to include with this, so we've added all of that new stuff, but one other thing that we're going to include is 2 of Vince's other systems as part of it. So as part of it, you're going to get the Vince Vora's winning momentum strategy. And you're also going to get a very, very popular add-on that we designed with Vince called Veracity. So these are 2 complete systems. They have expert advisors. They've got scans. You can run them. Very, very popular products in their own right. So the other thing that Vince is also going to include is his membership service. So this will give you daily trading ideas. He does 3 live weekly trading sessions. He's going to send you trading ideas by email. Actually, that was a market brief I was just looking at before he started. You get on-demand technical analysis, training videos, and option trades ideas. The membership for his advisory service or the Trading Wins Pro membership is $97 a month. He's including 1 year of that, so it's a $1,200 value. So, and then in addition to that, next week, we're going to sit down with Vince and we're going to record a session that's going to start at noon Eastern time. When we did Victory 1.0, we did actually a session of boot camps where we sat down and we recorded some training, and those are available. Some of the best lessons that I've learned in trading, things I actually implemented in the trading that I do all the time in terms of how Vince looks at support and resistance, what he looks for in terms of setups, how he manages us, all of those I learned in the boot camp. And the other thing that I wanted to say is we only did the boot camp series once live. And so if you want to be able to come in, ask questions, interact with Vince, we're going to do this and we're going to record it. We're going to make it available for you forever, but we're going to do it for the first time on April 4th at noon Eastern. So as long as you have bought the Victory 2 by then, you're going to have access to this class. So you got Victory 2, you've got Veracity, you've got winning momentum, you've got that membership that's been included for a year. Total price of all of that would be $56.57. We're going to do all of that for $9.97 today. And if you have Vora Victory, the first version, we'll give you 50% off of that. So $9.97 if you've never done it before, half off $9.97 if you have Victory 1. So fantastic offer. So again, 56.57 would be the cost of all of those individual components. $997 here at the summit as part of our launch offer is going to include that bootcamp class, and we're also going to throw in a money back guarantee. So you can give us a call. We don't have an order page that's online and ready to go yet, unless you do it through Summit Deal. But you can give us a call at 800-882-3040. You can visit us online at metastock.com/saleschat, and we'd be more than happy to help you get that set up. So there you go. It is also part of the Summit Action Pack. So we've got the Vora Victory Method 2, the Power Bundle 360 with the Super Signal and the Trend Radar, the Buff Dormeier's 3 months of his toolkit. Serge is going to come on next. He's going to talk about Vertical X Pro, another really, really cool system. Some training from Oscar Carboni, 3 months of a website called learnmetastock.com that has hundreds of hours of video on there. And then an Unleash the Power MetaStock workbook and training CD. No video, not CD. We don't do CDs anymore. Don't expect a CD, but it's all online. Man, 1990 just came back. You get all of that. It's normally $6,528. Here at the event today, it's $2,436. You can scan the little QR code in the corner. You can go to metastock.com/summit deal. You can call us at 800-882-3040, or you can go to metastock.com/saleschat. So all that stuff. Before we go to our next speaker, which we're going to do pretty quick here, just because we're running a little bit late, I do want to say thanks to Stocks and Commodities Magazine for supporting the event. If you're watching us on YouTube, hey, if you haven't yet liked and subscribed to the channel, we put a lot of really good content. I think might be biased, but like and subscribe. Also go to metastock.com/traders-summit. You can sign up for a free issue of Stocks and Commodities. You can sign up for a whole bunch of bonuses from all of the speakers today. Vince had a couple training courses that you can get for free. You just have to register at metastock.com/traders-summit. I'm going to talk a little bit more about MetaStock after Serge, but since we're a little bit behind, and talk about Serge Berger. Serge is a good friend of mine. He's going to be coming in and talking to us about his methodology that he uses to trade. Very, very smart technician. And like a lot of the speakers today, very, very easy to understand, very, very easy to follow. Somebody that I have a great respect for. So Serge, I know we're starting you about 10 minutes late. I don't want you to worry about it. I'm the next speaker, so take the extra 10 minutes if you need them. It's not anything that we want to get overly stressed out today about. How are you doing? I can see you.
How you doing, man? Can you hear me?
I can hear you. You sound great.
Very
really
good.
like
likewise.
The mic setup. Let me go ahead and make you a presenter here.
Yeah, sure.
There you go. And I'll let you know I can see your screen.
Yeah, let me know in a second when I can quickly share this thing. Alrighty. Oh, you know what? I have to quickly adjust something. Give me 1 second. This thing here.
You're fine.
I have this thing on the computer where like it optimizes the upload speed, which basically means it slows everything down. It's so silly. It should be good now. Can you see my screen?
Yeah, it looks good to me.
Awesome.
All right. It's
Cool.
your turn. I'm going to get out of the way.
Thank you. Thank you, Jeffrey. I appreciate it. All right. So let me quickly just bring up the questions box so I can see that. And I think we should be good to go. And the chat is here. Okay. All right. Happy Monday, everybody. I wanted to just quickly share a couple of charts with you right now on the markets. I'm starting with Bitcoin, not because I'm an all Bitcoin all day guy. Just I want to let you know that it's up 5% today. I thought there was a bit more consolidation potentially. Clearly, that's not the case. Also, want to point out to you a level on the S&P 500 that I think we need to be aware of because it's what the algos are tracking. The algorithms that we track are tracking very closely the 21 period moving average. It's the yellow line on your screen. So if any of you are wondering what's kind of the line in the sand where the algos might flip, That's one thing to watch. The simple 21 period moving average in the SPY is kind of where it's currently on the SPY, currently around 413, 414-ish. Of course, it's a rising moving average. Also important to note, and I think this is, might be important for some of you guys to be aware of. We haven't had a 2% one-day move in the S&P in a long time. At this point, if we were to see, and this is not a forecast, I'm just saying, if we were to see a 2% move right now, it would get us below that moving average on a daily and closing basis, really for the first time since November in a meaningful way, very quickly. So it could all happen in one day. It's not a forecast. I'm just telling you we're extremely stretched. Sentiment is about as stretched as I've ever seen it in the near term. Most people think it's not possible for the S&P to drop more than 5%. I would offer being a student of history for those people that think that. I know it's an election year, but we live in a global world, so just kind of keep that in mind. Anyway, long story short, we're here to talk about how we can use the market to the market's extremities, kind of a little bit like right now. I think there are some extremities we're seeing in the market. And so what I'd like to show you is sort of our way of looking at the market through the lens of overbought and oversold, and how we can take advantage of these situations in the market with options in a very specific way. Quickly, risk disclaimer. Make sure you don't trade or invest with more money than you can afford to lose. It's trading, investing is serious, so make sure you get educated on it. That's what this is all about, right? None of this is investment advice. It's all about education. The last thing I want to quickly talk about before we look at the strategy, just seasonality, and seasonality is an oversimplification, just to be very clear. But we are heading into April here, and April does tend to be a pretty good month for the year, but it doesn't have to be, okay? I think a lot of people, a lot of algos are betting on that right now, and I would not be surprised if right now that is actually not going to work this year, because we've had such a strong year-to-date move. So maybe just one little thing to be aware of. Just one more thing, and I know a lot of people are aware of this, but just keep in mind that we have a very, very significant market concentration, and we already have we don't have Mag 7s anymore. We have like Mag 2s at this point. And even though most of these stocks aren't completely falling apart, we live in an algorithm world, and it doesn't take much for them to kind of flip the switch for even just a little bit, even if it's just a 10% corrective move in the S&P. So maybe just something to keep in mind. I'm going to actually turn my camera off because it's distracting me. I'll put it back on later. But I just thought I'd put it on so you guys know that I'm here. So give me just 1 second and turn that camera off. I think that, there you go. Stop camera sharing. Okay, so let's talk about the general gist of what our strategy is all about. When I look at the markets, I typically tend to look at it through the lens of where there's an opportunity, both directionally, but also when is something getting extremely overbought and oversold. And so we'll go into the live market as well. We got a beautiful signal this morning in Apple that I'll show you guys on MetaStock here shortly. But you can see sometimes stocks get extremely overbought and oversold, and we've developed this algorithm, which I actually developed this while I was still working at JP Morgan, along with a couple of managing directors as a side project. And we found out that there's a very specific sort of it's a multiple standard deviation, average true range kind of math, where algorithms start to kind of go the other way. So when something gets extremely oversold, it tends to then bounce. When it gets overbought, it tends to come down. And again, this I'm giving you more examples. The ticker here is not important. I'm just trying to show you what we're looking for here specifically. You can see when something gets extremely overbought, it then tends to mean revert. But again, we're talking about extremities of overbought, not just a little bit, or extremities of oversold, not just a little bit oversold. You can see it here in this particular stock. We got extremely oversold, right? And then we tend to bounce, or at least stop going lower for a while, or overbought, right? And we start to mean revert. And again, it really, this happens to be a stock. It can be an ETF. This is Coinbase here. It doesn't really matter whether it's a stock, an ETF, or a futures contract, or cryptocurrency for that matter. The mean reversions, when something gets overbought and oversold, is real. And so I want to quickly talk to you about John. This is a gentleman that came to me at this point. I think it was about a year and a half, a little bit more, almost 2 years ago at this point, I think. And he was doing very well in the markets, largely because markets were just going higher, and he was passively allocated, and he kind of mistook that for his trading skills. But then what happened, if you look at the top pane here, he made almost $1 million in the first 6 months of last year. And then he basically gave all that back in a matter of, I think, 3 weeks or so was the math. And the reason he was doing it is because he was essentially chart chasing. And I think we're very close once again in that sort of moment in time where I see a lot of people are extremely bullish, not aware that markets can mean revert if only for a few weeks and 5 or 10%. But discounting that, I think, is an extremely dangerous behavior in the markets, and that's typically what tends to erase a lot of profits very quickly. And I know a lot of people don't want to hear this right now, but I'm trying to do my best to kind of point this out through the lens of risk management. So we don't expect markets to fall apart or anything like that, but we do expect more choppiness, more volatility, and ultimately lower stock market returns. And so this is where it kind of comes in, what the strategy is really designed for. I also don't think people have to redesign, the way they trade or invest. It's more about making a small adjustment to what they're already doing to kind of put the odds much more dramatically in their favor. And this gets me to one important question, and I'd love everyone to participate in this. Just a really quick question. Type a yes into the chat box if it is one of your goals to generate an income from your portfolio on a whatever the interval is, whether that's quarterly or maybe even monthly or whatever. Type a yes in the chat box if that's what you're trying to do. Maybe you're retired, maybe you're working part-time, full-time, maybe you're looking towards retirement, and maybe you're 30, 40, 50, it doesn't matter what the age group is. Type in a quick yes in the chat box if it is one of your goals, and that's not the only goal necessarily, but one of your goals to generate an income more consistently, whether that's monthly or quarterly, into the chat box. Let us know if that's one of the things that you're trying to do. And so if the answer is yes, then I think it's important to understand how the distribution in markets work. This is something that institutional investors and particularly hedge funds are very acutely aware of, but I think a lot of retail investors at home are not. So you take the S&P 500 and it doesn't have a very even distribution throughout the year in terms of returns. It's got good months, bad months, and everything in between. And so lots of investors typically look at the market linearly. So they will follow a strategy that more or less tracks the S&P 500, whether they are aware of that or not. And then essentially what tends to happen is their performance mimics the S&P. But if your goal is to have a steadier stream of positive returns, again, whatever that means, whether it's monthly or quarterly or whatever, we think strongly we need to do something that's different than tracking basically directional strategies that are basically tracking the S&P. And trust me, most strategies are tracking the S&P. It's just, in terms of correlation, not in terms of necessarily what they're trying to do, but in terms of correlation. So if you're looking something that's looking for has steadier positive returns, that's not much correlated to the broader market, I think you have to do something different. And I'll show you right now what we try to do. So for a lot of people, their profit and loss curve looks a little bit like this mountain range here, meaning they make money for a while and then they give it all back in a couple of trades. And I'm sure some of you have probably done this before, and it's not fun, of course, right? You do very well for a bunch of trades, and then you give it all up again in just a couple of trades, and it leads to frustration, right? It leads to frustration because we're spending a lot of time and have nothing to show for, or of course we're losing money, which is not much fun either. So that in turn leads to sort of a downward spiral, and you can kind of imagine how that works. And again, I would imagine some of you have probably gone down that rabbit hole before. So when John came to me, again, this is a year and a half, 2 years ago, and he showed me his P&L curve, it was very clear that he was chart chasing. But he wasn't really aware of all the risk he was taking. So I tried to show him, this is again, this P&L curve, he made almost $1 million in 6 months, lost it all in three weeks. And so what I was trying to show him, and what I did show him is how markets actually work. Linear markets go linearly for a while until they don't, and then they might go back and linearly again. But the problem is, at some point they reach points where it really blows up people's portfolios, even if it's just for a few weeks at a time. So right now, I think we're actually in one of those situations, but we need to be aware that once markets go into an extreme, they will tend to mean revert. And mean reversion is where people really get hurt, right? Like right now, I talk to people about this and they don't want to hear it. And I'm sure here to some extent today on this webinar, it's falling in some deaf ears as well. And I can fully understand that. But I think it's a retail chart chaser phenomena, and I'm trying to help people by being aware that that's typically when everyone's complacently bullish, you tend to have a pause at least, right? And again, I'm not talking about, it's not about doom and gloom. It's about the pause that ultimately could refresh, but the pause tends to hurt a lot of people very badly. So it's about a steep steep slope that turns vertical, and that's typically where we get the exhaustion move happening. And that's what I'd like to show you, because our indicator finds those extremities of emotions, and it's finding it now everywhere right now. We're kind of flashing red everywhere. It happens on the upside and on the downside. Now, I would imagine there's a lot of people in here today that like to trade options. Maybe if you want to let us know in the chat box if you're an options person. I want to just quickly demystify something, because I think a lot of people that use options are using short-dated options. And I know this is a bit of a, I'm trying to be respectful. I think it's a bit of a bubble right now. And a lot of people are using short-dated options not aware of the risks. And I'm not saying don't ever use short-dated options. Can't tell you what to do. I just know what happens ultimately in times of mean reversion. People lose a lot of money very quickly, more than they think they can. And so there's this fallacy out there of theta, time decay. And so people being taught to use and sell short-dated options. And that works until it doesn't. And so basically, they played the time decay to theta game. I'm sure some of you have heard that before. Again, the problem is it's a game of musical chairs, and it works for a long time or sometimes a short period of time. But when it stops working, it really, really hurts. And so I'm going to show you the antithesis of that right now of what we do. And I can honestly say it's a much more sane way of doing things, at least, of course, in our view. So I'll show you specifically what it is we're doing, but basically we like to use options credit spreads in a very specific way. Again, we don't use short-dated options. We do this in a very specific way that I think is going to be an eye-opener. Now, our indicator is used to find extremities of emotions in the markets. We don't have to use credit spreads for that. We can also day trade with it. I'll show you this in a minute. But I think the options credit spread is a very good way of using it on the daily chart. So we'll show you this. So again, we're looking for steep slopes that have gone vertical. You can see here a good example of a stock that has gone steep and then it goes vertical. It's the sequence is important. We want to see steep to vertical. That's again when we came up with this indicator when I was working at JP Morgan. It was very important for us to find the steep slope that goes vertical. Otherwise, it doesn't get exhausted. So I'll show you exactly how this works. Let's just get right to it, because I want to show you all the examples. So again, steep slope goes vertical. That's when it tends to get exhausted, whether it's on the upside or again, it can happen on the downside as well. I'll show you that. And that happened this morning in Apple on the downside. I'll quickly show it to you. This is Apple, and we'll look at this more in more detail in just a bit. Look at this chart here on the right-hand side. This is Apple. You can see it right there. It got exhausted. This is intraday, and then our arrow sprinted. You want to look at the last arrow here. This is where the signal comes in, and Apple's been basically going up ever since. So we got extremely oversold. So I just thought I would show you that again. We'll look at this again in more detail shortly. So this is not something that has to be done on daily charts. It can also be used on the intraday charts. All right, so let's continue and start looking at this. So basically, what we like to do is we like to look for again these extremities of emotions when stocks or ETFs or futures are extremely overbought or extremely oversold, because it basically means that the upside is limited, or if it moves to the downside is limited, and so we tend to see mean reversion. Let me show you a couple examples. So here's Meta Platforms, formerly known as Facebook, and you can see we had this steep move to the upside within those two parallel blue channels, two lines, and then every once in a while it would go vertical here and here and here. And when it goes vertical, it ultimately would mean revert, right? But we're not even betting on mean reversion. All we're saying is at some point it's going to stall, consolidate. And that's really where the high probability move starts to happen. Now, I can show you this on the next line chart here. This is the same chart that I showed you a second ago. And you can see here, we once again had the situation where Meta moved to the upper end of its channel. It got extremely overbought. And at that point, there's several things we could do. We could, if we own the stock, maybe we could take some profits. If we want to be more aggressive, maybe we buy a put, or we buy a put spread, or we short the stock. The problem if we do a directional trade, of course, is that we have to be right in terms of directionality and in terms of timing and in terms of magnitude of the move. So when you get to this point here, and if we short the stock actually has to go down, or we buy a put. Like in other words, if it doesn't go down, we don't make money. But I'd like to show you a way that we like to do this, and which means we don't have to be right on the stock's directionality. It could also just go sideways or even against us to a pretty good degree, and we can still make money. So it just dramatically improves the odds of us making money. So in this particular instance, and this is a historical example, we'll go into the current market here in just a few minutes. But what we did is we just set the stocks overbought. We didn't say it has to fall apart. In this case, it did go down, and that's nice, but it doesn't have to. I'll show you in a minute other examples. And so what we did in this specific example is we used an option strategy where we sold an option at the 125 strike level. That's this blue line here that I'm circling. And then we bought another option against that because we don't like to do naked options trades. And we ended up receiving $1 deposit in our broker account. That means $100 per contract, or $1,000 deposit in our broker account if we would have done this with like 10 options contracts. Now, again, in this case, you can see that the stock did actually go lower. So February 8th, a few days later, that spread was reduced down to 24 cents, which basically means we were able to pocket the difference between $1 and 24 cents, meaning we made $76 per contract of profits, or $760 of profits with 10 options contracts. But what's good about this is that we didn't need to be directionally correct, meaning we could have made just as much money if the stock just went sideways, or even if it went against us over time, right? So that's really important. Now, what's really crucial about the way we use options for this is we don't use short-dated options. And I know this is right now, it's kind of the antithesis, and a lot of people don't want to hear this right now. So if you're kind of tuning out right now, you don't think this is important. You know, having done this 26 years, I can tell you this is typically right around right now in this market environment is kind of where people start making really big mistakes using short-dated options. And so what we like to do is, you can see that at the time we put this trade on was February, but you can also see we didn't use February options, we used April options. So we didn't use February options, we didn't use March options, we used April options. But also note that we only held this trade for a few days. In fact, our average holding period for this trade is like 14 days. So it's basically the complete opposite of what people do. Most people use short-dated options and hold them to expiration. That's typically what they try to do. Or they use short-dated options and hold it for, you know, a few days in hopes of, which is basically a gamble. What we like to do is we like to use options that expire between 55 and 85 days out, but we only hold the trade for 1 to 2 weeks, right? And that gives us a completely different probability. We have about an 85% probability of having a winning trade. So you have to think about this in terms of probability, not in terms of risk versus reward. That's the wrong way of thinking about it for this. So I'm sure some people are probably thinking about that right now. I'll show you guys this in just a couple of minutes. So this is going to start to make a lot of sense for you. I'll show you another example. This is a bullish example, meaning where the market got very oversold. So this happened during COVID. And again, we're going to go look at the current market here in just a second. So this is just a couple historical examples. You can look at the S&P 500 SPY ETF. So this is during COVID. I remember it very well. It was March in 2020, March 16th. I walked into the office that morning, and we had our morning meeting. And what ended up happening is we saw that the S&P was down 30% in 3 weeks. And so we just weren't willing to buy the S&P at that point, but we were willing to make the bet that after a 30% drop in 3 weeks, that the S&P 500 would not drop another, I think almost 20% on top of that 30% drop over the next 1 to 2 weeks. That's the only bet we made. So what we did is we sold an option way below the market. Like in March, on March 16th, we used June options. And we do that because we don't get hurt as much if we're wrong. In fact, we hardly get hurt. In fact, we can even still make money if we're wrong. So we sold a 190 put. We bought a 185 put against it. We received $105 per contract deposit in our broker account as we opened the trade, or $1,050 deposit in our broker account if we would have done with 10 options contract. And you can see if you fast forward just, I believe it was it 8 trading days or 6 trading days? 8 calendar days. On March 24th, if you look carefully, the S&P 500 was trading at the same exact level 8 trading days later, 8 calendar days later. And we were able to close this trade for a profit of 11.4%. Now you're asking yourself, Serge, how the hell did you make 11.4% if the S&P just went sideways using options that are expired that far out? It's all in the combination of implied volatility, some directionality sometimes, and even a little bit of theta, although that's almost negligible. The point is, by using options that expire 2 weeks out, between 55 and 85 days out, but only holding the trades a maximum of about 2 weeks, we completely flip the odds in our favor. So that's a really big point to us. I'm just going to skip fast forward because I want to go right to the strategy. We'll start looking at the current market here right now. And if you guys have some tickers you want to look at, please let me know. We'll go through them. I scanned the market this morning, and I have one trade that came up this morning on MetaStock that I would like to show you. So stay tuned for that. In fact, if you paid attention, I already showed it to you before indirectly. So I'll show you what this looks like and what it scanned this morning. So I'll reveal those results to you here in just a second, and I'll give you an actionable idea. But just quickly, before we go into the current market, here is just some daily tickers. Again, this is Airbnb, got overbought, and we're going to go into the current market in just a second. But just so you kind of see the concept, when it gets extremely overbought, this is not about a little bit overbought. We're talking about extremely, like disgustingly overbought. Our indicator tells us that it's overbought. And then what we tend to see is mean reversion. You can see here in Airbnb. Here in Nordstrom, JWN, it gets extremely overbought and then it goes down. So at that point, we could buy a put, we could do the credit spread that I just mentioned about, short stocks, whatever we want to do. Again, we like to do the credit spreads on the daily charts. That's what we like to do. Intraday, we do directional trades, which we'll talk about in a minute. Here's Southern Company, got extremely oversold. We get the arrow and the stock goes up, right? Or we do a bull put spread. Again, depends what you like to do. Here's the exporting goods, extremely overbought and then mean reverts, right? It's the arrows we're looking for. Here's gold, GLD, gets extremely overbought and it goes down, oversold and goes up. So Foot Locker, extremely oversold and it starts to go higher. And all we have to do here is either we could buy a call, we could sell a bull put spread. That's what we like to do on the daily charts, and so on and so forth. Here's another stock that's extremely overbought and it goes down. So let's go into, I want to go into the current market so you guys can see how this works. And again, if you have some ticker symbols you want to look at, do let me know. I want to just quickly look at some intraday stuff because I know a lot of people like to look at intraday. So let me just go back to what I showed you here a few minutes ago. on Apple. So this is, we'll talk more about intraday in a minute, but I want to quickly show you this. The computer algorithms right now are flashing, our indicators flashing to us a lot of extremely overbought stocks right now. And right now you can see Apple. This is a live chart right now in MetaStock. And you can see Apple this morning got extremely oversold. It since has bounced quite a bit. So when I see that, I can buy a call, I can do a bull put spread. This is an intraday chart. Typically intraday, I like to do directional trades. So in this case, I would have just bought a call or bought the stock, right? So that's intraday, and I'm happy to show you more of that here later. I'll look at some ticker symbols that you guys want to look at, but I'll start off with one here that I already brought and prepared. It's the ticker symbol is ROK, ROK. And ROK is Rockwell Automation. And you can see we recently got a oversold signal right there at about $250. The stock then rallied up to 300 over the course of a few weeks. So all we have to do is when we get those signals, all I have to do is either, again, I could buy a call, I could buy the stock, or what I like to do is I like to put on a bull put spread way below the market so that I could make money whether the stock goes up, which in this case it did, whether it goes sideways, or even if it were to go down a bit. Okay. So that's kind of what we like to do. So as soon as that arrow shows up and we have one of those bars without an arrow, that's where we put on the trade. DD, put that in, that is DuPont. Let's have a look. On the daily chart, we had oversold signals. Okay, we had a couple of them. We had an oversold signal there in November. Again, you can see the stock then moved from whatever 66 up to 76. That's $10, and I could have just sold a bull put spread here, right? In which case the stock didn't have to go higher for me to make money; could have just gone sideways. Same thing here, right? We need a day when the arrow is no longer printing. So that day right there is where we would have put this trade on. Could have bought a call. Could have bought the stock. Again, our time frame is about 2 weeks. So if you're wondering right now, what's the time frame? It's about 2 weeks on the daily charts. Intraday, it's half an hour. But this is a daily chart. So 2 weeks later, after this trade triggered, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. At 10 trading days, the stock went from 61 to 67. So that's like what, a 10% move. So are you guys starting to see how this works? Dell is another one. Okay. Dell, DELL. We had an overbought signal here. I'll zoom in a bit. Just a few days ago, and the stock went from 124 to like 106. So when I on that day right there where the arrow no longer prints, that's where I could have bought a put. I could have sold a bear call spread, meaning I could have sold a call above the market, bought another one against it. And all we have to do is keep it on for 1 to 2 weeks. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this is where we would have been out again at the latest, right? 10 days. That's two weeks, two trading weeks. WDC. Western Digital. Okay, let's have a look. Okay, a couple of them. We had one here. Again, fast forward 2 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This one here, the stock was a tiny little bit higher. So if I would have sold the bear call spread, I probably would have made money because it didn't go anywhere. It just went sideways. This one here, that just triggered what, a couple of weeks ago. The trade became valid there. So 10 days forward, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right. So the stock would have gone from 64 to 60. That's what, or 59. That's not quite 10% lower. We typically use options that expire between 55 and 85 days out. Trade Hunter. Intraday, I use options expiring, anywhere between, 2 to 3 weeks. I don't like to use short dated options, even intraday. I don't use like daily options or weekly. I think personally that's not my thing. I know some people like to do that. So, by all means, don't take that as something that I'm telling you not to do. It's not something I do because I know ultimately what the risk reward is on that over time. Are you guys starting to see how this works? Does it kind of make sense? On Bitcoin stuff, yeah, let me just quickly show you. Like, I know one thing, I can show you this here. I'll show you this on our platform just quickly here. So this is the BITQ ETF. It's the Bitwise crypto ETF. You can see how it gets extremely overbought, and then it just collapses. Bitcoin and those Bitcoin things, they tend to mean revert sharply. So you can see here when we got the overbought signal, it collapsed 45%. Or this is a late December of last year when we got the overbought signal, it dropped 41%. So at that point, I could do a bear call spread, right? So sell a call above the market, buy another one against it, or I could just buy a put. Again, it depends how aggressive one wants to be. I typically do credit spreads. That's my thing on the daily charts. If you feel like you need to be more aggressive, I don't want to keep you from that. I just be aware that you're being more aggressive. Palo Alto Networks, and we'll go back to trading to MetaStock in just a second. Palo Alto Networks got extremely oversold in mid-February, so about a month ago, and then it ended up rallying within a few days 27%. So I don't have to keep it 2 weeks. If it rallies 27%, I can get out after a few days. 1, 2, 3, 4. After 4 days, I mean, that would have been already a beautiful trade. It could have sold a bull put spread or bought a call, whatever floats your boat. PRGO, let's see here, PRGO, this is now, we're back on MetaStock. Perigo, okay? We had an oversold signal there. So again, the signal became valid right there on the first day when the arrow is no longer there. Let's have a look. All we had to do is sell a put below the market, buy another put against it, or buy a call, right? And the stock went from 26 to 31. Pretty straightforward. Jeff wants to look at, or John wants to look at SMH. What's the time frame on SMH, if I may ask? Is it a daily chart? I can tell you there is no vertical X Pro right now signal on SMH on the daily charts. I don't know if he wants a different time frame, but on daily charts there's not an SA. It's been consolidating. The SMH gone sideways now for a few weeks essentially for the most part. So there's not a vertical X. There's overbought signals in individual names. And I'll get to one. I'll give you one, John, in a second. Okay, so I'll give you one in just a second. Akamai. All right, Akamai. Let's see, daily chart. We had an oversold signal there, so it becomes valid right there in that first day. Then the stock went from 107 to 113. Again, 10 trading days is the most. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Would have made money, right? Sold a put, buy a put below the market, or buy a call, right? Again, however aggressive you want to be. I personally like credit spreads on the daily charts, but that's just me. EL, that is Estee Lauder, I think. Let's have a look at Estee Lauder. Here we go, and then we'll look at some intraday stuff. No, then I'll show you the current, the one that we just got today. Estee Lauder, we had an oversold signal. It's been a while now. Last November, we got one right there. Again, the trade becomes valid on that first day, with where the arrow no longer shows. 10 days forward, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So stock went from 100 and what is that, 109 or something up to into the 120s. So $10. Could have sold a bull put spread, right? Very straightforward. Yeah. Manhattan Associates. That's from Jennifer. All right. Let's see. Okay, Manhattan Associates. We had an overbought signal, Jennifer. This is for you. Again, could have sold a bear call spread. The trade becomes valid there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days later, the stock went sideways. If I would have bought a put, that one would not have worked. If I would have sold a bear call spread, I would have made money because it just went sideways. Remember, with the credit spreads, we make money whether the stock goes down. Certainly, if it goes sideways, and even if it can go against us, it goes against us a little bit, we can make money. You see that, Jennifer? Let's go back to the slide deck because I want to share with you a stock that just flashed today. I promised you that I would show you that. So intraday, you know, we can look at this in all sorts of things. It works on futures and individual stocks. I showed you Apple. So the scan runs today, and today we came to Micron Technology. This is just today when I ran it on the exploration function on MetaStock MU. Okay, so let me show you it live. Here, let me quickly go through it. Here is MU, so you can see it. I'll show it to you on the daily chart. So whoever was asking for semiconductor stocks before, here is MU. Let me quickly find it. This is right now, today on the daily chart. I need to zoom out so I can share it with you. Here, okay, if you look at all the way to the right, MU today is giving us an overbought signal on the daily chart. Again, we still need a day when the arrow no longer prints, but right now today, for I think John Marting was asking before about semiconductors, this is a semiconductor stock, and it's telling us overbought. Again, we still need a day without the arrow, but it's a warning sign. Is that helpful, John? I don't know if he's still tuned in. Maybe he left after we showed him SMH. So that's what's going on. Make sense? All right, cool. So listen, I hope this is helpful and you guys can kind of see how this works. I mean, the beautiful thing about scanning for this in MetaStock is that literally all I have to do is go into the exploration tab up here. I like to run this on optionable US equities, or you can do it on whatever, right? And that's all I did. I hit the start exploration button and it spat out MU today. Apple is an intraday example. Literally right now, this is live. I couldn't make this up if I tried. So hopefully this makes sense. Now, if you guys like this indicator, I'd like to make it available for you. Again, it works on MetaStock. It works on other platforms as well. I can talk about that. But let me just quickly show you this. You know, to me, when it comes to trading and investing, it's all about having a process. And so what I can do, I can give you access to this indicator. Again, it works on MetaStock and other platforms as well. It's got an extremely high winning rate when we take the qualified signals. And you know, I think we go through great efforts to share with you our process, and so we give you access to training videos, and we do lifetime monthly member webinars. But this is not just about education; it's also about giving you an edge in the market. So we'll give you access to the Vertical X Pro indicator, which is what this is for life. It's a lifetime deal, and we've been able to partner with MetaStock, and Jeff and his team have done a wonderful job making this available there and on other platforms as well, as I said. But to me, you know, what makes this indicator so reliable is that it's all about a process. I know a lot of people get confused when the market does one thing or another, but at the end of the day, the repeatability is what gives us confidence, depending on whether the market goes up or down or sideways, right? So it's really crucial for us to be able to have a repeatable process. Again, I'll show you this indicator. I showed you a MetaStock. It also works on other platforms, like if you have Thinkorswim, i.e. Schwab, TradingView.com, and NinjaTrader, and other things as well. But of course, we're here on the MetaStock platform, so we wanted to show you that it works on MetaStock, and it's super simple. Again, all I have to do in MetaStock is go to the exploration tab and basically load the vertical X indicator and hit go, and it gives us the overbought and oversold signals for that day. But to me, what the Vertical X Pro is really designed for is give us the highest probability trades in our view where the markets are the most extreme overbought or oversold, whether that's stocks, ETFs, futures contracts, cryptocurrencies, and then we can use options or use the underlying. That is of course up to the individual users. We will teach you our option strategy as well, and so we give you lifetime access to all this. To me, I don't like to sell things to give people access just for a month or a quarter. Everything's lifetime. So I'm going to give you a link here where you can become a lifetime member of this for an unbelievably great discount here. You can see what Dave wrote to us. He says that if you really follow the rules, you can make good, steady income. That's the words of Dave. And other people, you know, they love the indicator, they love the strategy because it's so repeatable. And again, I think the repeatability is the most important part. I will just say quickly before I show you the great discounted price here for lifetime. I don't think this is for people who are in the markets for entertainment. Like for someone who's in the markets and doesn't really care whether to make money or not, this is probably not their thing. But for people who are serious about it, who actually do take their money serious, who don't want to blow up their account, who really care about their money, want to make money over time, I think this is really who this is designed for. And really, it's about turning our strategy into a repeatable and income machine. It's kind of how we look at it, right? So that's how this works. So let me kind of show you how this all works. Okay, so if you break it all down, first of all, you get lifetime access. Everything's lifetime here. So this is none of this is only a month or a quarter or a year. It's all lifetime access for a crazy 50% off. You get access to our trading course, all about how to use this pattern and how to use options for this. You also get access to our twice monthly for life members webinars where we give you live actionable trades every single month. We give you access to the vertical export indicator. That's the indicator I showed you here today for life. It's available for multiple different platforms, including, of course, MetaStock. So you can use it on Thinkorswim and other platforms that are listed here, and MetaStock as well. You also get an Iron Condors course, and the regular price for that is $797. We're going to make it available here for MetaStock for 50% off, so that's $397. And the link for that is metastock.com/SteadyTraderA. It's in the chat box. Jeff, thank you for putting it into the chat box. I'll give you a phone number as well that you can call. Again, this is all lifetime access. You never pay this again. It's not a monthly thing. It's not a quarterly thing. You own this for life. And we do member webinars twice a month, which I'll talk more about in a second. The phone number, if you have any questions or if you want to order by phone, you can call the guys at MetaStock. It's 800-882-3040. I believe Jeff also put that number into the chat box, 800-882-3040. So if you want to call, if you have more questions, and call their capable team, you can do that as well. So, I feel very special and lucky to be able to partner with MetaStock on this and also making it available on their platform. We also have a chat room, so if you like to use this on an intraday basis, even, I do share live charts on an intraday basis as well in the chat room as they come available, or if something really interesting happening on the daily charts, and we have discussions taking place. It's on Slack, our chat room. So if you want to use this on the go, you can load it. You can load Slack. It's at the chat software, chat app. You can load it on your phone, on your tablet, on your laptop, computer, whatever. So you can always be tuned in. It's beautiful. Again, we do twice monthly members webinars. The next one's tomorrow. So you do have to actually sign up today in order to come to the member webinar tomorrow. We always record this. So tomorrow is March 26th. We can do it at 10 a.m. Eastern, 7 a.m. Pacific. And if you join now, you should be able to you will be able to get access to that. We'll give you a live trade tomorrow as well. So that's all happening. Tomorrow. Again, the link I quickly share. I want to share with you again. It's metastock.com/SteadyTraderA, and you can join that, or of course you can call 800-882-3040, and if you want to join us tomorrow in the members webinar, again, we do it twice a month, right? So this is for life. We give you a live actionable trade. So tomorrow, I'm going to give our members a live actionable trade. Don't be surprised if it's MU. I'm just saying it's one I just showed you a second ago. Thank you, Sean. It looks like you enjoyed the presentation. Let's see here. Yeah, Trader Hunter, you're asking great questions. We're going to cover exactly how to use the indicator tomorrow in the members webinar. So, you're asking a great risk management question. That's exactly one of the things that we focus on in the member webinars. Again, it's twice a month. Every single month we do it live. I go through a lot of effort and energy to make sure everyone understands it, gets the most of it, gets a trade idea or two. We also give you live actionable day trades. So, I mean, today I just gave you or showed you one in Apple, right? And again, I couldn't make this up if I tried. This is live right now. That's the kind of stuff we do in the member webinar as well. So, if you like using a repeatable process and a straightforward process and something that's understandable and repeatable in different market environments, that's what the Vertical X Pro is designed for. And again, we're happy to be able to have partnered with MetaStock here to be able to make it available there as well. Yes, the link is in the chat box. Jeff put it into the chat box, Sean. Doug, not necessarily. You're asking a bit of a detailed question. It's a good question. Not necessarily. It really has nothing to do with the intraday timeframes and the daily timeframes are to be kept separate. There's really no correlation there, to be honest with you. But again, that's the kind of stuff we talk about in the member webinar. So if you want to join in the member webinar tomorrow, I'd be happy to go into more detail on that. But no, there's really not much correlation there. You're mixing timeframes, right? I mean, again, MU today on overbought on the daily chart really means nothing on the intraday, right? Like Apple, oversold intraday means nothing on the daily chart either. So, that's the beauty of using this indicator is that, whether you want to use it for day trading or on the daily charts, it's just a different time frame. So, listen, that's all I had. I'm going to put my camera back on now that I don't get disturbed anymore. I don't know if there's any more questions or anything, Jeffrey, that you want to go through, but I hope this was helpful for everyone.
Yeah, I think the only question we really have is something I wanted to reiterate because it's come up a couple of times in questions. But when we're looking at the signal, we want it to stop printing before we take action. Correct?
Yep, exactly. Okay. So like let's go into Apple today, right? So it prints. This is the 5-minute chart, right? So it's the same idea on the daily chart. So it told on that first error, it said, hey, be careful. It's getting oversold. Second candle, not an actionable candle yet. Be careful, it's still oversold again. And finally, boom, on that candle right there, that's where it became actionable. That's where I can buy a call, I can buy the stock, whatever floats your boat, right? Everyone's got a different risk profile. And then on the daily chart here too, we now need with MU, we now need a day without the arrow printing. Maybe that's tomorrow. I don't know. We'll see. Right, but it's a warning sign now. The indicator telling us be careful. It's getting overbought. That's the way to use it.
Serge or Sean wants to know if you trade naked charts.
I have no idea what that means. I saw the question.
Without indicators.
Oh, without indicators. Look, I'm a macro guy. I use indicators, yes, but it's there's other stuff to look at as well. I always have a helping tool, if that's what you mean, whether it's depends on the time frame, whether it's looking at rate of change of inflation on the longer term time frames, or like on investments, or whether it's Vertical X Pro, on these time frames. I mean, I always have an indicator. It doesn't mean I'm going to make a decision only on that. I use a lot of different things to make a decision. But the Vertical X Pro is actually one of the few things that I use that is purely based on that indicator. So like the Vertical X Pro, I will take those trades regardless of what happens anywhere else, like just on that indicator, because it's that powerful.
All right. Let's see. What are the platforms that you support again?
Obviously, MetaStock, right? Then you can use it on Thinkorswim, which is Schwab. It can be used in TradeStation, NinjaTrader, TradingView.com, Wealth Charts, and we have our own cloud-based version as well that you can use as well for swing trading, not for day trading, but for swing trading. So those are the platforms.
All right. And I want to reiterate, if you just buy it for one platform, you own it for everything. And that includes
You do.
your lifetime access.
So like if you have MetaStock, which I'm assuming a lot of people here have, and you want to use it for some reason because your broker is something else, you can, if it's available there, you can use it there as well, for sure.
Serge, I also like to trade fully clothed.
You do? Yeah, me too. I had never heard you trade naked charts. I mean, it makes sense actually now that I think about it, naked charts. But
yeah, I didn't understand what that meant initially, but maybe 3 or 4 months ago, I learned exactly what that meant. So, in any case,
cool.
All right, Sean, I don't understand your question about steady trader ? But yeah, I don't know. All right, Robert says, yes, I love your products. Thank you, Serge. And Sean says, thank you, Serge. So I just love how easy this is to use. I want to stress, I love the fact that it comes with the course, scanning sessions, the indicator forever, the just everything that's included. It's great. Thank you for putting this on MetaStock and making it available for us.
Well, thank you for allowing me to make it available. I think, with MetaStock, you guys have quite a global audience, and we see every time we get the chance to talk to your clients about the indicator, how much they I guess appreciate the platform and the indicator because it's just easy to use. Like there's really no second guessing, right? And it's extremely repeatable, and I think to me, it's all about the repeatability, right? That's why I think it's so nice to have it on MetaStock, where it is extremely easy to use. I mean, really is in terms of finding the trades every day, right? Like I just showed you guys. So
very cool. I love the fact that I came up with the exact same stock you did with my scan. So
yeah, that's awesome.
I could go ahead and kind of go through this here a little bit more. Thank you for joining us. Thanks for spending some time with us.
Yeah, thank you. Yeah, it's I didn't think I mentioned it. It's $397 for life, right? That's it. It's not an annual. It's not a monthly. It's like that's it. You own it for life. And again, the next member webinar is tomorrow, so you do want to sign up before then. That would be my
today. Yeah. So we can get the information over and get everybody organized. So
yeah, that'd be great.
All right. Thank you, Serge.
Thank you, guys. Appreciate it. Take care.
Cool. Go ahead and do this. Let's do this. Yeah, and here is, just in case. Let me go ahead and make me the presenter here. I'll go ahead and show my screen. Here is the scan. I was actually getting ready. I ran this exploration. It's like, hey, I'll show how the scanning works, how easy it is to use. Because if any of you know me, one of the things I love to do is scan. So the ability to go through. In this case, I only ran a scan on the S&P 500, the Dow, and the NASDAQ 100, just to kind of keep things synced. But the exact same stock came nearing the overbought area, exact same reading. So there you go. There you go. Let me go ahead and show us this out. Actually, let's go ahead and open up macro. There's a couple of other things that I want to kind of point out. Actually, since we have a little bit of time here, this right here is going to pull the victory chart. What I'm going to do right now, though, is apply the template for Vertical X Pro. So let me go ahead and do that. Go ahead and click on that. That's going to attach the expert advisor. And then I just want to show you an example of kind of how the commentary can help you put some of this together. So as soon as I do that, you see the big notification here. It's not a sell arrow yet. What it's telling you is it's nearing an overbought area. So if I want to kind of go in here a little bit more and kind of explain what that means to you, I'm just going to go to the expert commentary. You can do that yourself as well. If I click on the expert commentary, it's going to actually kind of analyze the last bar. I can move forward in time. I can move backwards in time. The expert advisor and the commentary is an incredible tool to help you understand kind of like what's going on in the market. But in this particular case, I'm going to go ahead and zoom in a little bit so you can read along with me if you want. I'm going to skip kind of a little bit here to just kind of the information that it gives you in relation to this. So the Vertical X Pro indicator currently showing that Micron Tech is near overbought. The signal will only be valid if the next bar's candle no longer prints a dot. Additionally, either the first day without a dot or one of the subsequent 3 days following must be a down day with a close of 1.5 to 3% lower than the previous day's closing price. This confirmation day is crucial for the proper use of Vertical X Pro indicator. So kind of spells out everything, kind of like what it's looking at, kind of tells you exactly what we're looking for next. If we do get a signal on that, it kind of gives us more instructions in terms of what we can do, that kind of stuff. So, all right, very cool. Let me go ahead and do this real quick. Let's just go ahead and kind of swap gears a little bit. So as Serge kind of talked about, Vertical X Pro is normally like all the stuff that he includes with the training, the weekly sessions, I think the twice monthly sessions is what he said. Normally everything there is $3,970 with all of that training. And I do love the fact that it includes the course, everything you need to get running, the options made simple, the classes, all that stuff is included. It's only $397, and we do back it with a money back guarantee. So you can try it out. Give us a call, 800-882-3040. You can go to metastock.com/saleschat, or you can go to metastock.com/steadytraderA to get it there. So Sean wants to know what brokerage I use. I was a TD Ameritrade customer, and they sold me to Schwab, so I use Schwab right now. So not a recommendation. I don't think I'm actually allowed to do a recommendation about brokerage, the way that licensing and kind of the strict requirements. So not recommending Schwab. I used to be a TD Ameritrade customer, and then I just did my Schwab. Are you in that scenario? Are you now a Schwab customer against your will? Let us know in the comments. I'm kind of curious. So in any case, the Vertical X Pro is part of the Summit Action Pack. So with it, you'll get Vince Vora's Victory Method 2. You'll get the Power Bundle 360 and the Super Signals and Trade Radar, all of that. You'll get 3 months of the Buff Dormeier's Analysis Toolkit. Buff started this out today. Very, very cool to me. The fact that he just got the 2 ETFs going. He won a Dow Award. You'll get 3 months of his analysis toolkit as part of that. You'll get Vertical X Pro for life. You'll own it forever. You'll get Oscar Carboni's training. He's coming up right after me. He does a really good job of chart analysis. That's what his training really focuses on. You'll get 3 months of Learn MetaStock and Unleash the Power of MetaStock. So really, really good deal. The value on all of this stuff, $6,528. As part of Victory, we're also going to throw in Winning Momentum Systems and Veracity. You'll get the new version. Very, very, very popular products here that we're kind of talking about. So normally $6,528 here at the show, $2,436. You can do it at metastock.com/summit deal. I can't tap and talk at the same time.
Hey, Jeff, can you hear me?
Yeah, I can.
Your chart actually says 2.436, so $2.46. I don't know if that was your mistake or mine, but just for clarity's sake, you might want to comment there.
Oh, oops. I don't know. Maybe it just happened to that side too. I haven't noticed that yet. Are you happy?
I'm happy. Thank you.
Okay, cool. It is a link right now.
Since I interrupted you, should I introduce you?
You can. I'm going to go ahead and type in like all the wonderful ways we can contact you, or they can contact us.
Okay.
Right, go ahead.
Okay. Excuse me if you're getting feedback on this because I didn't check this mic. Hey, first of all, thanks for everyone who watched this morning. We had a little technical difficulties. Fortunately, which is to say the bandwidth in this studio wasn't working very well. May not be working very well now. This may be crap, but hopefully it is. Wanted to say Jeff's been with our group for a really, really long time. He's a very good presenter, and if you've been watching this, you know he's just a pleasure to be around, to listen to, and he's exceptionally knowledgeable. And I know you're going to enjoy what he has to say today about the power tools of MetaStock.
Cool. All right.
Was that nice enough, Jeff, or is there anything else?
That was great. Thank you, Greg.
Okay. Break a leg.
Very cool. Thanks, Greg. All right, let me go ahead and do this. Before I start, I do want to say thank you to Stocks and Commodities Magazine. Again, Stocks and Commodities has been such a valuable partner over the years. 31 years in a row. Well, they've been publishing since 1982, have 1.3 million subscribers, 17,000 articles. And if you're watching this on YouTube, you should go to metastock.com/traders-summit. And there you go. All right, very cool. All right. Sean says that he's had some issues, like you can't use Schwab and the new TD Ameritrade is a little bit rough. I wouldn't say that using Schwab has been painless either. I think they bit off a lot, and I'm not necessarily unhappy, but I wouldn't say that they haven't had some growing pains along the way with quotes not coming in at certain times and stuff like that. But again, we didn't have a choice. So anyway, let's go ahead and kind of move over here. And actually, there's some things about Schwab that I kind of like kind of some of the screens that they've got. Anyway, we're not here to talk about that. Plus, I'm actually supposed to be careful when I think some of the requirements that they have on us are we're not supposed to talk about brokerages. We're not supposed to recommend or endorse brokerages. We're not so I'm just going to move on. We are MetaStock. Today, we're going to talk a little bit about some of the things that are hidden in MetaStock. But one of the things, if you don't want to do like the full summit action pack, one of the things that we are offering is our software on an extended trial. So I've been using MetaStock for, I think it was 27 years this year. And that's how long I've been here. When I started, I didn't know what a stock was. And this has been such a great job for me. I'll talk a little bit more about that in a second. But 31 years in a row, it's been rated #1. I love the scanning that's in there. I love the ability the opportunity to test trading ideas, the forecaster. There's a lot of software that's kind of come out that doesn't have as many features or systems or methodologies. And there's a reason MetaStock's been rated #1 31 years in a row. And if you want to do an extended trial, what that is the pricing for MetaStock starts at $59 a month, $69 if you're here in the US. If you pay for a month, we'll give you a second and third month for free. And I'd recommend you do that. I wouldn't trade without it. I run scans every single day that I trade, and sometimes multiple times. And it's just, for me, that ability. I've been here for 27 years. And there's a lot of stuff that you can use to learn about the markets, to learn about candlestick patterns or MACD or stochastic, anything that you want. But that ability for me to go in every day and just say, hey, show me stocks I might be interested in and find them, just makes that process so easy. And so anyway, you can take advantage of that at metastock.com/traders-summit 341. And you can also call us and all that kind of stuff. So today, what I'm going to talk about is some of the hidden gems of MetaStock. So as a software that's been around for a while, there's a lot of stuff that's in there. And I think that's a really, really good thing. I see a lot of software out there that just has a few things that you can do. They don't do a lot of anything. And there's just such depth. We've been working on the software for now, I think it's 33 years. And every time we come out with a new version, we include more things that are in there, whether it's like an expert advisor that'll talk to you about candlesticks or, explain the MACD to you or, scanning for different fun things. All this stuff it's a product that I think you as a user won't grow out of. There's a reason it's been rated so highly for so long. And for 10 years in a row, it's been rated #1, or 31 years in a row, it's been rated #1. But most of our customers have been with us for decades. And I only think that that's something that you keep paying for month in and month out because it's helpful for you. But a lot of our customers have been with us for decades. If you've been using MetaStock for a while, let us know in the chat. Say hi, I'm interested. But what I want to talk about today, I better get on point. I only have 45 minutes left, and I'm still at the intro. But what I want to talk about today is some of the things that I found very, very helpful over the years. I call them hidden gems of MetaStock, and I've run this into a series, but I'm going to start with kind of some things that are in MetaStock that if you've been using MetaStock for a while, you may not be aware of. So there you go. Anyway, before I start though, I'm a guy on the internet. I'm not going to recommend that you buy anything today. Today's demonstration is designed to instruct you on using MetaStock in the company software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock does not endorse the purchase of a security, nor is it paid for the promotion of a security or a brokerage. Maybe I'll add that today. No information contained in the presentation should be construed as an investment advice or the solicitation to buy a security. So there you go. All right. If you have questions, every time I look this way, I'm going to be looking for questions. If you have questions, I'll try and keep up with them. I've already kind of talked a lot about the history of MetaStock. I'm not going to talk about this one. I do want to talk a little bit about how I got started in MetaStock. I remember actually I was selling outbound. I was calling people during dinner, preferably, but I was telling people sprint long distance, and I had a buddy of mine who said, hey, I've been working for this company, MetaStock, and you know what? That's a great little company to work for. You should come and get a job here, and the software is really cool. It's like, well, that sounds interesting, so I applied. And then I didn't get the job promptly, but I really did like the company. And so I followed up quite extensively with them, with the sales manager. His name's Kevin. Kevin's going to speak a little bit later, but I eventually convinced him that he should give me a shot. And I've been working here as of, I think, actually just a few days from now, it'll be 27, maybe 28 years. I had to look at LinkedIn to check. But in any case, been a great company to work for. I started in inside sales. That means if you had questions, you could call, you'd ask. I'd talk to you a little bit about what you're doing, what you wanted to improve with your training and trading. And it was a good, I love working here. It's such a friendly environment. After that, I've worked with people that are kind of in our business development. I've kind of made inroads to make some great friendships with different experts that know a lot about more about trading than I do. Most of them are speaking today, or a lot of them are speaking today. But I've learned a lot as a trader. I didn't even know what a stock was when I started. And so there you go. I think that's enough. I mean, the one thing I do like to talk about is the fact that it's been rated for 31 years in a row. Now, we're not going to talk about Rahul Mohindar just yet. One of the things I actually want to talk about is finding breakouts. So one of the lessons I've learned from one of the people that spoke earlier today is Vince, just a couple of sessions ago, is he likes to find stocks that are breaking out on all-time highs, or he's looking for stocks that are breaking above support or resistance, and those are stocks that he likes to find. He always says, and in the training that he did for the boot camp for Victory 2, he's like, I love finding stocks that are at an all-time high because it means there's no more resistance above me. So one of the things that I wanted to show you first is a methodology that we've got built into MetaStock, a hidden gem, if you will. That's a breakout system. So if I'm looking for stocks that are breaking above support or resistance or breaking through a trend line, how can I do that? And so the first thing I want to do is actually show you how that works. So I'm going to apply a template to this chart. A template is just a collection of indicators. And this is actually one that I put together for this tool. I didn't create the coding behind the code tool. I just thought these indicators should be available as part of a template. And so I put it together and we started including them in MetaStock. So we can do this with Micron. That's fine. What I'm going to do is I'm going to apply a template. And what I'm going to do is the name of this template that we created, it's called Dynamic Trading Tools. So I'm just going to scroll down a little bit. I'm going to find it right here in my list and go ahead and click on Apply. I'm going to go ahead and close. No, we don't need to save that. I'm going to go ahead and close this commentary as well, just so we don't need it right now. Okay, and then what I'm going to do is I know that a lot of the lines are a little bit small if you're on the internet and you're kind of looking at them. And so what I'm going to do is kind of just make them all a little bit fatter. And with MetaStock, it's easy to do. I'm just going to click on the line. I'm going to make the line a little bit fatter here. I'm going to go ahead and click on Apply, and there you go. Okay, so you can see that one. I'm going to make this one a little bit fatter as well. And then I'll explain what the lines mean. And I should save this actually before, because I do it every time. What these lines are looking to do for us is they're automatically looking to, using kind of the algorithm that was built for it, define where support and resistance are, either long-term or short-term. And then also any trend lines that it sees on the chart, it's going to draw as well. So we kind of finish making them all fatter. It doesn't take long. As you see, we're kind of getting through them all here. I'm going to kind of go in a little bit here. You'll also notice there's a couple of trend lines here. Here's a trend line. That one's actually pretty visible. That's a longer term trend line that it sees. Here's a bit of a shorter term trend line that we can kind of draw on here now. Sure. Formula. No, I don't want to see the formula. I just want to make it a little bit fatter for you. Okay. Cool. Let me go ahead and scroll out a little bit again. So automatically what this is going to do for us is it's going to just display where it sees support and resistance based on the algorithm. So right here, if you could see right here, we had this resistance area. This was a longer term resistance area. Came up, it tested this resistance area. I'd say that held. Here we've kind of got a resistance area that's drawn. As these areas change, they're going to move around on the chart. The last major resistance area that we had on the chart for the shorter term and the longer term was right here at about 71.59, and it broke, and it actually broke pretty hard when it broke above this. Okay, here if you look at the lower side, you've got resistance. These will stair step around with the price as well. But you can kind of see where that's going as well. You can kind of see where the support is coming in, and these are automatically drawn. So one of the things that if you're looking for, if you do support and resistance studies and trend lines, the one thing that I wanted to point out is these are automatically drawn. So it's not using, they're objective, is I guess what I'm going to say very quickly. They're not subjective, they're just basically use the algorithm. And you may not always agree with them. I think it's very interesting that this resistance here is kind of where the price backed off a little bit and then gapped up into kind of the overbought signal that Serge was talking about, right? But since they're objective, if I want to be able to find a stock that's actually breaking through support and resistance, or maybe down through a trend line or up through a trend line, there's scans that are put into MetaStock that allow me to do just that. So what I'm going to do is I'm going to open up the Power Console right here. And what I'm going to do, I'm going to go ahead and close, or not run these two scans here. Go ahead and kind of unselect them. And all of them are called dynamic trading tools. So if I'm looking for a stock that's breaking through support or through resistance, I'm going to look at these dynamic trading tools. And they start with DT. So let me actually look for them in the proper way. Here we go. We've got dynamic trend. And if I wanted to find something that was breaking through support and resistance long term, that would be this longer term. The shorter term are actually the ones that I left a little bit thinner on the lines. And these would be trend line breakouts. If I want to find trend line breakouts to the long side or trend line breakouts to the short side, I'd use those as well. Okay. What I'm going to do just to show you how this works, I'm going to basically select the support or resistance long term. Okay. And what I've got selected here, with MetaStock, I can scan anything that I want to. We get our data from London Stock Exchange Group. That used to be Refinitiv. That used to be Thomson Reuters. That used to be Reuters. It's one of the best, highest quality, most professional news services that are available. They cover like 300 different exchanges, approximately 300 different exchanges all over the place. So if you want to be able to run the scan like on the Indian stocks, you can. We get a lot of customers from India that want to do scanning. If you're in London, you want to do London Stock Exchange stocks, you can. If you're in Australia, you can run this basically on just about any market that you want. For the purpose of this, and you can see right here, there's a huge amount of instruments that are just available as part of this list. There's 321,000. Actually, I think, yeah, 122. So there's a ton of just instruments that I can scan. For the purposes of running the scan today, what I'm going to do is I'm going to do the index constituents of the Dow Industrial, the NASDAQ 100, and the S&P 500. And I want to point out that it remembered the scan that I run every single day when I'm in here, because those are generally the instruments that I scan. So let's go ahead. I'm going to search for right now long-term support and resistance breakouts, and I'm just going to go ahead and start it. Okay, and it's going to go through all 621 of those stocks for me. While it does that, I'm going to take a look here and see if there's any questions. If you have any questions, let me know. Okay, and then I'll kind of walk through this scan. So this is going and identifying all the long-term support or resistance areas, and it's going to go ahead and make a list of any of the recently broken through either long-term support, long-term resistance, or down through support. Okay, and I'll show you how to read this. Now, the reject rate isn't very high on this, and there's a very, very specific reason for that, but here we go. Let me kind of take a look here. Right here, what we've got is we've got a scan list. Okay, right here, if I look at there's 3M Company, there's the close price, which is 104. Break up, there's a 0 there, and then break down 395 days ago is what that number means. There is a breakdown through resistance. Now that's a little bit far in the past for me. This was the volume on the day that it broke. Okay, so what I want to do is maybe find something that was up 400 days ago, and what I want to do is find something that broke up through resistance instead. And you'll notice sometimes I'll slow down when I say resistance. It's because I'm trying to make sure I don't say support on accident instead. So, but what I want to do here is I want to find stocks that have broken up through that resistance area. And so I'm going to go ahead and scan this twice. Citizens Financial, 964 days ago. Let's just go ahead and scroll down. And what I want to do is maybe find anything that broke through a resistance level within the last 5 or 6 days. Okay, so here if we look at FedEx, actually I'm familiar with that chart, came up on a scan. It did break pretty high 1 bar ago. Okay, here we've got Weyerhaeuser 3 bars ago, it broke through the resistance area. Here we've got ST Street 3 days ago, Orvo, ORVO, MHK, a lot of stocks within the last 3 days. Let me go ahead and just kind of open a few of these up. Actually, I'm just going to open up FedEx. So just to kind of move on a little bit, let's take a look at FedEx. I'll apply the template and you can kind of see exactly what's happened since. So let me go ahead and open up the chart here. I go ahead and close this down. And I'm going to go ahead and apply, this is the victory template. What I'm going to do is I'm going to apply that template again that we were using for, no, that's not what I'm doing. Apply that template that we were using before that'll draw those levels for us. So I'm going to go ahead and click on apply here. Click on yes. Okay. Oh, no, I don't want to save that. Don't worry about it. Okay, right here, I'm not going to go through the whole thing with both of them, but I'm going to go ahead and make that line way more visible for you. And you can see right here, here's where it's defining that as a major long-term resistance area. And as it says, like 2 days ago, here it broke. Okay. If I want to kind of go back a little bit, I'm actually going to kind of zoom out. You can see it's drawing that off of these 2 highs. So you can kind of see where it's coming in from. We did have a gap up. Today we've had a little bit of a move back down, but we can find very, very easily anything that broke through support and resistance. If we want to find things that broke through support, that's the same scan. We can also find things right here that penetrated this downward trend line. That's a scan you could run as well. So all of this is automatic. It's easy to find. And as I said, every day I'm looking to go in and run scanning. So there you go. One of the tools in MetaStock that I like quite a bit. This is actually the first add-on that they ever created for MetaStock, and now it's just included as part of the program. So what I want from you now, and we're going to kind of change gears. We're going to now talk about Rahul Mohindar, who I consider a good friend of mine. But what I want from you, if you don't mind, put a couple stock symbols or futures, whatever, put some symbols in the chat for me, and let's take a look at some symbols together using the Rahul Mohindar. So that's hidden gem number 1. It's a methodology that was kind of created. If you're looking for breakout trades, it's included in MetaStock. Really, really cool little simple methodology. This one I want to talk about. Was created by one of our dealers in India, a gentleman by the name of Rahul Mohindar Oscillator. Or no, his name's Rahul Mohindar. he's a trader, a panelist on CNBC, CNN India. He actually runs a training shop or a training, he trains people how to trade in India. And I think they have 3 to 5 offices in India. They're one of our longest running dealers. He's actually been a dealer of MetaStock for as long as I've been an employee of MetaStock. So he's had a lot of loyalty. And one of the methods that he includes in MetaStock is one of the very first methods that I had some really, really good success with. So let me try and tell you a little bit of a story about kind of who he is. Very, very prolific, like I said, trainer. The story of RMO is he was in our office down here in Salt Lake City, Utah. Comes around every year or 2 years, and we kind of sit down and visit and talk about the business. He's a huge dealer in India. We usually go and kind of have some lunch and that kind of stuff. But he was in our office, and this was a while ago. And I remember we asked him, well, you know, you have all of these people that you're teaching to trade in India. And at this point, he's always been one of our best dealers in the world. And we were just like, and his sales were just off the charts. It's growing bigger and bigger and bigger. And we're like, Rahul, what are you teaching people? How are you getting this kind of growth? And what is it that you're teaching people? And so he showed me and the owner of the company, Scott Brown, the methodology that I'm going to show you right now. I've demonstrated it probably like 400 or 500 times. And we liked it. We liked it quite a bit. And what we did is we actually bought it from him. It's exclusively in MetaStock as what we call the Rahul Mohindra oscillator. So, lots of symbols coming in. Yes, thank you, Peter. Larry, oh my gosh, Michael, well, look at some. Thomas, Maverick, thanks. All right, so we bought the methods from him. And in the meantime, it is actually a system that I've shown hundreds of times. I like to show it. There's some reasons that I like to show it. And the reasons I like to show it is it's pretty simple. If I do a pretty decent job of showing it to you in the next 20 minutes or so, you'd be able to use it too, right? It's objective. So no point am I going to say, well, you know, maybe if the Fed raises rates or lowers rates or, you know, that kind of stuff, what we're looking for is very, very objective, which is why I like technical analysis. We're not trying to make guesses about things. I use a solid money management. We're always I'm gonna make sure I show you where to put in stop losses, where to buy, kind of how to move the stop losses, all that kind of stuff. Because I think, you know, solid money management, as Vince said, and so many other people have said, you know, there's old traders. Robert Abdullah was the one that made this famous in my head, but there's bold traders and there's old traders, but there aren't any bold old traders. Money management is so important in any method. Position sizing is important too. And it works on a lot of different instruments, and it's a simple process. So those are the reasons that I like it. At its heart, it is a trend following system. So here's a little bit of a thing I pulled off of a great website, investopedia.com. Not a sponsor, maybe I should ask them. But I'm sure you've heard like the trend is your friend or a rising tide lifts all boats, all that kind of stuff. This is looking to analyze the trend of any given instrument and tell you what's going on with the instruments so that you can trade in the direction of the trend, okay? And when we start to talk about trend, I'm going to use a little bit of different terminology. So when Rahul teaches it, he talks about the primary or the prevailing trend. I equate that to the longer term trend. What is the stock doing that we're looking at on a longer term perspective? We'll also talk about the minor trend and then the medium term trend. And what we're talking about is just different ways of looking at the stock to make sure that it's going up long term and short term before we look to go long. So because it's objective, let me just kind of get out of here. We'll open up a few different stocks and we'll kind of take a look at exactly what's going on. So I'm not going to have time to talk about all the stocks. Maybe I talked about me too much. Let me go ahead and close all the charts here and just make sure that we're just getting here. All right. And then we'll just open up a few stocks. And for everybody that participated, everybody that gave us stocks, thank you. I do apologize. If we don't have time to look at your stock, we're going to type in a couple here. So O, I, O, and Q. I'm going to look that one up real quick. With the fact that Reuters has so many symbols, I think that's a .o, but I just want to make sure. No, it's a .k. So I'm glad I looked. Okay, and go ahead and put that in as a symbol right there. MU is fine. We'll look at VRT. Peter, NVDA has gone crazy this year. NVDA.o. Okay. And also GE. Peter, I like most of the stock. I'm very familiar with most of the stocks that you put on there. So thank you for all those lists. And then FCX, although I don't think we'll have a chance to get to all of these. But let me go ahead and kind of load this. Now what I want to do here, so this is the charting tab. We've talked a lot about scanning. You can run scans on RMO as well. But what I want to do here is I want to go, and we call it the RMO trade model. I'm going to open up the MetaStock with what we call a template. A template is just a collection of indicators in the expert advisor. Then we're going to open up the template for the RMO trade model. So let's go ahead and do that. That's going to open up all of those charts that I just typed into the charting console. And I'm going to go ahead and window them real quick so we can just kind of get an idea. And I think what I'm going to look at, MU. Is it? Let's go ahead and fix that symbol real quick. Yeah, all right, there we go. We got all of them. Let's go ahead and kind of start, I don't know. Let's start with, I guess, NVIDIA. So we're gonna go ahead and look at NVIDIA first. And I want to just basically walk you through what the indicators look like for, and then kind of just walk you through kind of the 3 rules that Rahul teaches to find and identify trades. So the first thing that we want to do, if we want to identify, if we want to trade with the trend because it's our friend, or befriend the trend, or the rising tide lifts all boats, what we want to do is be able to objectively analyze what the trend is. And so the first thing that we're going to do is we're going to look at the long-term trend, okay, or the primary trend, and that's the indicator that Rahul calls the Rahul-Mohinder oscillator, okay. And you can see it right here. It's basically an oscillator. It's either going to be below 0 or above 0, and it's the long-term measurement of trend, okay. The way that Rahul teaches to use the Rahul-Mohinder oscillator is size and shape don't matter. It's either bullish or bearish, okay? And how do you read that? If it's up above 0, like it's been for the most of this chart, then it's going to be in a bullish long-term phase, okay? Right here, there you go. You can also see the RMO is bullish because there's a trend ribbon right here on the bottom of the chart that says the RMO is bullish, okay? So if we're bullish, well, we're not going to go short, okay? We're not going to buy just because it goes from bearish to bullish. There's 3 rules that are incorporated, but the first rule is the RMO bullish or bearish? If it's bullish, if it's above 0, as it has been since December of 2023, we're allowed to buy. That's it, okay? It's not a trigger to go long. We're just allowed to buy. If it's bullish, we're allowed to buy, okay? We're not allowed to short, okay? And that's it. It's very, very simple. In fact, I put it on this slide. Identify the trend. If the RMO is in the bullish zone above 0, you're allowed to buy. You're not allowed to short, and it's not a trigger to enter. Now, if it's going down and you're in a bearish zone, you're allowed to short, but you're not allowed to go. Okay, so it's a permission-based system. If I'm looking at NVIDIA today, it's above 0, I'm allowed to go long. It's been above 0 since December of 2023. I haven't been able to take a short, I haven't been allowed to take a short position since then, okay? Now, just looking at kind of what NVIDIA has done, since it went long, I mean, it went over twice its value in price. And if I'm only taking long positions because I'm only allowed to go long, I'd make an argument that for NVIDIA, at least for this example, I'm already putting the odds in my favor. So that's step number 1. What are we looking at? And you can look at the oscillator. It's either going to be above 0 or it's going to be below 0. It's either bullish right here. You can look at the ribbon too, or it's bearish. Okay, so that's step 1. Easy. Step 2, we want to do the same thing as we did with the long-term trend, but we also want to look at the short-term trend, okay? And the way that we do that, I'm just going to make this full screen here. And there, I actually prefer a little bit of a different view for my RMO here. And I'm going to make this a step field line. And then that way we can kind of see the purple line a little bit easier. And we also still have the blue line, but I can kind of see the purple line a little bit easier, and I can kind of see the crosses a little bit better, which is important, okay? So, but for now, what I want to do is I want to point out this purple line. I want you to ignore the blue field line. Just look at the histogram. I want to say that it's either above 0 or below 0 also. And it's also a lot faster to move up or below 0 or to above 0 because it's looking at the short-term time. So this is analyzing the short-term trend for us. As long as it's above 0, we're allowed to go long, okay? If it's below 0, like it was here or here, we're not allowed to get long. It's also not a trigger. So my process is long-term, NVIDIA, are we bullish? Yes, allowed to go long. Short-term, are we bullish? Yes, we're allowed to go long. So in that particular instance, I'm still allowed to go long. The next thing that we'll kind of look at after this is how we enter and how we maintain positions and how we move that position around. But for now, I just know that we're bullish long-term and we're bullish short-term. I'm not allowed to go short, okay? If they don't match, I'm not allowed to do anything except for maybe run a scan or wait till they match, right? I just want to trade in the direction of the long-term trend and the short-term trend, okay? The other thing that I'm going to point out right here, oh, actually, let me go back into MetaStock real quick, is when that long-term trend is up above 0, the bars are blue, okay? When it's down below 0, the bars are red. So you can look at the color of the bars and know that the short-term trend is bullish. And with the exception of just this little period right here, back in January, it's also been very bullish for quite some time. So again, very, very simple, very easy to read, etc. Looking for questions? I don't see it. But as MetaStock said, if you have any questions for me, ask in the chat. Okay. All right. So step number 2, we want to look to identify the short-term trend. Okay. If the primary trend is bullish and the short-term trend is bullish, you're allowed to buy. You're still not allowed to go short, and it's still not a trigger to enter. So how do we get in? All right. So let's talk a little bit about that. And you just reverse the rules. Like, so for example, if they do not match, you don't do anything. Okay. We want to be able to, as much as possible, put the odds in our favor. So if you're looking at a primary trend that's bullish and a short-term trend that's bearish, you wait or you scan, right? Like we want to find the stocks when they're moving. We don't want to trade the ones that aren't moving, right? Okay, anyway, finding positions or kind of finding the entry points, and we'll talk a little bit about that now. And we're just kind of go through what it is. So let's go back to these set of 2 indicators here, okay? You might have guessed already, we talked about long-term, and that was the big green indicator. We talked about short-term, and that's the purple indicator. The blue one seems to be right in the middle, right? Maybe it's a medium-term trend, right? So, and that's exactly what it is. So the difference with the medium-term trend, though, is we're not looking to have it be bullish or bearish. What we want to see is we want to use it as a gauge of momentum. Let me see if I can get more specific. Right here with NVIDIA, we've had a bit of a pullback. Today, we crossed, and because there is a little bit of a pullback, the shorter term oscillator pulled down, okay? It actually crossed down below the short term indicator right here. And then today, it's crossing above. Now, this is kind of interesting that this is happening today. But there you go. When this crossover happens to the downside or to the upside, Rahul calls this a shift of momentum or a shift of direction or a shift of force, okay? When it happens to, when the short-term trend crosses down below the medium-term trend, that's a bearish shift of force, okay? When it crosses up above the trend, it's a bullish shift of direction or shift of force, okay? And when that happens, that's the momentum signal that we're waiting for to go ahead and structure a long order. So if I'm looking at NVIDIA today, my process is I'm bullish long-term, I'm bullish short-term. We had that bullish shift of momentum, which paints that buy arrow right there on the chart. You see that buy arrow? That's giving me permission to buy, okay? But something else has to happen first, and I'll talk about that too. But right now, if I'm looking at this, I can structure a trade, okay? And to structure a trade, instead of doing it right here, I'm gonna go back here and do it back here so I can show you also how to move stocks, okay? So let's pretend we're looking at this NVIDIA stock back in December of 2023. You go ahead and zoom in here. We can kind of take a look at what's going on, okay? If I come in and start to do some analysis on this, let's just pretend that it's looking like today. We're getting that bullish long-term, we're bullish short-term. We had a swift shift of momentum, okay? When all three of those line up, and in this case, they all line up on the same bar, but they don't have to. You could get your shift of momentum in a couple of days. But when they line up, then we're gonna structure a trade. So what Rahul teaches in the training that he does is he'll say, okay, we want to figure out where we're going to enter, in this case, NVIDIA, right? And he wants just a little bit more confirmation that the price is going to continue to move up. So if I'm looking at NVIDIA on this day, maybe I found this on a scan, what I'm going to do is I'm going to take my horizontal line tool here in MetaStock. I'm going to look at the high here. I have to hurry. And I'm going to look at the high on the day before. I'm going to basically draw a line just right above, okay? If that line comes, if price activity crosses up above that line, I'm going to go ahead and take a long position, okay? Now, the other thing that he wants you to do is he wants you to put in a stop loss, okay? Because again, we're not always going to be right, but we want to manage money effectively. And there's a couple of different ways that he teaches to look for stop losses. The first of which would be right here. I look at the low of the current day and the low of the day before. I put it on a stop right below it. I'm saying daily, but you can use this on any bars, okay? I find that I like to give myself a little bit more room. And so I look for what Rahul calls a recent support area, okay? So if I'm looking right here, this would actually be my recent support area. And this isn't something that I did from Rahul, but what this is called a pivot low. A pivot low is a low surrounded by two higher lows. So this low is lower than this low and this low. And so I just give it a little bit more. So now before I'm even in the position, I know two things. One, I know I'm not going to buy this unless it continues to go up. So if it goes to 486.89, I'll go ahead and buy. If I get in, I want to put in a stop at 457. Now that's a 30-point stop. That's less than 10%, but that's where I'm going to kind of put it. Right? So I'm going to put that stop loss in. Now, I'm not making the stop loss based on how much I can afford to lose. I'm looking back and saying, okay, well, if I'm wrong here, if this pivot line crosses down, I'm wrong. I'm going to go ahead and get out. I'm not trying to make that decision because NVIDIA had bad news and the price is flushing away. I know before I get in the stock. I also have a pretty good idea of what the risk is. Pending there isn't a huge significant down gap, I know that I'm going to buy here at around 486. And I know if that happens, I'm going to put in a stop loss. Now, prices gaps happen. I've had a couple of them this year. But for the most part, I want to be able to take a good approach about this, right? And I want to know what that risk is going to be, okay? So if we cross that high right there, it looks like it was close, we would have bought. If not, we would have definitely bought on this day. Okay, and then what's the next thing we do? We put in a stop. Okay, we put our stop right here. That's kind of the process that you use to get in the trade. Oh man, I'm going to go a lot faster now. So, but I do want to talk about how you move the trades and that kind of stuff. So, if I'm going to just kind of zoom out quite a bit. Oh, not that much. Whew. Okay, I think this is where we're kind of looking at. Okay. And what happens is you do have a little bit of a pullback right here, right? You get a sell arrow. That's because of the change of force that we talked about earlier. You get that little bit of a sell arrow. Short term, you even get below zero. You see some weakness. However, you're bullish this whole time. So if all three of those go against you, you're gonna look at reverse it. You're gonna exit immediately. But right now we're just kind of holding on. Okay. Here you have another change of momentum or change of force, and this is the point where you're gonna move up your stop. Okay. So right here, if I look for the pivot low, I'd probably put it right below that sell arrow. Okay. It's still a stop loss. Okay. But then we start to move. Okay. And prices don't move directly up on NVIDIA. They should have. You have a little bit of a pullback. Okay. We did have a sell arrow here where that pullback started to happen, but you'll see we're still bullish long term and we're still bullish short term. If I was looking at this, I might consider moving my stop up, but that's not even what Rahul teaches. What happens is NVIDIA pulls back a little bit, gaps up. We have that shift of momentum, or shift of force. And when this happens on a chart, Rahul says you can buy more. I don't. But what isn't optional is you move your stop. So if I'm looking at this place right here on the chart, I'm going to move my stop and I'm going to look for that pivot low. So right here. Okay. Here we have another bit of a direction here. A bit of a pullback. I'd be moving my stop today. Okay. And I probably put it right here. Okay. Now, this is a trend following system, so there's a few things that I want to point out, and I just don't have any time left. But you're never going to get in, because it's following the trend, you're never going to get in at the bottom. And you're never going to get out into the exact top. It's what we're looking for is we're looking to find good stocks that have a solid trend and take good chunks of the trend. If I bought this based on the RMO model, I entered here at this first line at, I believe it was 486. And right now I got a stop at about 846, right? And if it keeps going up, I'll keep just moving up that stock and giving it plenty of room to finish. The other thing that Robert Dill always used to talk about that always stood out to me is he'd say that bulls will make money, bears will make money. I'm not sure he made it up or not, but pigs will get slaughtered. What I want to do is be able to trade and take good chunks out of a really good trend like this and be able to manage it with a good money management strategy where I know where my stop loss is. I know exactly kind of what things are going to look like every time that I get into a trade. So worked out really well here. We'd still be in this trade. If we're looking at it today, what we probably want a penetration of is this line here after the close. And then we'd probably put a stop right here. Okay, not a recommendation, but that's what you'd be looking for. Again, should be objective. You should have a stop loss in, all that kind of good stuff, right? So GE is probably another one where it's worked really, really well because once these things start moving, they work really, really well. So with GE, geez, just we've been bullish on GE ever since we went long-term bullish on it right back here, 11.6, and it just keeps moving up. We just keep moving up our stop. We had an opportunity to move our stop right here. Again, very, very simple methodology. And that's why I like it. Because with MetaStock, I'm going to kind of change gears a little bit here. We're going to wrap up. But with MetaStock, I can basically show you like all the scans that are in there. I can show you all the methodologies that are in there. But if I can show you something that you can just take away from and kind of learn while you use some of the other tools that are in there. This is something that's very, very simple to implement. You can use it. Hope that it makes money for you. One of our most favorite strategies that have been in MetaStock for the whole time. The other hidden gem, which I took the slides out because I knew I wouldn't have time for, is Haguro. We actually do have a webinar in a couple of weeks where we're going to sit down with Gary Burton and do Haguro, and I'd recommend you come to that if you've been using MetaStock for a while. It's a really, really cool method that's in there. So I need to update this side. 31 years in a row, just was announced. 31 years in a row, it's been rated #1. We have 2 versions of MetaStock. So I have the real-time version. The real-time version actually comes with MetaStock, everything I showed you here. It also has real-time capabilities. It also comes with a new service that we call here Zenith. Okay. Now this Zenith was put together. They spent over $1 billion designing it. It's backed with all of the Reuters news. So, and it's a very, very similar product. If you went and bought Bloomberg, it has similar capabilities. If you're doing any type of fundamental, news-based, macro-based economic analysis, you should try Zenith. It's like getting Bloomberg, but it's like $160 a month instead of like $1,800. So with MetaStock, it's $265 per month. It's going to include that Zenith news. It's also included all of the data for anything that you're interested in. We also have an end of day version. The end of day doesn't include that Bloomberg quality news feed, but it is gonna, it does start at $59 a month internationally, or $69 here in the US. And that's gonna include everything that you need to do, technical analysis, MACD scans, anything that you want. And what we're gonna do here as part of it is, if you buy a month, we'll give you the second and third month for free. So like if you do end of day right now, it's $23 a month. That's going to include MetaStock, the current version, MetaStock 18. It's going to include any of the data that you need to run it. We're going to set up an appointment with one of our white glove installation support technicians. They're going to sit down with you. They'll answer any questions you have. If they're around RMO, if they're around scanning, they'll kind of walk you through the program. They'll kind of make sure you understand how to use it. And we're also going to give you our Unleash the Power MetaStock training CDs. You still get unlimited access to our support team. If any of you talk to our support team, they're right here and they do such a great job. There's weeks where all of the surveys that we get back from people that have talked to support are 100% positive. It's great. So they do a really, really good job. If you ever have questions, you can call them, talk to them about them. They'll show you how to do it. And I think that's one of the things that we love. So anyway, you can sign up. You can go give us a call, 800-882-3040. You can go to metastock.com/sales-chat. And you can also do, this isn't the right link. So I'll show you have the right link.
I'm glad you saw that. I just caught it myself.
Yeah, looks like we were doing the last place I used this was at the ATAA, the Australia Technical Analysis. It's Traders Summit 3-for-1, and Greg's going to put that in the chat for me because I asked him nicely. So you can absolutely do that. Traders Summit 3-for-1 to do that. We'd have some really, really cool products today. Like I said, Victory was our most popular add-on in 2020. People love it. It's so simple, such a great thing to use. You can get that. You can also get Power Bundle 360 with the super signals and the trend radar. You also, as part of Victory 2, don't forget you get the veracity, you get winning momentum. You can get 3 months of Buff Dormeier's analysis toolkit, Oscar Carboni's trend lines and training. Oscar's coming up just after me. He does a great job. You don't want to miss him. You'll get 3 months of Learn MetaStock, which is a website that's dedicated to teaching you about trading and how to use MetaStock. And you get Unleash the Power of MetaStock. So all of that would be normally $6,526. Here at the website, I'm going to change all of these slides, is $2,436. You can do that by going to metastock.com/summit deal. You can give us a call at 800-882-3040. Or you can go to metastock.com/sales-chat. So all of those will work and all of those will be helpful for you. So, oh, thank you. Jennifer says that was awesome. I'm glad you enjoyed it. All right. Before we move on, again, I want to say thank you to Stocks and Commodities Magazine for doing such a great job of sponsoring the events. I remember calling them up and be like, I have this idea. This was 13 years ago. We're going to do these events. We're going to bring in really cool experts like Oscar Carboni, who I can see right now. He's going to smile. Watch, he's going to smile. There's that smile. I love it. All right. Anyway, I want to say thanks to Stocks and Commodities for sponsoring us. Our next speaker is Oscar Carboni. You can see a picture of him here, or you can see him down below. He does a really good job. We love Oscar. Oscar, his analysis is always on point. He kind of gives a really good perspective. And some people call him the chart whisperer, but Greg calls him a force of nature. Oscar, how are you doing today?
Good. How are you today?
I'm doing great.
I also call him the Midnight Cowboy.
As always, thank you for inviting me. I love doing these webinars. I think it's great. I love being able to teach your traders, or I should say, what are they? Your guests? What do you call them from MetaStock?
Awesome. That's the only adjective we ever use for our customers.
I like it. All those awesome people lined up here, they need to learn something today from us. And that's what I would like to do in this webinar, is teach a little something that'll help you moving forward literally this week. Plus, there's going to be a little something in this for everybody for AI. So I'm going to do some long-term and then some short-term. The long-term is to get your position. The short-term is for stuff that can happen for you this week. How's that sound, Jeff?
Sounds great. Plus, you sound great. Plus, I can see everything. You look great too. I'm going to go ahead and get out of the way. It's your turn.
Excellent. All right, so I will wait for you to set the screen. I'll move my camera off my screen so I can see what's going on. And we are ready to go. So let me start with good morning, good afternoon, and good evening, traders from across the globe. Thank you for spending your time with us on a Monday. I know Mondays can be busy, but MetaStock tends to bring out some of the best analysts and traders out there, and they allow us to teach you, which is a wonderful thing that they allow, and I don't mind doing that. So in today's webinar, if you'll humor me, I will illustrate the power of technical analysis. During this illustration, I will offer a couple of tips and tricks that you can use, certainly this week moving forward. Please understand the analysis I'm about to show you is simplified so that you will understand it, but it's very, very powerful. I can do much, I can get much more intricate, and I can show you things that would confuse you, but that's not why you're here. You're here to learn something. So I will keep it simple and powerful so that you will take something away from this webinar. If you like what you're about to see with me, it's very easy to find me. I am literally in a live trading room 20 hours a day. I'm there right now waving to you because I don't even close it when I do webinars. I'm always here. Neil Dacey, in fact, is what I call an Omniac who's been out to my Omni camp, which is a 4-day boot camp I hold here in Las Vegas. He has been out to camp, and when I'm done showing you charts, Neil is going to come up and explain to you how you can find me, how you can get to Live with Oscar. The fee is absolutely nothing. There aren't even credit cards required. So make sure that you listen to Neil because he's going to show you how to find me after this presentation. And of course, we will show you how to contact us at dano@livewithoscar.com, which I'll put up before the presentation is over. Let's get started. Traders, you're looking at NVIDIA daily bar chart. About 5 weeks ago, somewhere around there, I did a webinar for you, and I said I'm going to show you something very interesting in the webinar 5 weeks ago. 5 weeks ago, I said I'm going to show you a bunch of AI plays that you can get into if you cannot afford an expensive NVIDIA that literally can go from 800 to 950 and back to 800 within a week. Can you afford that volatility? Can you afford that stock? Most people can't, right? Most traders can't. Fund managers, people that are hedging, people that are trading other people's money, well, they can afford $900 stocks. Not much trouble there. Can you afford them? The purpose of the webinar 5 weeks ago was to show you alternatives to NVIDIA that you could afford. And I wanted everyone to get involved in those stocks. They're ETFs, some are stocks. So I showed that presentation to you 5 weeks ago. We are looking at NVIDIA right now. One of the things I mentioned about NVIDIA is that Wall Street is in love with the 21 bar moving average, or algorithm as I like to call it, on NVIDIA. In fact, we just got a signal on Wednesday last week right here. Look at how well, I'm gonna move this trend line, or I'll at least change it so that it's a little thinner. And you can see underneath that trend line, and what you'll see is that we are riding this average. See this average? We keep hitting it, and Wall Street just comes in and buys the crap out of this thing. They hit it again, or just about hit it Wednesday last week, and it hit the bottom of the trend channel at the same time, and boom, we got an NVIDIA signal. Now, so we know Wall Street loves the 21 bar algo on NVIDIA, but again, can we all afford NVIDIA? So the alternatives to NVIDIA was what I spent my last hour, my last webinar, the hour of the last webinar, instructing you on what you can afford if you cannot afford this. Now I'm going to go over each and every one of those that we went over in the prior webinar, and we're going to see where we are now. If you look at this little hand, there's going to be a little hand to illustrate where the last webinar was on each chart. So the last webinar was here, and NVIDIA has moved up to there so far. All right, so we're going to go over the alternatives to NVIDIA, which is what I was hoping I could give you in the webinar 5 weeks ago. And then we're going to take it forward and talk about a bunch of charts. In other words, if you are into, let's say after we do the AI part, which we're going to do now, if you're into crypto, stock indices, if you're into metals, if you're into grains, if you're into Forex, there's going to be a little something in this webinar for each of you. So make sure you're paying attention. I'll show you a market that's in play right now in each one of those categories after we take a look at the AI. So we did speak about the AI revolution. Welcome to it. NVIDIA is a big part of it. Wall Street loves the 21 bar moving average. I am of Wall Street, started at 18 years old in 1982 and have been there my entire life. I know what they're looking at, and I will show that to you. So AI, we mentioned, all right, we might not be able to afford this. Oscar, what are the alternatives? And I went through a list of alternatives that we're going to go over now. And in those alternatives, we're probably going to take one or two and remove them from our portfolio from 5 weeks ago. And I'll show that to you now. So one of the first charts I showed you was the AI play in our last webinar. And I said, I love this little gem. Omni started getting involved right about here. Wall Street loves the 27 bar algorithm on this. It just hit a few days ago, and away it went. It's inside of a wonderful channel, and it's a great alternative to NVIDIA if you cannot afford NVIDIA. So this was one of the first ETFs or stocks that I showed you in last webinar. And what I want to tell you is we still like it. It stays inside of our portfolio. So we still like AIQ.O. AIQ if you're not using MetaStock. AIQ.O stays in the portfolio. The 27 bar moving average that worked 5 weeks ago, right here when we did our last webinar, is still working today. Use that, but the idea is to show you a list of AI stocks instead of NVIDIA, and then show you some stuff for if you're a futures guy that you can play with. So there's your AI play called AIQ, and it's still working since 5 weeks ago when we showed it to you. We're loving it. Keep that in your portfolio. The next one I showed you, well, you know what? Bitcoin's here, so we'll look at it. Bitcoin's in my list because we love Bitcoin. We expect it to go to 85,000. It will absolutely get there. But why it's in this webinar is because we just started to get a signal. Look, right here. We're just starting to get a signal today, kids. I'll get back to that a little bit later. But Bitcoin, which is part of the webinar we did 5 weeks ago, I consider it part of the AI revolution. Bitcoin is getting a signal. Now, this is called a possible head and shoulders. See, the left shoulder is around, or let me just make this a little bigger. See, it's left shoulder, head, right shoulder. Well, the fact that it's a very small head and shoulders, and it's only a couple of weeks long, this is what's called a continuation pattern, not a topping pattern. This is continuation. A small head and shoulders is a continuation pattern, kids. It is not a topping pattern. You've got a small head and shoulders building, which is simply a consolidation pattern for higher highs. Now, if this head and shoulders was much bigger, let's say it was huge and took up the whole chart, well, that would be a different story, right? That might be a topping head and shoulders. But this one is really not. I mean, it's just a few weeks. It's really not that big. It fits inside of a month. So we are still looking to buy the dips because of that continuation pattern and the fact that this average has worked so well in Bitcoin, and we are back at it again. So that's how come Bitcoin made the list, but there are others that you will love. Another AI play, if you're not going to go with the biggest of the AI companies, you have alternatives. BOTZ is another one of alternatives. Right here is where we gave the signal in the last webinar. We told you if you can't afford NVIDIA, go buy this instead, or buy all of these and put them in a portfolio. Well, we were here, and now we've made it all the way up to here, bounced, and are heading back up again. So far, these have been good alternatives to NVIDIA, and I hope you guys paid attention, you guys, gals, traders out there. I hope you paid attention 5 weeks ago, and I hope you're paying attention to it now, because there's 6 or 7 more that fit in this mold. So we've got bots still looking good. We liked it right here at the green hand. In the last webinar, we were right here at the green hand, and I told you about this, and so far, so good. And look at how it's riding the average. Isn't that wonderful? It just rides that orange average. all the way through. It just rides the average. So you know you're getting a signal if you get near the average, but this is about getting all of them into a portfolio instead of one big stock that may move too fast. So bots is still part of the portfolio. We will keep that. Let's move along to the next one. I also showed you Buzz, BUZZ.K, back here at the little hand, the thumbs up. This is where we gave the signal, and again, it is fantastic. It's an affordable alternative to high-flying NVIDIA, and it is staying where we'd like it to stay, inside the channel, moving higher, mostly above the average. Every now and then a spike through, but not much. Stays above the average. We know Wall Street's still liking it. We still like it. We're going to keep Buzz in our portfolio as well. So these are the exact stocks that we went over 5 weeks ago. And I mentioned if you know me well enough and you're following me, I've qualified all of these, put them in your portfolio. Well, here we are 5 weeks later, and guess what? They're all doing, almost all of them are doing really well. So now we're going to look at another that was in our webinar 5 weeks ago, and that is the IQM. Once again, right here at the hand, we liked it, did the webinar for you. Many of you seen that last webinar. If not, you're new to this, please pay attention. These will help you. We liked it about here. Well, we've been liking it since down here. This one only got falls at this little triangle. But the last webinar was 5 weeks ago, and we were right here at this hand when I offered this as one of the stocks you should put in your portfolio, or ETFs. And we have rallied up since, came back at the average, and are taking off again. Another fantastic alternative to high-flying NVIDIA. So traders, I offer, the one thing that you'll hopefully hear about from Neil, I offer an OmniCamp. It is very exclusive. It is very small. It is for only 2 to 5 people. It's only 3-4 times a year, and it happens here in Las Vegas in my home office. I call that OmniCamp, and I invite 3 or 4 traders, and I try to fix their lives. I show them the Omni method so that they can fish for themselves. If you like me, if you like what you're seeing, if you realize this is literally my analysis 101, I am so much deeper than this. I can help you in so many ways. If you like what you're about to see, you go to omnibootcamp.com and fill out an application. I'm hosting an OmniCamp in April and in June. Those are the only 2 on the books. They're for very few traders. And Neil Dacey will explain more at the end of my webinar, but you really should come out and join me because it's very exclusive. If you get fixed, you'll be fixed, I promise you. Anyway, the AI play, Franklin Intelligent Machines ETF has done really well. Great alternative to NVIDIA. And of course, there are others, not just NVIDIA, but that's the big name out there. So we'll leave that as the big culprit that's too expensive. And this one would work well in your portfolio if you're looking for an AI portfolio, but did not want to spend too much money on one particular stock. But this one in your grouping as well. Then we move to another, and this one is called Loop, L-O-U-P on MetaStock.K. Once again, Wall Street and these particular ETFs, they just love the 27-bar algorithm. They are all over it. How do we know? Look at when I move that trend line. The trend line and the algorithm, or the average, seems to be the spot that they just come in and buy. Right? You can see it every time. Gets to the average in the line, they come in and buy it. Right? Gets back to the average in the line, they come in and buy it. Runs up again, back to the average in the line, gets through a little, they come in and buy it. So we know this is working. We know it's working well on this. And it suits us if we are looking for an AI play for the future. So these aren't short term, right? These we want you to hold. If there's something we don't want you to hold, we're going to pull it out during our segment. So of everything I showed you 5 weeks ago, I still like every one of those, but we're going to run into 1 or 2 that we're going to remove. Learns is probably in that category. So LRNZ.K, a much cheaper, one of the much cheaper alternatives to NVIDIA. I gave it to you here on this day. There's a little green hand there, right? You can see that little green hand. That's the day that we did the webinar together, and I told you I liked it. Came out of this dip above the channel. back into the channel above the average, and we liked it, right? So we showed this to you as part of the grouping. Here's what I don't like. Since then, it's spent a lot of time under the average. Also, if you look, I've got a green arrow, green arrow, green arrow, green arrow, green arrow. Why am I suddenly putting up red arrows? Red arrow, red arrow, red arrow. I don't like that. I don't like the fact that we're getting a lot of red arrows here. So I'm going to tell you that if LRNZ does not settle above 40 today, remove it from our portfolio. That's what the red hand, the red thumb pointing down is for. If LRNZ.K does not settle above 40 today, then I'll write that so that you don't miss it. It's got to settle above 40. If it does not settle above 40, we remove this from our AI portfolio. I only like the ones that are performing well. No sense in holding on to ones that are just barely performing. Now, it's worth more than it was when I offered it, but I don't like it. It's still around the same price. So for me, if it's not performing well, we can always get back to it. Don't need this one in our portfolio. So we would be removing L, R, and Z if you followed me 5 weeks ago and bought any of these. Again, too many red arrows lately. And I'm the one who puts the arrows up. It's an automatic system. But I don't like the fact that I have them. Failed at the average, failed at the average, failed at the average. Well, we usually hold at the average, right? And there's a good reason to put the red thumbs down on that. So again, if you were following me, put a note next to this one. If you cannot get above 40 on the settlement today, we'll take it off the portfolio. What else was in the AI? Ah, yes, we have. The AI called, well, the AI play, as I like to call them, it's a wisdom tree AI fund, WTAI. This one as well, if you look right here at the hand, that symbol, this is where we liked it. Well, it's rallied up, but it hasn't really maintained, and it keeps hovering above the average. Once again, I'm going to give you a number. If you cannot settle this above 21 today, you will pull this one out of your portfolio. So if we can close above, and we can just fix that little typo so it doesn't say above. If we can close above 21, then we're good to go. If we cannot close above 21, then I think the red thumbs down means let's remove it. Now, again, this is more expensive than it was when we offered it to you, but it hasn't really gone anywhere. In 5 weeks, I like the ones that perform right away. So we'll likely pull that and the one before it out of the portfolio if it does not settle above 40, of course, and above 21 on this one. What else is waiting for us out there? Well, we've already seen that. We don't need to see that again. Here's another one. Check this bad boy out. The Robo Global AI ETF. Think it's THNQ.K on MetaStock. We gave this to you right here at the hand at that little symbol, and so far it's been looking fantastic. Nice rally up, nice pull back to the average, rally back up, trying to get back into the trend channel. So we still want to keep ThinkQ in our portfolio of AI alternatives. So if you're following me, keep this one as well. In fact, I don't think I'm pulling any others. We have others to look at, but the two I showed you were the only two that weren't just perform, perform, perform. No sense in holding on and hoping, right? Out of the portfolio, we ride the winners and cut the non-performers. They're not losing, but they're non-performing. So let's just get them. Who else is going to show up here? Quantum. There's another one doing really, really well. I kid you not, traders, Wall Street is watching this AI emergence. They're following the proper ETFs with the proper algorithms. I'm following just along with them, right with them in tune. Wall Street is watching. This is the AI revolution, and it's acting very much like the computer aids did back in the 80s, 90s, like the internet did back in the 2000s. It is just exploding, turning into a whole new industry. And this quantum ETF, look at the way it rides the average. I mean, it almost never violates the average. Once it's above, it stays above. And when it's below, it stays below. Great average or algorithm on a fantastic ETF so far. That's been staying in tune with the AI revolution, and of course not so expensive that we can't afford it. And what else was in that last webinar? Let's see. Oh, we got another. No, I think we've looked at the ones that I wanted to show you. Yes, we've looked at the ones I wanted to show you as far as AI is concerned. So remember, there are two questionable. We may be removing them. All the rest have done really well since we presented them to you 5 weeks ago. Now, this information is fantastic if you're holding and getting involved in AI for the future. But a lot of us are day traders. A lot of you listening in are day traders, and you kind of need to know what should be happening this week in the markets. Great, I've got all these AI plays that take some time, but what about Tuesday, Wednesday, Thursday, and Friday? What do we do about that? With that in mind, I'm going to take you to a few charts that should show you. This is last night's homework. The Dow Jones Daily Bar. In fact, I did a YouTube video last night. I do one every night. And this was one of the charts I presented in my YouTube video. And in that, I said, you're looking at the Dow Jones Daily Bar, and take a look at this chart for just a moment. Look at what happens here. If you want to know what's happening right now in the markets, you've got the market goes from the low to the high, right? Hits the top, hits the bottom, rallies back up, hits the top of the channel, comes back down, hits the bottom of the channel, jigger jags around a little bit, back to the top of the channel. What should come next? Anybody listening, what do you think comes next? Simple 101 analysis, right? It doesn't get simpler than that, but very powerful. I promise you that the markets are all about geometry. I showed this to you in another webinar a few weeks back. I spent an hour teaching you geometry. Wall Street loves geometry, and they always come back to it. So geometry is basically where trend lines are drawn and how they meet. So if you got a trend line, you've got geometry around this trend line. Well, Wall Street follows this geometry. They program it, okay, I got you. They program it into computers and they call them algorithms. But it's the geometry in the market, it's the averages, it's all the stuff that we're looking at, just being programmed in. With a good pair of eyes, you don't need to have an algorithm, you don't need Wall Street. The stuff is easy to figure out where it should go next. All right, so you've got the Dow Jones and you see the pattern, right? I mean, it is a simple pattern. It goes from the bottom of the channel to the top, then makes its way to the bottom, right? We did this already, but just to reiterate, make it simple from the bottom up to the top, channel begins. Then we come racing down to the bottom, channel holds, races up to the top. It's top, channel holds again, it stops it from going up. Races down, hits the bottom, starts hitting the bottom a few times, and what's it do? Races back up. So what should it do next, kids? Isn't that kind of simple? It should come lower. Now, we've got something else going on. There's an Oscarism, if you know me, if you've been following me for the last 40 years, people on the internet for the last 15 or 20 or 15, 16 years, the Dow Jones Daily Bar is doing something we call an Oscarism known as the holiday reversal. So what is a holiday reversal? Well, you've had the markets gangbusters moving up this week, leading into the Easter week. This is Easter this week. At the end of this weekend, we have a 3-day weekend. Market will be closed either Monday or Friday. That makes it a 3-day weekend, right? So you're closed Friday, Saturday, Sunday, or you close Monday, Saturday, Sunday, Monday. That's a 3-day weekend. Anytime we're leading into a major holiday 3-day weekend, some kind of reversal takes place during that week. And it was absolutely picture perfect, started exactly when it should have. So I think we're in a small holiday reversal. We have a red omni, and it should bring us down here somewhere. That's why we have a question mark. And when that holiday reversal is over, it'll head right back up again, is most likely what happens because we've got a repetitive pattern here. So I wanted to show you that. This chart tells me that we expect a slight pullback, but understand this chart was prepared and used in a video last night, Sunday night, to show us Monday we're supposed to have this pullback, and we are getting the pullback. This is what happened on Monday so far. So I had this video out last night with this very chart, video number 2726, and I depicted exactly what I just showed you and said we're looking for downside based on the Omni arrow pointing down and everything else I just showed you. So this week, we expect at least another day or two of downside in S&P, NASDAQ, Russell, the gamut of US indices. Then there's this chart. You know what? Let's start with this. Let's go here first. We did the Dow. Now let's go look at the transportation average. And what do you have with the transportation average? Basically the same thing. You have a race up to just about the high of the channel. Races back down, hits the low. Races back up, high of the channel. Races back down, almost makes a low. Hangs around for a while and finally puts the low in. Runs back to the top of the channel. That is what we expect next. Right? Much like the DJI, this indicates a pullback for this week. Now, I don't know that it'll go down 4 days in a row this week. Towards the end of the week, it'll turn around and head back up, but you got a couple of down days coming based on what we're seeing here. Now, Omni is a day trader, and the Omni signal can flip from day to day. Monday's a buyer, Tuesday's a seller, Wednesday could be a buyer again. So we'll see what the average, we'll see what the Omni says at the end of the day, but the transportation average right now is pointing towards the downside, much like Dow Jones Industrial Average. And if you ask me, I think this is a flagpole. Watch this. I think this is a flagpole. And I think this whole piece right here is a pennant flag. Here's your pole, here's your flag. I think the whole thing is a pennant flag. You race back down to the bottom. Eventually you break out through the top. If you remove this, you've got yourself a pennant flag here. And that's what it is. But it also has major resistance from the top, so we'll use it. So overall, in the end, higher it should go. We're expecting lower this week. So if you're into US indices, that's something that I hope will help you this week in US indices. Are you a metals trader? Let's see what chart. Are there any metals traders out there? Let's go with K. Look at Dr. Copper. Now, copper, major resistance line, hits it, drops, gets near it, drops, hits it, and starts the major drop, right? What else is happening there? I think this is a left shoulder, a head, and a right shoulder. Now, unlike the one I showed you in Bitcoin, which only lasted 10 days, this one goes from the middle of February all the way until we expect it to fill out in April and May. So if the right shoulder fills in, what you've got in copper is a left shoulder, head, right shoulder. I don't know that copper belongs up here to begin with because it's not usually where copper is. Copper's usually cheaper. So copper looks like a seller of rallies as long as we stay below 406. You keep copper below 406, you can sell the rallies expecting that this will fill in at some point and create the right shoulder. And once you get the right shoulder, the bar's in here, then you've got your head and shoulder formation, and we can do a calculation on how low it could go. So this is what we're expecting, but it is a question mark because nobody knows this will happen for sure. But because it's a rather larger head and shoulders, we would expect that if it does fill in, copper will work its way lower. So keep your eyes on copper if you're a metals trader. If you're a gold trader, it was a short-term capitulation that took place. Look, we had something called a double top. Top one drops down, top two drops down into a flag, gets to the top of the flag formation and projection, right? The flag projected about there, hit there in 1 day, dumped, and we called it on that day short-term capitulation. Now gold has come down. It's trying to hang around here. These are short-term stalling patterns when you see this in gold. It means it will capitulate for a while, maybe a week or two, but that will be the high for a while. How do we know? Look right here. I could show you this 10 times on a gold chart. See, after capitulated, short-term capitulation went down for a while before it finally started to gain legs. You've got a short-term capitulation that took place already. So you should end up dropping a little bit. Now, a lot of that will depend on other indices and currencies and such, but you're looking at what was a short-term capitulation in gold, and we took advantage of it while we could. We are now on the sidelines in gold, waiting to see what the next signal will be. But you did have your short-term capitulation, and that does usually lead into a week or two of downward movement. We'll play this one day at a time. I'll show you another chart during the segment that will explain why gold should move either up or down. We'll get there. So what else are we looking at? I showed you copper, I showed you gold. So I showed you some metals, and I showed you a grain. If you are into foreign currencies, let's look at this. In fact, let's go to another chart for that. I think I have this pre-drawn up on a prettier chart for you, so let's go here. Yes, euro currency was doing really well when it was inside this channel, green channel, and started to get above the average and started to look really good. But since then, we've broken down through the bottom of the channel, and we are now below the average. And now look at how well this average keeps euro, the 6E, in check. It's UROM24 in MetaStock. It's the 6E if you're not in MetaStock. Look, holds, rallies, holds, rallies, holds, rallies. Finally gets through, kick it above, kick it above. Does get above, gets back below. So the test above didn't work. We're back below. And now instead of being in this green upwards channel, we're in that red downwards channel. So for now, we are sellers of rallies if we had to do anything in euro currency. And the reason why you would want to sell rallies in euro currency is if you keep your eye on this one. You know what? Maybe it's called the, let me see if I could give you a better one. Maybe it's the DXY. I have a prettier chart I'd like to show you if it'll show up. Ah, there we go. Look at the dollar. Now the dollar, we've used this chart for a long time. When it was in the downward swing on this side of the chart, we said, okay, I'm going to teach about flags. They're usually quick drops to a consolidation, to another quick drop, to a consolidation, to another quick drop. All right, so we were doing flags back in the day when that mattered, right? So I'll just make it a little dark as you can see what we're looking at. There was a time that we were using this chart for the downside, and we were using these flags to help us project just where it would go. All right, and it did work. Quick consolidation, right? So you have a drop, consolidation, drop, consolidation, drop. So that's usually how a flag works. But that was on this side of the chart. Now we're on this side of the chart. Things are going differently now. We're starting to move higher. We're above the average, which is holding well, and above this. That's what gets important right here. Look, you got above that. So it's a major apex. And you were able to get the dollar above it. If the dollar stays above this, euro continues to drop. Okay? Keep your eyes on that dollar. If you are a euro trader, that is your signal for whether or not you want to be long or short the euro. That dollar moves higher, gold should go lower, euro should go lower, grains should go lower if the dollar continues to break out through that spot it just broke out from. Then we've got something interesting. This guy, Ethereum. If you're into crypto, here's a signal. 3 days ago, I did a video and said there is a signal coming in Ethereum. Get ready for it. I did it on YouTube. Well, we got our signal. Boom. And look, it's starting to go. It hit the signal up, back above this channel. And let me show you why that's significant. Check this out. This channel has kept us in check from here, right? Down, trend line stops us. Down, trend line stops us. Down, trend line stops us. Down, gets above. Ooh, beautiful. What happens? We come down, we test the trend line for 1 or 2 bars, right back above it. After hitting the average, we have a signal. So Ethereum is showing that it wants to move higher. Now, if Ethereum is showing it wants to move higher, guess which other one is going to move higher? Bitcoin, 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 and bingo, the signal is in, kids. That happened today. We have Bitcoin signal today. I mentioned in the video just 3 days ago, we were also waiting for the Bitcoin signal to come in. Well, we have it. So what normally happens on Bitcoin is, as you can see, this is a wonderful, wonderful average Wall Street is using. Wall Street is very involved in Bitcoin now, and I know they're using this average, so pay attention to it. So it makes a bull flag. At the end of the bull flag, it hits the average, and we get a buy signal, runs up, another bull flag, which is what? Quick run up, consolidation, right? Bull flag, bear flag, same thing. Quick run up, consolidation, quick run up, consolidation. So bull and bear flags are the same. But it hits the average and explodes. Puts in a pennant flag, explodes out of the pennant flag, comes down and hits the average and explodes. Then what's this? Comes out of the average. It gets under the average. Well, that's different. What's this? So right at that point, I started to say, okay, traders, maybe a little pullback is coming. We'll wait for the next signal. There it is. We came down, spent a little time. Signal is in. So now you can buy the dips in Bitcoin. And you know we've got an 85,000 projection in Bitcoin. It may get there sooner than we had planned, but that is the projection. We've had this on our board in each one of our YouTube videos for a good 2.5 years now. It will be there soon, I promise you. So that is Bitcoin, another signal. Then we've got something like this. There's a lot of talk about the markets, and people are uncertain whether the markets are going to go up or going to go down. Is the stock market, what's it going to do? Oh my God. And let me show you something. There is no way this market is coming down right now. This is chart masterpiece. We've been using this for several years, this very same chart. It helped me call the bottom. In COVID, I mean, it helped me do all kinds of great stuff. This chart, the NASDAQ weekly bar, is telling us we still have a long way to go on the upside. Why? I'm going to take you through this chart so you can see it for yourself. We're going to go back a long time on this chart, if it even has the data for me to go back that far. Let's see. How far back can we get? Good. We're at 2005. Let's move a little forward past that. Good. Right here. Check this out. 2008, 2009. The big crash of 2008-9. You might notice that the NASDAQ weekly bar does not get under the 200 bar moving average at all. But the crash of 2008-9 did it. Down we went, came back out in 2009. Boom, just like that. Underneath in 08, back out in 09. Now here's what's interesting. What happened after the market got above the 200 bar moving average? Massive rally, massive rally. So gets above the average. This is a weekly bar, kids. It got above the average at 1782, and it went to 1901. 2,000-point rally in the Dow. Excuse me, in the NASDAQ. So NASDAQ hits the 200 bar moving average on a weekly, runs up. Hits it on a weekly, runs up. Hits it on a weekly, runs up. Hits it, runs up. Hits it. Extended rally begins. Okay, so now watch, extended rally. It just continues. It hit the 200 and an extended rally ensues. Watch. Finally starts to come back, almost gets to the 200 bar moving average. Another extended rally ensues. These aren't little rallies. These are long, extended rallies. Comes back down. NASDAQ weekly almost gets to the average again. An extended rally takes place. Then COVID hits. We hit the average during COVID, and what happens? Massive, massive rally, hits the average again last year, and now we're in a massive rally. Kids, the rallies I just showed you, the one that we're in now is pale compared to the ones that we've seen since hitting the 200 bar moving average on the NASDAQ. So I am here to tell you that the NASDAQ is telling us, look what it just did right here. Look. We just had a down spurt a few days ago, right? And on that down spurt, all it did was go right there, right to the trend. Right back up we go. This is Chart Masterpiece. This chart tells you everything you need to know. U.S. indices are not going lower this year unless something happens to that chart. Then there's one other chart I'd like to show you, and let's see, where is that? That is BCOM. And that should be in here somewhere. Let me show you something interesting. The stock market is going to continue to go up. So we've got a lot of talk about inflation, right? Inflation, inflation, inflation. When you go to the store, you see inflation. If you don't shop yourself, your wife or husband comes home and tells you about the inflation. It's in products all over the stores. But I am here to tell you this. The reason why companies are going up is because they're not experiencing inflation. They make products from raw materials, right? Raw materials. During COVID, when we had a backlog, you could not get raw materials. We had hyperinflation. Inflation gauge, this is the measurement of inflation. I call it the measurement of deflation these days. It was at 140.55 during COVID. You couldn't get supplies, the prices of products went up. Well, we have dropped from 145 to 98.70. It's not even 98.78 anymore, it's 98.70. That's how far inflation has come down. This is commodity inflation. These are the products that companies use. They buy these raw materials to make a product to sell to you. That product cost them a fortune to make 2 years ago. It does not cost them a fortune to make anymore. Look at how far down we've come in inflation, but they're keeping the prices higher. That's giving us consumer inflation. What I am telling you right now, the product, the raw materials that these companies are using to make these products that they've never lowered the prices on us since COVID, they're bullshitting us in plain English. They are getting their supplies much cheaper than they were getting them 2, 3 years ago or even last year, but they're not lowering our price either at the pump or at the store. However, those companies are still enjoying the cheaper price of raw materials and the high price of the inflated products on the shelves. They are going to continue to make money. This market will continue to go up. Do you get that, everybody? That is what I was hoping to show you. I hope this helped you with the AI stocks and ETFs that we looked at 5 weeks ago. I hope you were paying attention and you bought some of them. And I hope what I just showed you here will help you for the rest of the week. Now, if you would like to find me, I am very easy to find. Like I mentioned, I'm sitting in a live trading room right now as I'm typing and speaking to you guys. Neil Dacey is someone who's come out to my training camps. I host the training camp here. Usually happens Thursday, Friday, Saturday, and Sunday. Thursday, Friday, what's actually Friday, Saturday, Sunday, and Monday. People show up in town on Thursday, they leave by Monday. One of my recent, about a year or so ago, attendees was Neil Dacey. Neil Dacey is going to present for us, and he's going to tell you where you can find me, what happened at OmniCamp, and how the Omni actually works. So I'm going to yield some time to Neil now, and Neil will show you where you can find me and what the Omni is all about. And then if time allots for it later on, if there are any questions, I'll be more than happy to help you out with questions as well. Neil, are you there, buddy? Are you ready to present? Mr. Dacey, are you with us? Are you ready to go? I'm going to have to say no.
His audio is connected, but his mic's not broadcasting. Neil, the easiest solution to that is to unplug your audio and plug it, or your mic and plug it back in.
And who's that, Neil?
Yeah. I show his mic's on, but we don't hear anything.
You were able to hear my whole presentation, right? No problem with me?
Yeah, you're great.
So I hope it's going to help. Neil, I would like for you to show them where to find me. If you can't get to it, I'll show them, but hopefully you can. Because Neil is a very loyal Omniac he's learned a lot since he's met me, and he's only known me for a short period of time personally. So I would love for him to be able to present this to you.
I'm gonna go ahead and you said he had a slide deck to share too, right?
Yeah, he wanted to show you a little slide deck.
Okay, I can make him the presenter. It won't necessarily help him with the audio though. But I will allow him to share a slide deck.
All right, Neil, are you the presenter now?
Okay, I can see his slides. We just can't hear him still.
So there's no audio.
Yeah, it's on his side. You know, I could probably get him working if I have a phone number for him, which I think I do. Let me give him a phone call real quick,
Sure.
and I'll see if I can't get him running.
I will do something else. I'm going to go over a trade while I'm waiting for you.
Okay, I'm going to turn the presentation screen back over to you, too, because we're not seeing your screen anymore.
So I'll show you for now, while we're waiting for Neil, I'll show you the trade that we took today, which actually didn't work. Losing day today. So this is soybeans. I'm surprised it's not a label chart. This is soybeans. And soybeans looked to us like it was going to come off today. And we ended up getting short. Let me show you. We ended up getting short today in soybeans right around here. And it didn't work. We got out at the end of the day here. So not a big deal, but we were sellers of rallies today in soybeans, and it did not come down. Is what it is. Just figured I'd share that with you while we were sitting here doing nothing. Because not every one of our trades wins, right? It's not possible.
Hey, Oscar.
Every one of my trades would win. Yes.
I'm sorry, this is Greg out of Texas. How are you doing today? Loving your presentation so far. And yes, it was very clearly came through up to now. But while we're waiting, there is a question on YouTube if you'd like to respond to that.
Sure. What do you got?
He says, can you check out the, excuse me, this is R. Reardon. He says, can you check out the VGT if you have time?
VGT. Let me see if I already have
I don't
it.
know what that is, if I'm honest.
And it didn't come up, so let me pull it. Oh, you know what? An easier way to get that would be this. It'll probably show up for sure. VGT. Let's see what we get. Oh, yes. I actually do know this stuff. I just read about this in the paper. This is in the weekend paper in Wall Street Journal, this stuff. So you can see clearly, in fact, let me make this white so you can see it a little better. But you can clearly see right off the bat, it's not looking perfect right now, right? It's having some trouble. So let's just get rid of some stuff and see what we got here. I think I can put a template on here. There should be something called webinar template. All right, let's see what we got. So right off the bat, we'll see if they're going after any of the Wall Street averages. Doesn't look like they even care about them. Now let's go out to a weekly and see what that looks like. Do a monthly. Here, 200. Ooh, yuck. Hey, based on this monthly, which I wasn't planning on even looking at, you know, I mean, that's a serious resistance taking place here. So anyway, I wanted to look at the weekly. Let's go look at the weekly. I'm literally staring at it for a moment to see what it's done on a weekly recently. What an ugly chart to begin with. Yuck.
I'm sorry, Oscar. Mr. Reardon points out that's the wrong security. He was asking about the Vanguard Information Technology Index Fund ETF, and I have no idea how you pull that up, but Jeff could probably tell you.
Symbol? I'm glad because I can't stand the way this chart looks. I'm glad I don't got to work that chart. It's ugly. So if you know the symbol, I'm more than happy to pull it up, but you got to know the symbol.
I don't, Jeff, and I don't have MetaStock running right now because it's a broadcast computer. Jeff could maybe help you when you come back on.
Wait,
I know he's over there right now.
I got to take you to another chart. I forgot to show this to you. How cool is it? In our last webinar, well, actually the one before this, the last webinar was about AI. The one before it was about geometry. And I showed you some really great moves in geometry. We were down here, and I told you based on the geometry, Chipotle goes to 3,000. Go back and look at the webinar. It's got this very chart with this note in it. That was here at 1402. It broke 3,000 yesterday, kids. How about that for a call? Insanity, right? Now that is a testament to the power of technical analysis. How on earth would I know Chipotle is going to 3,000 and when it would get there? I don't have a crystal ball. I do have a crystal ball, but I don't use it for trading. So the analysis told me, and I told you this when we were down here, I don't know, 6 months ago. I said, you watch what happens to Chipotle. The geometry tells us it goes to 3,000. That yellow line right there is 3,000. It just took it out. Next target, by the way, 3150 if you are a Chipotle holder. Just thought I'd share that with you because it was actually in my plans to show you today. I just forgot to show it to you. All right, now, did we get Neil fixed? Neil, are you fixed? Are you?
In progress. He's working on it. We're going to try a different microphone real quick.
That's one expensive burrito, says Dan. Oh, yeah, you are right. So anyway, traders, you were there for this call. If you watch my webinars, that was a masterful call, kids. That's pretty good. I mean, that is the testament of technical analysis. What else is there? Is there other cool stuff we could show while we're waiting for Neil? There's always cool charts. There's always something cool out there. So we could, we should probably look at bonds just because they're giving us, they have so much to do with what the Fed does next. Let's go take a look at bonds. See if I can just pull up an old bond chart. If not, T-bonds, are we in here somewhere? Yes, we are. All right, so for T-bonds, the Fed, between the PCE and bonds, gives them a big, big heads up on what they're going to do next, right? Bonds are very, very important. So what we're looking at right now, and why this average is here, I don't know. Let's see what it is. I don't even know what the average is. So 100 bar moving average. I don't even know why that's on the chart. It must be from something else. Let's just see what average looks better. I don't know that. Let's go back to the 50 because Wall Street seems to like the 50. Let's see what the 50 does. All right. The 50 is more involved. You can see Wall Street's probably hovering around that 50 more so than other stuff. So what we're getting in bonds is a consolidation, if you will, in this direction. Right, sort of in this direction. It's sort of coming down. Now, bonds going down is interest rates, believe it or not, moving up. So when bonds go in this direction, slowly interest rates are rising. When bonds go in this direction, interest rates are dropping. So this is almost flat, if you want to know the truth. What's happening here is kind of good. It's almost flat. You know what I mean? You could draw a horizontal line at the top and bottom of this, and it's really not going anywhere lately. It's just been stuck in this area. So let's get rid of this for a moment. Bonds have really been stuck in here, sort of flat, right? In between this line and that line. And if we can keep bonds that way, the stock market will just continue to rally. You can keep bonds somewhere in here or higher. Higher is always better. Bond futures. As long as they stay in here, they're basically sideways right now. Sideways interest rates helps the market move higher. Looking at fundamentals instead of technicals, usually a presidential election year, by the way, is a bullish year. You go back and look at the last 50 elections, you're going to find 47 of the last years leading up to that election are bullish. 47, whatever, 48, whatever number we're at presidents now. So if you go back and look, the odds are good that you had a pretty decent year leading into an election year. And we've got that happening now, and bonds are stable. So I'm assuming that we're going to have a decent year this year, as long as nothing insane turns out, pops up without us knowing about it. And we'll go back to the one that started this mess. All right, Neil, how you doing back there, buddy?
We can't get him running, Oscar.
So basically what Neil was going to do is make my life easier and show you how to join me in my live trading room. And the way to do that would be to go to Live with Oscar. So I'll pull it up for you. If you go to livewithoscar.com, this is really simple. If you already have the password, you log in. If you don't have one, hit the register button. There is almost nothing to fill out. There are no credit cards required at all. You will ask for a code. It will go to spam. Your email will go to spam. There's no way to stop that. Go to your spam, click on the email, and you can immediately join me in my live trading room, and you can hang out with me at livewithoscar.com. Also at Live with Oscar, we offer trading recommendations, and Neil was going to go over a few of them with you as well. I send out trading recommendations 24 hours a day, literally, except for Sunday, Saturday, and Sunday. Sometimes we do go out on Sunday night. Where the Army wants to get in and out of the market, we send you a flash update through Discord, through email, text goes out all kinds of ways, and I say it in my trading room. So we make sure that everybody gets the signals, but better than getting the signals is learning how to qualify and quantify a market, to know what Wall Street knows before they know it. If you want to learn that, you'll have to come to omnibootcamp.com. I don't know that I have one up right now, but if I have one, I'll show it to you. Yes, I do. omnibootcamp.com. If you go there, you will just simply click Get Started. You can fill out a small application. Takes no time at all. You can set up a time to speak with me on the telephone. That happens at omnibootcamp.com. But if you want to come out to my Omni Camp, which is that 4-day training session, one of them is at the end of April, the other one is in June. Please contact me, let me know. Easiest way to contact me is at livewithoscar.com, or just simply call. When we don't bite here. You can just give me a call and I'll discuss OmniCamp with you at that number and see if you qualify. So I'm doing one in Florida and one in Vegas. The one in Vegas is April, the one in Florida is June. If you want to join me on either of those two, go to omnibootcamp.com or just dial 702-629-4755 and we'll discuss the details. Jeff, with that, I thank you so much for your time. I thank you for letting me present. Neil, it's a shame you didn't get a chance to show them your wares because Neil's very good at what he does and he's a great presenter, but I did show
we've had him do it before. He does a great job. I was really sorry we couldn't get him rolling. So
that's about it for me, sir.
All right. Thank you, Oscar. Really, really appreciate that. Oscar's phone number again, 702-629-4755 or www.livewithoscar.com or Live with Oscar, whichever one. They're both applicable, right, Oscar?
They're both applicable, no doubt.
All right. Great job, as always.
Appreciate you.
Thanks, Oscar. Okay. Let me go ahead and do this. All right. And if you like that, I've been kind of talking a little bit about this all day. Let me go and make myself the presenter. I'll show my screen. Okay, go ahead and do this. Okay. And this. Okay, we should be golden. All right. I've been kind of talking about the training class that we've been including with the Summit deal from Oscar. As part of the Summit deal, you'll get a master class. We sat down for a training session on technical trend lines and technical formations. He talks about in his class 3 hours how to do trend lines, how to find support and resistance levels on charts, how to look at different technical formations and which ones to look for. 3 hours of training, basically all available as part of the Summit. And it's normally $4.99. Here at the Summit, you can get it for $3.49. You can do that by giving us a call, 800-882-3040. You can give us you can go to metastock.com/saleschat. And it is part of that big bundle offer where you get the new Vora Victory Method 2, the Power Bundle, the Super Signals, the Trend Radar, Buff Dormeier's 3 months of his toolkit, Serge Berger's Vertical X Pro, the 10 lines on training toolkit. I need to remember to do this next time. And 3 months of Learn MetaStock, Unleash the Power of MetaStock. Normally, all of that would be $6,528. Here today, $2,436. Metastock.com/summit deal, 800-882-3040 or metastock.com/saleschat. If you want to scan the fancy little QR code there in the corner, you can as well. So let me go ahead and put that out here. And thank you, Oscar. Appreciate that. Sorry we weren't able to get, sorry we had a little bit of a technical issue. We'll just put it that way. Before we go to our next guest, I want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine, great supporter of ours, been supporting us for a number of years. You can get a free issue if you go register. If you're watching on YouTube and you haven't registered yet, metastock.com/traders-summit. You can get a free article, get a bunch of free different stuff, even get like an OmniCamp trial. And you can all do that all with your registration at metastock.com/traders-summit. Also, if you're watching on YouTube, like and subscribe. We're trying to get to 70,000. We're almost there. We need about like 1,700 more. So hit the like, hit the subscribe. It helps a great deal. We appreciate it. It does help. So in any case, Of course, for MetaStock, we've talked a lot about, my audio sounds a little bit off since we were doing that audio test. No, it's correct. Okay.
No, your audio's fine, Jeff.
Okay. Maybe I
You're
just
good.
sound weird. But we talked about.
I mean, there's no accounting for. No, you're angelic.
Okay.
As always.
Thank you. You can get a 3-for-1 on MetaStock. Like, you can buy a month, we'll give you a second and third month for free. You can do that at metastock.com/Traders Summit 3-for-1. If you have questions, call us. More than happy to talk to you. 800-882-3040. Chat online with us at metastock.com/chat. So without further ado, our next presenter is John Thomas. John always has an interesting take on the markets. I love the ideas that he shares with us when he presents, and we're going to go ahead and get him started. John, how are you doing today? Uh-oh. John, can you hear me? I do see your speaker is also on. And I can assume you can hear me because your audio is connected. If you can hear me, what I would like you to do is actually unplug your microphone and plug it back in. If it's a serial connection, that'll give you enough to have GoToWebinar. This is weird that it's 2 in a row right now. What if it's on GoToWebinar side? All right. Let's see, I'm still not, I did hear just Greg just now. So, and I do see your microphone is live, John. What I'm going to do is I'm going to prepare to do the,
Yeah, FYI, I also cannot hear John.
yeah,
and I also do see that his mic is on.
Yeah, I'm kind of assuming that he can hear us. John, if you go to, the other thing that you can try is you can go to audio, click on no audio and go back to computer audio, and that sometimes helps. If not, I'm getting ready to give you a phone call and putting up a What is MetaStock video. But apologies for the for some of the issues that we've had today. Let's see if we can get him to listen real quick. Okay. Okay, hold on just a second, guys. We're going to go ahead and do this. Oh, I can do it this way. Okay.
Test.
Oh, John, there you are.
Can you hear me?
Yes. Hold on, I was just about ready to play our video. It's like,
Yeah,
oh, yeah.
no, I don't know what I did. I'm just playing around with the controls.
All right.
I went from computer audio to no audio back to computer audio, and that fixed it.
Yeah, that's one of the tricks. So
that is the trick.
That works. Also, unplugging it and plugging it back in does wonders too. So let me go ahead and make you the presenter.
Okay, let's get rid of that. Let's do this.
All right.
Can you see my screen?
I can see it. We are on the upswing.
Okay, that only took 2 minutes.
Yeah, so, we're okay.
Yeah, it is blizzarding in Lake Tahoe here. I had to battle my way up yesterday over Sonora Pass, and but I made it.
Oh, good. I'm glad you did.
We got a foot of snow here yesterday. I should warn you that I added an extra 5 minutes to my PowerPoint today so I can disclose my deepest and darkest secrets about making money. But I did not take out another 5 minutes. So if I sound like I've had too many cups of coffee this morning, that's the reason.
Okay, all right. Also, we are starting you about 5 minutes late. And if you need to go a little bit long, it's totally fine. But yeah, I can see you, I can hear you, and I'm going to get out of the way. Your turn.
All right, and I'm watching the question box. So if anybody wants to ask me any direct questions, if I get a break, I will address them. So this is John Thomas, the Mad Hedge Fund Trader. Welcome to the dot-com bubble part 2. We are getting a 90s replay, and you can expect the same result. That means we can go up for another 5 years before this thing really peaks out and we have a major crash. Until then, we're either looking at minor corrections or sideways time corrections until then. So take out your pen and paper and take notes, or start typing in the smartphone. What I'm about to tell you will change your life, and I'm in the early retirement business, your early retirement. Why listen to John Thomas? Well, I have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo and later the White House, 10 years running the international equity division at Morgan Stanley, time out as a Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, and 5 years fracking for natural gas in Texas. And I'm still cleaning oil out from under my fingernails on that one. Now 16 years publishing the Diary of a Mad Hedge Fund Trader. I am one of the founders of the modern hedge fund industry who's still working. This is the other reason to listen to me, performance. This is our trailing 1 year return, 56.98%. And you can see we've had a great run since the beginning of the year, and we're just short of all-time highs, maybe a day away or so from all-time highs today. And we haven't just been lucky the last year, we've actually averaged 51.57% over the last 16 years, and we have more than doubled the performance of the S&P 500. Here you can see the SPYs down here in orange, and that's us up here in the blue. Of course, our secret is our Mad Hedge Market Timing Index. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. Took a team of mathematicians 1,000 hours of calculations to come up with this algorithm. So why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms become so dominant in the market, you should never trade without one. Does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. This is a typical 3-year period for our algorithm. You see, we've been using it for quite a long time. We get lots of buys at market bottoms, lots of sells at market tops. Buy, sell, buy, sell. It's like owning a printing press for $100 bills. And I'm not the only one using the algorithms. Some 80 to 90% of all market trading is algorithm driven. And I was walking along the Miami waterfront a few years ago, and I saw this mega yacht. And look what it's called, algorithm. Obviously working for more than just me. This is the readings as of today. And this is the market timing index for the last year and a half. And you can see we are in an extended overbought territory for the algorithm. We're either going from overbought to extremely overbought, and we've been in there really since November. So this is an unusual market. These are unusual times. The last time I saw a market like this was in the late 90s when we had the dot-com bubble. So there is a method to my madness. The market has seen the fastest 25% market rise in history. Fed is done raising interest rates. Market are now discounting the first rate cut in June, and that could go on for another 5 years. Jay Powell has written in his own blood a promise to cut rates 3 times by the end of the year, all fixed income and interest rate sensitive plays. Love that, including bonds, REITs, precious metals, financials, and foreign currencies. The bull market continues, but needs to catch its breath. Oil prices and commodities are now trading as one, rising on an interest rate driven global recovery. Tech bull market is back and will continue for years. Time to go aggressively long stocks and bonds is here. So this is my secret sauce, how to reliably pick a winning options trade. Well, first you have to know the macro picture. If you have a handle on whether the economy is growing or shrinking, you have a major advantage in the options market. By the way, most people in the options market have no idea what the economy is going to do. They just rely on quantitative analysis, charts, and so on. In a growing economy, you only want to employ bullish strategies such as calls, call spreads, and short volatility plays. In a shrinking economy, you want to execute bearish plays such as puts, put spreads, and long volatility plays. Remember, the only thing that is useful is a view on what the economy is going to do next. We live in the what's next industry. Government only publishes historical economic data, which is anywhere to 3 months to a year old. And for the most part, that is useless in predicting what is going to happen in the future. Look for a great industry. You want to give yourself another edge? There are more than 100 different industries listed on US stock markets. However, only about 5 or 10 are really growing decisively at any given point in time. The rest are either going nowhere or are shrinking. In fact, you can find a handful of sectors that are booming while the others are in outright recession. If you are in a major hedge fund, institution, or government, you may want to cover all 100 of those industries. Good luck with that. That only costs about $20 million a year in overhead. If you're a small hedge fund or an individual working from home, you'll want to conserve your time and resources, skip most of the US industries, and only focus on a handful. And that is Jensen Huang at NVIDIA showing his new Blackwell microprocessor out in a couple of months. These are going to sell for $50,000 each. And he has a monopoly in that industry. That is a great industry to be in, and which is why the stock is up 400% in a year. Actually, it's 300%. Look for an ideal micro picture. Once you have a handle on the economy, the best industries, it's time to zero in on the best company to trade in or the micro selection. It's always great to find a good target to trade in because positions in single companies deliver double or triple returns compared to stock indexes. It's because the market will pay a far higher implied volatility for a single company than a large basket of companies. Remember also that you are taking greater risk in trading individual companies. One single stock is subject to far greater risk than a basket. And if the earnings come through as expected, everything is hunky-dory. If they don't, they can drop by half. And by the way, most of the micro recommendations we put out, I have been visiting the companies for 50 years. Unless they were created less than 50 years ago, like NVIDIA, like Apple, like Microsoft, Meta, and so on. The technicals line up. Never been a big fan of technical analysis. Most technical advice boils down to if it's gone up, it'll go up more. If it goes down, it'll go down more. Over time, the recommendations are accurate 50% of the time, or about equal to a coin toss. You wonder how many brokers on Wall Street keep their jobs with no idea about what's going to happen to the market. That's because being right 50% of the time is considered a win. You just do type stops on the losers. However, the shorter the time frame, the more useful technical analysis becomes. If you analyze intraday trading, almost all very short-term movements can be explained in technical terms. And this is where you start hearing words like RSI, MACD, Fibonacci's, Elliott wave, and so on. It's a classic case of if enough people believe something, it becomes true, no matter how dubious the underlying facts may be. So it does behoove us to pay attention to the charts, especially when executing your trades. The calendar is favorable. There is one more means of assuring your trades turn into winners. According to the data in the Stock Traders Almanac, $10,000 invested at the beginning of May and sold at the end of October every year since 1950 would be showing a loss today. Imagine losing money for 74 years. Ouch. Amazingly, $10,000 invested on every November 1st and sold at the end of April would today be worth $702,000, giving you a compound annual return of 7.1%. That doesn't include 2.5% in dividends. This explains why I take my vacations every year in the summer. Of the 74 years under study, the market was down in 25 May-October periods, but negative in only 13 of the November-April periods, and down only 3 times in the last 20 years. There have been just 4 times when the good 6 months have lost more than 10%. That was in 1969, 73, 2008, 2020. But the bad 6-month period have been losing efforts of 10% or more. And if you remember, all of those years had special things happening, like the Vietnam War, a presidential election, the end of the Nifty 50 in 73, the 08 crash, the 2020 pandemic. It really takes something special to have a market go down big when the seasonals are favorable. So let me do the heavy lifting for you. You can spend 12 hours a day, 7 days a week, slaving in front of a computer, making sure all 5 of these criteria line up, or you can let Mad Hedge Fund Trader do the heavy lifting for you and spend 5 minutes a day reading my trade alerts. Adopt these 5 simple disciplines, you'll find your success rate on trade jumps from a coin toss to 70, 80, or even 90%. In other words, you convert your trading from an endless series of frustrations to a reliable source of income. If a potential trade meets only 4 of these 5 criteria, please do it with your money and not mine. Your chances of making money have just fallen off a cliff. And I bet a lot of you poor souls execute trades all the time that meet none of these criteria. I see it happen all the time, and that's a picture of me lifting a fake rock on a movie set in the Sahara Desert in Morocco. And if you wondered why I'm there, please subscribe to my newsletter. I'll explain it all. Okay, so stocks, it's a big tech game. It's all about the data. Market has seen the fastest 25% rise in history. Big tech led with the AI 5 dominating, which is Microsoft, Amazon, Google, NVIDIA, and Meta. NVIDIA replaces Tesla as the top traded stock, with volumes migrating to the options market as well. Meta tells the whole story, cutting staff from 87 to 67,000 while increasing subscribers by 13 million and tripling profits. Cutting costs dramatically while increasing sales is the magic formula, and all of technology is adopting that. Company share buybacks are surging as companies race to pick up their own stocks before they become even more expensive. Buybacks should top 1.25 trillion this year. Lower interest rates equal more buybacks, and guess what's going to happen? We're going to get lower interest rates this year. At least Jay Powell told me so. Regional banks got another scare as New York Community Bank gets bailed out. We're in the process of going from 4,296 banks down to only 6. So I wouldn't get involved in the regional bank play anytime soon. Stocks, commodities are back. Investors are using big ATMs. Big tech has ATMs to move into laggard energy and commodity stocks. NVIDIA places Tesla as the top traded stock, with volumes migrating to the options market as well. Fed to scale back bank capital requirements. Dell becomes an AI stock, sending the shares up 47% in one day. Private equity is targeting Macy's with a $6.6 billion buyout bid for the real estate alone, taking the shares up 16%. So this is the bull case for this year. Last year, we had to worry about high inflation, an oil shock, a labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, poor earnings. This year, we're discounting the following: cheaper gasoline prices, rising commodity prices, stabilizing supply chain, record low 3.9% unemployment rate, better than expected earnings, 1.25 trillion stock buybacks, falling interest rates, and a weak dollar. And hello to all of you in Fort Worth, Texas. You'll know exactly where this steer is. It's a longhorn steer, by the way, with a warning sign, I might add. Trader's dilemma: the choice now is between 5 stocks that have gone up in a straight line for 5 months, or a dozen interest rate sectors that may be dead money for months, but are just going to crawl off the bottom now. Avoid the frustration trade, the chase you should have done on October 26th. Wait for the ideal AI entry point, no matter how long it takes. Big chunk of 2024 performance was pulled forward into 23, and you've already made that money. The sole exception is energy, which is driven by demand from the Chinese economy, which was weak until for all of last year and continues weak now. The market's at all-time highs. 90-day T-bills might not be such a bad idea at 5.25%. Government guaranteed yield, especially if you're over 70. So we run barbell portfolios. 75% of that is in big tech. Big tech accounts for 2% of the US workforce, 25%, now 30% of the market cap, and generate now 30% of all US earnings, and 25% domestic recovery stocks, which include railroads, airlines, cruise lines, couriers, steel companies, banks, commodities, construction, and credit card companies, hotels, casinos, and online ticket sales. NASDAQ, boy, that's a heck of a chart, up from 12,500 to 16,500. That is a 35% gain in 5 months. That's almost unprecedented. I'm not expecting any crash at all, and expect it to hit 20,000 by the end of the year, another 25% from here. I'm just expecting a time correction sideways and then more upside. Microsoft, we're looking for $500 a year here. Same sort of trends. Meta, same sort of trends there. Time correction and the new highs, looking for $700 there. Amazon, time correction, then $200 by the end of the year. NVIDIA, targeting 1,000. We got very close to that last week. And then a time correction, and then maybe new highs. Alphabet just had a big sell-off and then a recovery. We're targeting $200 a year by the end of the year there. And Salesforce, I'm looking for $400 a year for Salesforce. Again, all of tech trading is one. Look for a time correction, then new highs. Palo Alto Networks just had a big sell-off, $100, $120 sell-off on an announcement that they're moving on to a new generation platform for cybersecurity, and that may give you a 1 quarter ding on profits. After that, it's new high. Great entry point for Palo Alto Networks, one of the few recession-proof industries out there. Second half of the barbell, bets on falling interest rates for the rest of the year. Upside potential for domestics is greater than it is for tech from here. Some of these stocks have not moved for 5 or 10 years. Focuses on economically sensitive industries, makes a great counterweight to high growth technology. We could spend years rotating back and forth between the two groups. Well, Boeing, the CEO, resigned this morning. That's not good. And in fact, the company's been mismanaged for 20 years. It's not the old Boeing. When it becomes the new Boeing, then I'll go back in. JP Morgan is the quality value play in banks. Banks love recovering economies, and falling default rates are hugely overcapitalized, moving into online banking and closing their expensive branch networks. Looking for $250 a year by the end of the year in JP Morgan. Visa is a great play on internet commerce. Looking for a small correction and then new highs to $400 a share by the end of the year. And Union Pacific is another great economic recovery play. Any recovery means moving lots of big stuff, mostly commodities, and that is the railroad business. And you also move a lot of small stuff in recoveries. Great place to get into Federal Express right here. And Berkshire Hathaway, the one stock barbell portfolio. They're the largest outside owner of Apple, also have very heavy exposures to energy and the banking industry. Looking for $500 a share in Berkshire by the end of the year. Bonds could be one of the big trades of 2024. TLT rocketed $19 from the October low and then gave back half of that. Falling inflation is the big driver from from 9% down to 3.3 in a year. Let me see if I have any questions here on the equity section. And the answer is not yet. TLT could reach 120 and 24 from the current 92. Keep buying TLT calls, call spreads, and leaps on dips. Junk bond ETFs like JNK and HYG also entering a long-term bull market with 6.35% yields. 30-year fixed rate mortgages dropped 70 basis points to 660 and are about to drop more. They could be down to 5% by the end of the year, setting the housing market on fire. And in fact, you saw that last week with the existing home sales, February up 10% year on year. U.S. bond issuance is about to drop sharply in Q2 from 500 billion down to only 80 billion. Less government borrowing is building a strong floor under bond prices. So here's the TLT. We're looking for another minor correction, then a takeoff once the interest rate cuts actually start. And this is the yield. They'll do a swan dive, going all the way down to 350 for the 10-year by the end of the year. That's down from the 508 high last year. Foreign currencies, we also think are a screaming buy here. Falling interest rates will bring a crashing US dollar. All foreign currencies will rally strongly. By the euro, the Australian dollar, the British pound, and the Japanese yen. South Chinese economy will keep the yuan. Let's see. Will keep the yuan relatively weak. 40 years of a one-child policy have created a shortage of consumers and home buyers, and there is no easy fix for that. That is causing a financial crisis. Strong currencies will also deliver major bull markets in emerging market stocks like the EEM and the CEW. There's the Aussie dollar bottoming out here. We're looking for one-to-one parity against the US dollar over the next couple of years. And the Japanese yen is bottoming out, looking for a major move up in that also. And by the way, the Bank of Japan just raised interest rates last week for the first time in 34 years. Euro, we're looking for another 25% gain here. Energy and commodities, that's where the rotation is happening right now, out of tech into energy and commodities. Oil has crashed from 96 down to 68 3 months as fears of a global economic slowdown continue. Gasoline prices hit a 3-year low on recession fears. Energy stocks are tracking to the downside, pulling down other commodities. There's a buy here when the global economy reaccelerates on lower interest rate world. Watch ExxonMobil and Occidental Petroleum, where we already have long positions here at Mad Hedge Fund Trader. China's oil imports have fallen for 9 consecutive months, the world's largest importer. And natural gas doubled on a big freeze and then absolutely crashed to a 20-year low. Okay, so here is oil, and you can see it went down to the low 70s bounce, and now we're back on the way up in the 80s, and I think eventually we do hit 95. That'll be great news for all of the oil plays, all of the oil majors, the refiners, the intermediate drillers, and E&P companies. However, I do think oil is in a long-term bear market. We hit 150 back in 09. The latest high was at 120. We're eventually going back down to 10, but it may take a couple of years to get there as gasoline gets replaced by EVs. Now 18% of all new sales in the United States. Precious metals are in a new bull market. Gold broke out to a new all-time high at 2,200 an ounce. Look for another 20% gain this year. Gold miners are lagging because of cost inflation cutting into profit margins. Silver lags because of a crash in demand for solar panels, thanks to PG&E cutting the price they pay for third-party electricity. Collapsing interest rates next year will be the big story here as interest rate competition from the US dollar declines. We see gold hitting at least 2,400 this year and perhaps higher. If you like gold, you'll like gold miners. We see Barrick Gold eventually hitting $40 this year, or more than a double off of this year's bottom. And silver also does well, going up to $50 is a double here in silver by the end of the year. So don't play with matches. You could probably do okay buying all these stocks I mentioned above and forgetting about them. However, the reality is the conditions for these companies change every day. They are all viciously competing, trying to put each other out of business. If you don't, if you don't get daily updates on the fundamentals, you could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket and avoid an out of the blue blow up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundred. And that's me sending out a trade alert from the coast of North Africa, struggling as hard as I can to smile because it is 120 degrees. Ouch. The harsh truth is you really need my help. Majority of individual traders lose money. They lack the correct trading discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? Because they don't sell. That's not so bad when the market's going from 6,000 to 39,000. You need a real pro to guide you through the market maze. Market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 51.5% average annualized return, more than double the S&P 500. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast, and occasionally he lets me fly them too. Greg turned 100,000 into 3 million solely on my trade alerts. Just bought a new home in Orange County, California with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3. Still had enough money left over to send 3 kids to college. And here's my friend speaking from the Rocky Mountains.
This is Bob. I live in Denver. 9 months ago, I joined Global Dispatch Service, so fresh profits I made. 2 weeks ago, while hiking in the Dolomites, I joined this concierge service. And 2 weeks, it was 100% paid for it, and I couldn't be happy. Life is good. John really helps. The other day, I had a text message exchange with him regarding concerns I have with TLC. He encouraged me to stay in. I did, and today they went out at 95% of maximum potential profit. That's the way it works for me. Hope you all do well trading yourselves. Thank you.
And thank you very much. So what do we do about all this? Well, stocks, you want to buy the next dip. Bonds buy dips. Commodities buy dips. Energy buy dips. Currencies buy foreign currency dips. Precious metals buy dips. And let's see if we have any questions in here yet. Not yet, okay? So if you're not up 56.98% the past 12 months, as I was, you're reading the wrong newsletter or following the wrong trade mentoring service. 56.98% trailing 1-year return. You get that kind of performance, you get to do things that other people don't do, like take the Queen Mary from New York to England. When you get to England, you can take the Orient Express to Venice. And once in Venice, you can go island hopping in your own private helicopter. The very long-term view is where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade starting in 2023. This is what the Dow average did from 1982 to 2000. Are you ready for a replay? It went up 20 times in 18 years. That is what happened the last time we had an identical demographic tailwind to what we're having now. So if we do go up 20 times from 2009 in 18 years, that takes us to Dow 120,000 by 2030. And if you think I'm crazy, we're already 2/3 of the way there now with the Dow at 39,000. We have less than a triple to go to get to that 120,000 target. Except this time it's different. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of functional quantum computers means that computational ability is about to increase a trillionfold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. All major human diseases will be cured. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So who'll show you how to play the next 90,000 Dow points? Sit with me, John Thomas, and my global trading dispatch. Discover how you can tap into the top performing trade mentoring service in the industry of 56.98% in a year. Follow my research and market beating trade alerts and you will rake the profits in. Let a Marine combat pilots steer you to big profits. We send out trade alerts for single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trading month for us. We did 11 trades, 10 made money. We bought the S&P 500, made 16%, sold Treasury short, made 8, bought the Russell 2000, made 14. Oops, we stopped out of Biogen, lost 21%. We stop out of losers very quickly. It's easier to dig yourself out of a small hole than a big one. It's just a matter of time before barbell stocks break out to new all-time highs. They're probably doing that right now. Watch this space melt up for the rest of 2024. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. Here's how it works. At the beginning of the year, our algorithm predicted a major upside breakout coming in NVIDIA. So we sent out a buy alert, and this is what it looked like. Buy NVIDIA at 480 or best, opening trade, $10,000 investment required you to buy 21 shares. What happened? Well, it went up 45% in 22 trading days. So what do? We send out a sell alert. Take profits. Sell NVIDIA at 695 or best. And on this trade, we made $4,500 on a $10,000 investment in just a few days. So these are our Hall of Fame, our Mad Hedge 10 baggers, stocks that went up 10 times after we recommended them. We got a 10x on Zoom, a 10.6x on Lam Research, an 18x on NVIDIA, 25x on Square, a 40x on Moderna, and we got into right before the pandemic, and a 178x on Tesla. With Mad Hedge Global Trading Dispatch Service, you get instant trade alerts and out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars like this one with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, access to a 16-year database on investment ideas searchable in names and ticker symbols. This is the one-stop shop. It's for individuals who want to understand what is happening with their retirement funds for people who want to learn how to trade for a living, get the financial education of a lifetime. For smaller institutions and financial individuals who can't afford an in-house research department. Get in before the next melt-up begins. This is what you get, daily newsletter in your inbox every morning telling you what trades to do today. You also get Mad Hedge hot tips every morning telling you the 5 most important things that happened today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge $12,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge you $3,500. That's the full price of what I'm offering you on my website. This is the real deal. Creating this product costs me millions of dollars. With the best customer service in the industry, running it costs millions more. Here's the offer you can't refuse, just 6 months for $997. That is a 71.5% discount to the website price. It's a limited time offer. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. That will take you to the dedicated sales page, which is only available today. And Jeff, you can go ahead and put the link in the chat box.
I already did.
Well, thank you very much. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Okay. Let me show you how to make the money to pay for your own subscription, 6 months for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success that you can execute tomorrow morning and make some of the best, most serious money in your life. Don't leave good money on the table. 95% of these trade alerts make money. And just to give you a tease, this is the chart of the trade alert, which I'm about to send you with the price and the name stripped off. You have to go through 1,000 charts to find one this good. Let me do the heavy lifting for you. Well, I'm not going to tell you, is this a buy or a sell? You'll just have to subscribe to find out. So who is John Thomas? If you're going to work with me, it's best to find out who I am. My family origins are very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood playing Little League Baseball and becoming an Eagle Scout. There wasn't much in the old days to do in rural California except hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. Found the stock pages, bought IBM at 20 and sold at 30. Suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I spoke more than 4 languages and visited 50 countries. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of research, where I learned how to fly and jump out of perfectly good airplanes. There I consulted and advised America's Asian allies. Of course, in those days, doing research meant carrying a 45 caliber Sten gun, which used to jam on every 6th shot. I became a foreign correspondent for The Economist magazine when they learned I had a math degree to switch me over to covering the Asian economy and the stock market. Ta-da, stock market. And after 10 years of government service, all I got was this box of medals, which I drag out once a year on Veterans Day. Veterans out there will recognize the Purple Heart. Actually got 2 of them. The Southwest Asia Campaign, Good Conduct, medal from the Kuwait government, Saudi, that's the Kuwait government, that's the Saudi government, And of course, that's the Marine Corps Anchor Globe and Eagle. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. Figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and there's my original Morgan Stanley ID card issued in 1983. Yes, the years have been cruel. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the millions, it really has a big impact on your lifestyle. You get to buy the latest hot car, fly your own plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it for my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction to leveling the playing field for the average guy and teaching you how to trade, and that includes you. If I can take a $50,000 account, turn it into 500,000, that is more job satisfaction than I could get anywhere. The little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London, it's probably me. Ultimate luxury, of course, is to give those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warriors. And when wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which today are worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Eventually, even though the plane was 82 years old, we managed a brisk 250 miles per hour over the countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt Bf-109s, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between 2 big fluffy cumulus clouds, and I commenced a full-on aerobatic flight test. Pilots always want to see what I can do in these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wing overs, careful never to exceed 1G limitation or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well, as I have done for thousands of other followers over the last 16 years. I look forward to working with all of you, and I love watching this whole video. And there's the White Cliffs of Dover. Okay. What is your maximum drawdown so far in your performance? In 16 years, our worst drawdown was about 10 years ago. That was 8% in one day. That was the day of the flash crash. We held on, and every day, the next day, we made it all back. Since then, we have limited drawdowns to about 5%, which is completely tolerable given that the market is sold off at any given time much more than that. So here's the offer you can't refuse, 6 months for just $997. Let me show you how to make the money to pay for your own subscription. 6 months for just $997. Just click on the chat box on the right. And I'm going to check the store right now. We have all this up.
Jeff, I think we've lost audio for John.
I was wondering if it was just me. John, I think we lost your audio. I think it's gone again. However, let's see. You can get to the subscription. The links are in the chat.
I'm putting that into YouTube chat right now. The Mad Hedge Fund said
I got it.
Long. Oh, you got it. Oh, you're a
Yeah.
Good job.
Look at that.
Jeff, I think we've lost audio. Oh, now I've got this coming in the background. Sorry. I was wondering if it was just.
All right. Well, John, I don't know. We might have lost you at the end there. I can see your mouse is moving, but I can no longer hear you. You might go back to audio and click on no audio and then back to headset. That might work for you because that was what got you running before. I see the no audio part he heard. Okay, he's definitely down to no audio. John?
Hello.
You're back
There
again.
he is.
Welcome back. All right. Without interruption.
How long have I been talking to myself?
We let you go for a good 17 minutes. No, I'm just kidding. It's been less than a minute.
Yeah, since you said hello, is that okay?
Oh, you missed the best part.
No, we got the whole fighter pilot and stuff like that. It was just when you went to this side, for some reason it dropped again. So we can hear you now though. So
that could be either the local internet. Sometimes at Lake Tahoe, the electric power comes and goes. Sometimes the internet comes and goes, so it's always an iffy thing. But if it's only a minute, no harm, no foul.
Yeah, we just I think we heard you start to talk on this side, and then it went blank. But I'll let you continue. I'll get out of the way.
Well, there's not much to say.
Okay.
My time is almost up. Here's the offer you can't refuse. 6 months for just $997. Click on the link in the chat box on the right. And if for some reason you can't see that, just cut and paste this link or type it in to a browser and you'll go straight to our dedicated sales page. So let me see if there are any more questions here. Guessing that the stated returns. I'm guess Cynthia's asking. I'm guessing that the stated returns include acting on each trade in every asset class. The answer is yes. You know, usually stocks offer the best trading opportunities because they have the most volatility, but not always. There are times when there just are no good stock trades, and we're getting kind of close to one of those times now with everything staying so high for so long. So what do we do when that happens? We go look for cheap stuff. What's cheap out there? Gold, silver, oil, copper, and all the currencies. British pound, Japanese yen, Aussie dollar, Canadian dollar, and so on. So, you know, we're always looking to buy what is cheap and sell what is expensive. That is the fundamental advantage that any hedge fund has. That is any real hedge fund run by a pro. So, yeah, sometimes we don't touch stocks for months. Then it's be nonstop stocks for a year, as it has been for the last 5 months when they basically we're going up every day for literally 5 months. We really have only had one down day per month this year. That doesn't happen very often. But all our biggest positions now are in gold, silver, and energy. Again, the buy cheap, sell expensive stuff tends to work out very well over time. And let's see if you have any other questions. Do you trade only stocks and options? The answer is every trade alert we send out has 3 options. You can buy the stock, buy the options, or buy the ETF. And with the options, we give you the best options combination that gives you the absolute best risk reward over time. It's all about minimizing risk, maximizing return. We've been doing that for 16 years. And personally, I've been doing that for 55 years. It tends to work. Okay, any other questions? Okay, well, I think I will end right on time.
Very good. And I'm glad we got your audio back. Thank you again, John, for coming and spending some time with us. Good to have
it's
you.
always a pleasure, and always look forward to working with you. It's a joy.
All right. Same here. Thanks, John. All right. And the links are both in the YouTube chat and in the GoToWebinar chat. If you need help finding the links in GoToWebinar, it's under the question button in the open chat area. So let me go ahead and do this. Let me go ahead and make me the presenter again. And just see where we're at here. As a reminder, okay, hold on just a second here. Let's see, you should be able to see my screen. I'm sure Greg will let me know if there's any issues. Do want to remind you that we are doing the Summit Action Pack today at the event. And this is a great offer. You can get the brand new updated Vora Victory 2 with all the multiple time frame templates. You can come to our training next week for free. You can get his other 2 methods, the Vora Veracity and the Winning Momentum method, all for free as part of this. So that by itself is about a $5,000 value, and you get 1 year access to all of his trade recommendations, his weekly, multiple times per week Skype sessions that he does. All of the Trading Wins Pro membership is included with that, as well as Power Bundle 360, Super Signals, Trend Radar, Buff Dormeier's Analysis Toolkit, Serge Berger's Analysis Toolkit with his sessions that he runs twice a month, unlimited access to his thing, Oscar Carboni training, 3 months of Learn MetaStock, where we've been talking a little bit about how there's a training website out there called learnmetastock.com that has hundreds of videos on how to use MetaStock. You're going to get 3 months of that. You also get Unleash the Power of MetaStock. The value for that is $6,528 for all of that put together. Here at this show, it's $2,436. And I just need to fix this slide because for all of them. Anyway, you can take advantage of that at metastock.com/summit deal. You can give us a call, 800-882-3040, or you can go to metastock.com/sales chat. So there you go. Real quick, thanks for stocks and commodities. I've already talked in ad nauseum about how awesome they are. Do appreciate their support. They have done a great job over the years of supporting the event. And if you haven't yet, go sign up and get a free month of it. You can do that at metastock.com/traders summit, traders-summit. So, and then of course we're MetaStock. And the last presenter that we're going to have today is Kevin Nelson. Kevin actually used to work at MetaStock. He gave me a job, and that was a long time ago. For the last, I don't know, it's been a minute. For a while now, he's been running learnmetastock.com. He does 3 live sessions a week on how to use MetaStock. He's done hundreds of videos over the years that are available. One of the things that he does that I like is he'll take an issue of stocks and commodities and he'll make the system for MetaStock, but he'll talk about how much he likes it. If he doesn't like it, he'll give you kind of an unbiased review. This is something that he does fairly regularly on different indicators. And so without further ado, Kevin, can you hear me?
I can. Thanks, Jeff. That's a good introduction. I appreciate it.
All right, no problem. Here, let me make you the presenter.
Okay.
And I'll let you know we can see your screen and all that kind of stuff. Now get out of the way. Okay.
All right.
I can see this website. It looks like it's learnmetastock.com.
Something like that.
All right. It's all you, man. Go.
All right, perfect. Thanks again, Jeff. I appreciate it. Yeah, as Jeff said, I actually used to work for MetaStock for years and years. And in 2008, I left the company to start this training company about how to basically help people with MetaStock. It was just a really commonly asked question I got, and I figured there was a niche, so I figured I'd go for it. And that's what I've been doing ever since. And so what we do at Learn MetaStock is we literally help you with whatever feature it is inside of MetaStock that you need help with. And we do it in a number of different ways. But what I'll do is I'm going to hold off and I'll give you a little presentation on our website and the services that we offer at the end of today's presentation. So I'll just kind of jump right into what we're doing here today. All right, so what my game plan is for today is that what we're going to be doing is we're going to be talking about an indicator called the Supertrend indicator. And the Supertrend indicator is an indicator that was recommended that I take a look at from a customer and said that they came across this particular indicator, looks pretty interesting, you should take a look at it. And that's exactly how I get a lot of my different trading ideas for the training classes that we do. And once I took a look at it, went through a lot of the training that I could find, and said, that's perfect. So this is where I get a lot of my ideas, is again from customer suggestions. And it's just really just kind of a fun way for me to present different ideas of, of how to use MetaStock. And I do have to say, just real quick, one really nice thing about MetaStock is that there's so many different ways that you can use it. If you're just looking for, a program to try to, just to follow buy and sell signals and so forth, they have so many different add-ons now that they can really help you out and really kind of find the type of trading that you're interested in doing and find an add-on that'll really just kind of walk you through it hand in hand. On the other side of the coin, if you want to really learn how to use MetaStock and take advantage of it, that's where we can help you out. And that's exactly what we do, is we'll help you with whatever aspect it is inside of MetaStock that you need help with. But the really nice thing is that it's so flexible that if you want to try a trading idea inside of MetaStock, there's just a lot of different ways that you can do it. And so that's what we're all about. So anyway, so this particular indicator we're going to be talking about today is called the Supertrend indicator. And again, it's an indicator or a trading strategy that was recommended to me by a customer. So the Supertrend indicator itself is a trend following indicator. And as you probably know with technical analysis, if you're using a trend following type of indicator in a trending type of market, you're going to be very happy with it, right? It's going to keep you on the right side of the trend. And that's exactly what this indicator does. Now, whenever you're using a trend following indicator and the markets get real choppy and you get kind of in a sideways channel and so forth, that's where they struggle, of course. And of course, this one, it really isn't that much different in that aspect. But what's nice about it, again, it's just a really nice, easy system to follow. And what I really liked about it is that once I actually show you how this thing works, you'll understand exactly how to use it literally within a couple minutes. So very easy to kind of follow along. And one of the kind of the neat things about this particular indicator is it uses another indicator inside of it called an average true range indicator. And what the average true range, or ATR, does is it will automatically adjust for volatility based on how much the securities are moving around. So that's actually a nice indicator to use if you want something that's going to adjust for you automatically. And probably one of the best things is that this particular system here is extremely customizable. If you want to speed it up, slow it down, whatever, I'm going to show you exactly how to do that. And also there's a ton of training available for you. So if you just go out onto the internet and take a look at what's available, you'll see exactly what I'm talking about. But a lot of different ways to use this. And again, a lot of different training is going to be available for you. Now, whenever I create these different trading strategies for my customers, what I'll do is when I take a trading strategy is I will create, whether it be in system tests or explorations or whatever the case may be, and then I make it available to all my customers via download. And so for this particular example, what I created for this trading strategy is I created an indicator, an expert advisor, 2 different system tests, and an exploration. Now, also what's going to be a little bit different about today as well is that I'm going to be showing you exactly how I'm going to be using this and how you can use it yourself. So if you're interested in actually using what I'm going to be showing to you, a couple different things is that you can either, of course, try to follow or basically copy the systems from our screens as we're going through it, or all you have to do is email me at the end of today's presentation and I'll just send you the formulas and it'll allow you to download it directly into your MetaStock program. So don't worry about trying to copy everything down if you don't want to. I'll be happy to send you the formulas that I'm going to be showing you here today. So let's go ahead and jump over to the program here. And okay, so what we've got here is just a standard chart here of the SPY and just a standard candlestick chart. And the first thing we're going to plot on it is the indicator that I created. So whenever you plot any of the indicators that you download from the Learn MetaStock website, all of them will have LMS at the very beginning of them, which is an abbreviation for Learn MetaStock. So the one we're going to look for here today is called the LMS Supertrend indicator. And the way that it works, just drag it directly on top of whatever price chart that you have open. And what it's going to ask you for the number of periods that you want to use for the average true range. So basically, how long do you want to, how long of a look back period do you want to use? And then the second thing it's going to ask you is for a multiplier of that average true range, or the ATR. So you'll see the defaults are just 7 and 3. So that's what we're going to plot here to get started. So we'll just go ahead and click on OK. And the next thing it's going to ask you is, how do you want to plot this indicator? And what's really important is that this indicator is going to be plotted directly on the prices, and it's important that it shares the price scale of whatever you're plotting it on. So in this case, I want to definitely merge it with my scale over here on the right-hand side. So I'll make sure to choose Merge with Scale on right, and then click on OK. So this is the indicator here that's being plotted here. And as you can see, all it really is just a really simple line that either is above the price plot or below the price plot. So how you interpret it is that if the closing price of the price bar itself is above this line, you're basically looking for bullish types of trades. And vice versa, if the closing price is below this line, you're looking for bearish types of trades or possibly get out of long trades. That's kind of it, really. So this is what I was talking about before. Talk about simple. I mean, this is very, very simple as far as like the interpretation of this thing. So as you can see here is that if the prices do trend, this is the type of indicator that does really well, and it follows the trend, and it gives you kind of like an area where you could consider placing, for example, like a stop. And so as you're looking at this, the price is moving up, the line is going to be below it. And again, vice versa, if we go down, for example, in a downward move, the bar is going to be above it. And of course, then you could use that as a possible stop for a short position. So where the indicator does really well, again, of course, is when things are trending, but where it kind of struggles is just like any other type of trending system, is that when the prices get in like a sideways channel, sideways price channel, whatever you want to call it, this is where these trending types of indicators struggle, because they have a hard time figuring out, is the trend actually up, is it down, whatever. But we'll talk about some different ways to look at that as well here. So this is the indicator itself. And if you want to adjust it, all you have to do is just double click directly on it, and this will bring you back into the properties of it where you can adjust it, either the length, the multiplier, whatever you want to choose. So one of the questions that you probably have is that whenever you plot it on something, then the question is like, well, what's the best time period? What's the best multiplier that I should use for this particular indicator? So what I did to help answer that question is I created a couple different system tests. So I'll go ahead and open up the system tester by clicking on the green dollar sign up here. And what I'll do is I'll do a search for LMS, for Learn MetaStock. This will bring us to my formulas here. And you'll see that I've created two different ones having to do with the Supertrend. The first one is the Supertrend system test, and the second one is the Supertrend system test with OPT. So the OPT is an abbreviation for optimization. Now, if you're newer to MetaStock and technical analysis and charting, what optimization means is it allows you to give, or gives you the capability to back test a trading idea. But what it also allows you to say is, not only do I want to back test this trading idea, but I don't know what length indicator I should use. What optimization allows you to do is it allows you to test a range of data, and then it'll give you all the results back from each one of those tests, so that then you can sort on it and you can figure out which one you want to use. So to do this, what we'll do is we'll go ahead and open this up. I'll just double click on it. And here you can see, for example, I've got it written, basically spelled out here for you. I've got some notes here underneath the general section. And then I've got the formulas, of course, underneath the buy and sell, sell short, and so forth. Now, first of all, just underneath the general section, this will give you a quick explanation of what the system will do. But real quick shout out to William Golson, because William is actually the creator, or basically wrote this formula. He's not the creator of the formula, but he wrote this formula for MetaStock. And with his help, he sent me the formula, and then of course, and I created the system test, the explorations, the expert, and all that good stuff. So again, just quick shout out to William. He does a fantastic job over there at MetaStock. So now underneath the buy criteria, the sell criteria, and all that, you can go through it if you like. But what I'm going to do is I'm going to jump straight over here to the optimizations, because what this is going to allow me to do, it's going to allow me to put in the range of data that I want to possibly use for this particular indicator. So you'll see by default, the way I've got this set up with is that for OPT number 1, this is going to test the multiplier of the average true range. And it's going to say, hey, I want you to test everything from a 1 period to 10 period multiplier. And I want to do it in steps of 1, meaning I want to test a 1, 2, 3, all the way up to 10. Now for the length of the ATR, I want to test anything from 2 to 40 in steps of 2. So of course, this is going to do 2, 4, 6, all the way up to 40. Now, since it's going to do all those different combinations, this is going to do a total number of tests of 200 different system tests. And then what we'll do is then we'll be able to kind of sort through those results. Okay, so I'm going to go ahead and click on OK. And what we're going to do is we're going to run this real quick. We're going to run this on the SPY here in the background. So before I run the test, I also want to go through the trade options here, and I just briefly want to show you what trade options I've got selected here for the system test. So for the account here, you'll see I've chosen what's called a points only test. And I'm going to talk more about that here in just a minute, but I just want to show you the settings right now. I'm going to go to the broker tab, and you'll see that I've got everything kind of grayed out here, and I've got 0 set for my commissions. And for the trade execution, this is going to simulate that I'm going to trade at the opening of the price bar with a 1 period delay. So what that means is that if I get a buy signal on Wednesday when I get home from work, and I want to go ahead and take this trade on the next day, it's going to simulate that I bought it on Thursday at the opening. And then of course, if I get an exit signal on Friday, this is going to simulate that I get out at the opening on Monday. Okay, so that's what all that means. And I'm going to click on OK. Up here at the top, I'm going to put in the symbol of SPY, which is our ETF of the S&P 500. So this is our chart that we have open in the background. And then I'm going to click on this Start System Test down here at the bottom. Now, I just wanted to get this going because down here at the bottom, this is going to run through 200 different combinations. Now, very quickly, I just want to explain a little bit the system test parameters that I use. I'm running what's called a points only test. And what a points only test is going to do for me, it's just going to return back a raw number of points that were gained or lost of each security that was tested. Okay. Now, the reason why I choose this is that when I run a system test or I'm trying to develop a trading idea, what I want to know is just real quickly, does the system look like it has potential, yes or no? And by choosing a points only test, it's super easy to compare results of different system tests against each other. And what I'm going to do is I'm actually going to show you how I do that here in just a couple minutes. But by using a points only test, in my opinion, I think it's just a really simple, clean way to do it. You can also run a system test on dollar figures where you actually put in a simulated amount that you own. Say, maybe you have a $100,000 account, you want to trade $5,000 at a time. That's another option. But again, I choose to run a points only when I first run some of these different systems. Now, down here at the bottom, when it's finished, we'll just click on View Results. And what this is going to show us now are the system test results for the different systems that we ran. And as you can see, every single bar is green. And so then the question is like, hold it. Does that mean that every single system or every single security that I tested this strategy on was profitable? Well, the answer is not necessarily, because if you remember, the number of tests that we just ran were 200. There were 200 different combinations. But in the system tester, the most system test results that you can see, or basically it'll show you, is 100. So these are 100 of the most profitable results. So again, it's not necessarily profitable for everything that we tested, but for the top 100, these are the results. Now, what we can do is we can sort on any of these columns, and we can look at whatever field that's of interest to us. So for example, of course, most people want to look at the most profitable one, so we'll take a look at that one. So the top one generated 241 points. So now remember, we tested this on the SPY going back approximately about 5 years of time. So in that particular time period, again, this trading strategy generated 241 points. It had 8 total trades. It had 5 winning trades and 3 losing trades, and the average profit to average loss was over 4. So what that means, it means that the average winner was over 4 times the size of the average losing trade. And in my opinion, this is actually a really important number. And the reason being is because whenever we decide to trade real money in the real markets, we're not going to be right all the time, right? So the question is like, if we are only right, say 50% of the time, how do we make money with a trading strategy? And the simple answer is that if your average winner is substantially larger than your average loser, you can be wrong actually more often than you're right and still make really good money if the average winner is substantially larger. But if your average winner is around the same size as the average loser or drops down below a 1-to-1 ratio, that's where you're going to run into problems. And statistically, that'll wipe out your account if you trade that strategy long enough. So one way to kind of go about this is to basically work on strategies that produce more than a 2-to-1, maybe even a 3-to-1 type of ratio. So a 4-to-1 ratio is a good number. So then the question is, well, what did it come up with? How did it come up with that result? In this case, it used 5 for the multiplier and 38 for the length of the ATR. So let's go ahead and open that up. We'll double click on it. And this, of course, is going to give us more information about the system test results. And here quickly, just to go through a few fields, I don't want to go through this in a lot of detail, but we can see that the profit was 241 and the buy and hold was 231. So it actually did better than actually the buy and hold. And what the buy and hold means is that if I would have bought this security at the beginning of the data that I tested, so 5 years ago, and literally just held on to it, I'd be up 231 points. But if I chose to use this trading strategy, I'd be up 241 points, okay? So then it's like, okay, well, that sounds good, right? We beat the buy and hold, but is this something that we want to trade? Well, before we can come to any conclusions, there's a lot of fields we really need to take a close look at, but I'll just go through a few of them here. But here's the total number of trades, and you can see that there were 8 total trades for this trading strategy. 5 of them were winning trades, and then 3 of them were losing trades. and the average profit was over 56 points and the average loss was over 14 points. So this number, these two numbers at 56 and 14, that's that ratio of 4.03, meaning that the average winner was over 4 times the size of the average loser. And that's what these two numbers are basically showing us here. Okay, so another thing I like to look at here too is this number right here. This is the out of market timing. And what this means, it means how much were you not actually in the market. So, and this is actually an area that a lot of people tend to overlook, because when they're looking at these trading strategies, they really just kind of look at, a lot of people look at just the profit versus the buy and hold. But just hypothetically, what if I was able to generate this amount of profit in a year of time or 2 years of time, but it took me 5 years to generate 231 points? You know, which one would you rather have? And that's what this number will help identify here for you. And this case, for example, this was out of the market 409 bars. So what that equates to is that if you can roughly figure about 250 trading days in a year, so that's not quite 2 years of time. So let's say, you know, let's say that that's about a year and a half. So what that means is that we generated 241 points in about 3.5 years of trading, versus being fully invested for 5 years to generate 231 points. So that's where those numbers again can kind of be adjusted when you're looking at these different test results. Another thing I like to look at is, of course, looking at the equity curve. And this will tell you what your account looked like during that trading that back test, meaning that you started off at a value of 0, and then where you ended up is what we're looking for is as smooth of a line as possible. And we're trying to avoid these areas where it kind of gets where it's going downward. And these are what we call drawdowns, right? This is just basically saying that you're in a trade, but the market's moving against you and it's drawing your account down. So of course we want to try to avoid those. Now, lastly, down here at the very bottom, if you click on the plot on chart, this will actually plot the results directly on your chart so you can take a look at the buy and sell signals. So up here at the very top is our equity curve, which we just saw a minute ago. So I'll go ahead and close that down. Go ahead and get rid of that. And then I'm going to zoom way in here on this chart here. And what I want to do at this point here is I want to take a look at this line here. Now, I'm going to open it up and you'll see that this is still using the 7 and 3. So what I want to do is I want to make this match up with those numbers that we just looked at. So the number of periods that we were looking at just a minute ago was a length of that ATR at 38 and then a multiplier of 5. So I'll click on OK. And there you'll see it'll adjust our line here. Now, if you look closely, there are some buy and sell signals here on our chart, but they're hard to see. So I'm going to go ahead and double click on one of those candles and I'm going to change these to a bar chart, and I'm going to make the up color white and the down color white, and we'll click on OK, and that'll just help me see those signals here a little bit better. All right, next what I want to do is I want to zoom in here a little bit and take a closer look. Now what I'm looking for here is that this line right here, this is our indicator, and when you get a buy signal, what you're looking for is the closing price to cross up above that line. So if it crosses up above it, what you're looking then is, the system test is that it's looking to buy on the next opportunity or the next bar. And in this case, the way we set it up was we said, hey, buy it at the opening of the next bar. So if this was an actual trigger right here, then we're looking to get in at the opening on this bar. And if we look at the open price here, you'll see it's 439.23. And then to verify it, if you hover over these yellow numbers here, you'll see that this is position number 8 and it traded 1 unit at 439.23. So that's perfect. That's exactly what we're looking for. So this is really what you have to do when you test different trading ideas. And that is, you need to make sure that you understand why this thing is buying or selling at these different points. And you need to make sure that that the fills are correct as well, right? If you tell it to get in at the opening, but it's getting in at the close, that's where you need to stop, regroup, and try to figure out what's happening there. So let me kind of go back here a little bit. And then, for example, like here's an exit sign right here. Let's kind of, whoops, I'll zoom out here for just a second. But here you can see that, again, there's a nice trade during this section right here. And then we'll kind of zoom in here on this last part right here. and this one got out on this bar because here's what happened. You see how the prices are actually moving down, and then this bar closed below that line, and for that reason it got out at the opening of the next one. So again, to check it, you'll see that it traded 1 unit at 433.37. So if we'll hover over that price bar, you'll see at the opening is 433.37. Okay, so that's perfect. That's exactly what we're looking for when we run these different system tests. We want to make sure that this thing is buying and selling where it should be buying and selling. And once we verify that, then that helps give us more confidence in actually what we're looking at. All right. So of course you can take one security at a time. I know people trade a lot of different ways, for example, but you know, hang on for just 1 second. My screen just flashed here for a second. Let's see. Hang on for just 1 second. My apologies here. But I know a lot of people trade in a lot of different ways. A lot of people zero in on, for example, like just one security at a time, for example. Some people like looking for different securities to trade, are always looking for different opportunities and so forth. So then the question is like, well, how would you actually use this, you know, if you want to trade or basically test it on a bigger group of securities, for example. So one thing that you could do is I created another system test that you can run. So if you go back into the system tester, for example, you'll see there's a second system test I created just called the Supertrend system test. I'll go ahead and open that up. And the difference on this particular system test is that right up here at the very top, you'll see two fields. You'll see a multiplier field and a length field. That these are the two fields that you can modify as much as you want. Okay, so if you want to run that combination of 5 and 38 on a big group of securities, this is actually where you would do that. So in this case, for example, let's go ahead and make that adjustment. Let's go ahead and make that multiplier. Actually, let me back up for just a second. I almost made my cardinal mistake. One thing I always tell my customers is that don't change original systems. And the reason why I say that is because if you download my formulas, for example, today's presentation or whatever, you're going to have them on your machine. And one way to kind of safeguard whatever you're doing is that if you make a copy of the formulas and make your changes to the copied versions, that way you always have the originals to fall back on. So it's just kind of a fail-safe little check there for you. But let's say that I want to make some changes to the system. The way that you copy a system is just right-click on it, click on copy, and there now I've got a system called -copy, and that's when I want to go ahead and make any changes to. So we'll go ahead and open that back up. And let's go ahead and change these numbers here. I'm going to go ahead and change the multiplier to 5. I'll change the length here to 38. And then I'll go to the cell tab here, and I'll make that same change here as well. So I'm going to change that multiplier to 5, and I'll change the length here to 38. All right. Now, I'm going to just try to keep it really simple. We're just going to be doing longs only today. And we'll go ahead and run this on a bigger group of securities. So I'm going to make sure I've got my copy system selected. I'm going to keep everything the same over here. And then for the group of securities that I'm going to run it on, in this case, I'm going to run it on the NASDAQ 100 securities. So I'll go ahead and select that, and we'll click on our Start System Test. All right. Now, again, down here at the bottom, this will give us an idea how the system is going through it. But in this case, for example, we're going to be testing that one trading strategy of 5 and 38 on the NASDAQ 100. I'll keep all the system settings the same and so forth. Now, the other, oh, and by the way, I should probably also mention too, if there's any types of questions, hang on for just 1 second. Jeff, just real quick, I had a little hiccup here with my computer. Is everything still coming through okay?
Yes, sir.
Okay,
we did
good.
have a question about, we did also have a question about how to get the formulas. And so I put your email in the chat. And that
perfect.
is admin@learnmetastock.com.
Yep, exactly. Yeah, that's perfect. And again, I'll go ahead and put that up at the end of the presentation there as well. So, but yeah, just send me an email at the end of today's presentation. Like I say, I'll be happy to send you a copy of what I'm showing you here today. All right. So now let's go ahead and open this up here and let's take a look. Oops, I want to take a look at the results. My bad. Click on the view results down here at the bottom. And now what we did here is we took those same parameters that we ran before on the SPY, and then we said, hey, let's use those parameters on the NASDAQ 100 and let's see what kind of results we get. So again, what I'll do is I'll go ahead and sort, for example, like on the net profit, for example, all right? And here you can see, that the vast majority of the securities actually did test profitably using those same parameters, and we did have some that tested negatively. That's okay. But then what we can do, of course, is then we can go into each security, and then we can decide whether or not we want to take a closer look at it, maybe adjust the parameters, whatever the case may be. So here, for example, Broadcom generated a little over 1,000 points. The buy and hold was about the same. And to do that, it traded 5 times, for example. And if we scroll down here again a little bit, you can see you're out of the market 354 bars. So a little over a year that you were out of the market in order to generate that. But you can go through each one, take a look at the equity curves. You can see that NVIDIA, it actually generated over 900 points. The buy and hold on NVIDIA's was a little bit less at 891. We'll go back here. Next one down is ASML Holdings and so forth. But you can go through each one. You can take a look at them individually and apply your same analysis to see if you want to, if you want to take that a little bit further, what you want to do with it. One question that I've gotten before in the past, and this is something that I added to my presentation in the last one, is that people would ask, like, when I'm going through these different trading strategies and I'm testing a group of securities, how can you tell whether or not, or is there an easy way to kind of figure out how well it worked overall on, on the entire list of securities that you tested on? So let me just show you what I do, for example, when I do something like this. When I run a strategy, or I'm trying to test different trading ideas, and I've run it on a group of securities like this, and I want to compare these results against another group, or basically make a small change to the system and see if that helped overall or didn't. What I'll do is I'll actually copy all this and I'll put it into Excel and then analyze it there. So to do that, let me just show you real quick how to do it. Once you have your test results like this, just right click inside there and choose copy to clipboard. Then go ahead and open up an Excel spreadsheet, for example, and I'll go ahead and click in here, and we'll just go ahead and paste those results in there. Now, when you run a points only test here, this is what's going to happen. You're going to have a column of data here of net profit, and each number is going to have an abbreviation for points at the end of it. And the problem with this is that this is a mixed field here. It's got a number and it's also got some text in here. And so if you want to average these numbers or sort them and do all kinds of things, you really need to get, or basically take out the text of this column. And a very quick, easy way to do this then is go up here to this to the find and select inside of Excel here, and you have a choice. The second one down is called replace. And if you click on this, this will allow you to replace anything that you want inside the spreadsheet. So for example, what I want to do is I want to get rid of this abbreviation of points. So I'll go ahead and type in PTS and then say replace with, and I'll leave that blank and then click on replace all. And what that does now is that removes that from that column of data. And now each item in here is just a number. So the nice thing about this is that now I can grab, for example, I can highlight all these different numbers, for example. So I'm highlighting all the positive results here, for example, down to this one right here. And if you look down here in the lower right-hand corner, I'll kind of bring that up here a little bit so you can see it here. But it says the average is 156. The count is 68, and the sum and so forth is right there. So your average is 156. So out of the securities here, in this case, 68 securities that I tested that on, the average or profit was 156. And then vice versa, if I could go to the losers here, I'll go ahead and highlight those. Then I can see that there were 32 inside of that one, and the average was 24. So the average winner was 156 points. The average loser, or the average losing security, was 24 points. So this is really good information, because now what I can do is then, if I want to run another system test very quickly, I can kind of jump between spreadsheets and try these different ideas. So where this leads me is I want to go back to MetaStock here. And when I was actually doing the research for this particular trading strategy, one of the things that I kept coming up with and taking a look at all the different training that's available is I saw numerous references to trying to improve this trading strategy. And that is, you know, since this is a trending following type of trading strategy, maybe if we combine it with another type of indicator to help identify when it's trending and see if that helps, you know, maybe we could do something like that to see if it improves the results or not. And hands down, the most common example that I saw anyway was trying to combine this particular trading strategy with a moving average. And the idea is only take a buy signal, for example, if the securities are above their moving average. So if you want to try different things like that, let me show you how you can possibly do that. So I'm going to go back into our formula here. And again, I'm going to go to the buy order right here. And I want you to take a look at this last line right here. I know that if you're newer to MetaStock, this all probably, you know, these formulas all probably look like mumbo jumbo, but this is the area that I can really help you with inside of, you know, our training here, because this is what we do is we'll help explain how these different things work. And then of course, how you can modify them, create your own and do whatever you want to do. But here's this last line here. What this last line is saying buy the security when the closing price, for example, goes above the indicator. That's what this part is right here. So in other words, when the closing price of that security goes above that line, that's where we want to go long or buy the security. So for this example, what we want to test is we want to say, well, I only want to buy it now if the security is also above, in this case, a 200 period exponential moving average. And the reason why I want to use that one is because that's the most common example that I saw. So if I want to add that criteria, what I could say is, and I want to know that the closing price, for example, is greater than its moving average. So to write the moving average is written as MOV, open parenthesis, close, in this case, the number of periods that you want to use, and then the type of moving average, which in this case is going to be E, which represents exponential. So in other words, this is a 200 period exponential moving average. So this line says that the close also has to be above its 200 period moving average in order to get a buy signal, okay? So again, I apologize if you're newer to MetaStock and don't know a lot about the formulas, but if you're interested, that's where obviously I can help you out there too. But let's just go ahead and run it. Let's just go ahead and click on OK. And now what I'll do is I'll go ahead and just run it on that same group of securities. So we're going to run it on the NASDAQ 100 securities, and we'll just see, how these results, or how it affects these things. But this is really the incredible power of MetaStock, is the ability for you to ask what if types of questions. Again, you've seen a lot of great presentations today showing you, prepackaged systems and so forth, and if that's what you want to do, that's fantastic. That's great. But if you also want to learn how to really use the program and ask it your own questions and backtest your own trading ideas and things like that, that's where MetaStock is incredibly powerful there, to say the least. So anyway, let's go ahead and open it up. We'll click on our view results. And again, we'll sort on the net profit and you say, okay, well, that looks pretty similar to what we just looked at, right? So is that better or is that worse than the previous results? So this is where I would take the results again. I'll go ahead and right click on it, click on copy to clipboard, and then jump over to my Excel spreadsheet here. Let's go ahead and open that back up. There we go. And in this case, I'd go to a new sheet here and then just paste in those same results and then do exactly what I just showed you here a minute ago. In order to sort this data, I need to remove this abbreviation. So again, I'll go to my find and select, click on replace, and just say that I want to replace this abbreviation with nothing. So we'll click on replace all. And now again, I've got these numbers in a format that now I can use. So now I can go ahead and highlight these numbers here, and we'll go down until they become, in this case, like 0. So there I can see now my average has dropped to 132. And then let's see what the losers look like. We'll kind of highlight those real quick. And here you can see the losers actually went up to $36. So by adding, so now that answered my question right there, right? I know that by adding, for example, that 200 period exponential moving average in that combination actually did not help that trading strategy. And that's kind of the neat thing about this, is the ability for you to ask those types of questions. And of course, that's where I can help you out there. Okay. So let me go ahead and cancel out of there. Whoops, let's go ahead and move that. Now, the other thing, I've created a couple other things here too that you'll have access to as well. And if you want to scan or go out and search for buy or sell candidates using this particular trading strategy, I've created an exploration. So to see that, again, we'll do a search on LMS. And this is the scan that we created, just called the RMO Comprehensive, I'm sorry, the Supertrend, my bad. I also did, I guess just real quick, I've done a fair amount of training there on the RMO too. So if you are an RMO fan, make sure and take a look at that. I can help you out with that as well. But anyway, so the Supertrend exploration, we'll go ahead and open that up. And I'll go ahead and just show you how this works. So when you download the actual system, this is what it's going to look like. You're going to see that column A is going to give you the closing price. Column B is going to give you the day of the month. Column C will give you a buy signal, or give you a 1 if there's a buy signal. And then column D will give you a 1 if there's a sell signal. Okay, so let's go ahead and run it. We'll click on OK. And let's run this one. We'll run it again on the NASDAQ 100. And we'll go ahead and start our exploration there. So the Explorer, by the way, this is my favorite tool inside the program. The versatility of the Explorer, I think, is pretty much second to none. The ability to put in whatever type of criteria that you can imagine and have it rip through thousands of securities at a time is, again, like I say, second to none if you ask me. This is really, really powerful. So anyway, when you run this scan, for example, or like what I just did, this is the type of report you're going to see. You're going to see the securities listed here on the left. You'll see the field called close, which is the most recent closing price for that security. Then the date, this is showing us the most recent day that it's scanned up through, which of course is today. And then we've got a column called buy and another column called sell. Now you'll see most of them have a 0 in here. So that means it didn't meet the criteria for that security. But if you click on the column heading, you can then sort on those fields. So you'll see that we've got 2 securities with a buy signal, and let's click on the sell, and you'll see nothing's there's one for the sell signal. There's CSX there. But let's go ahead and take a look at these 2 buy signals here. This first one, this looks like Dr. Pepper, and the second one here looks like Kraft Heinz. There we go. Open those up, and let's take a look at this. All right, so this one is Kraft Heinz. So this one is giving us a buy signal right there. And now the fields that I actually scanned on here is I scanned just using the default parameters were 7 and 3. So our indicator here is already set up for that. So that's perfect. And now you can see if I kind of zoom in here, the reason why this one came up as a buy signal is because this candle closed up above that line right there. Okay. Now, in addition to help you out as well, I've also got an expert advisor that I created. And so if you go down here to the expert advisor here, you scroll down through the LMS formulas and look for this one called the Supertrend Expert. Click on attach. And actually, just real quick before I open that up, I also want to open it up. I'm going to double click on it. You'll find that underneath the symbols tab, there's a buy symbol and a sell symbol. So if you make a modification, for example, that you want to use other parameters, these 2 fields again are the 2 fields that you'll want to adjust to whatever you want. But in this case, again, we're just using the defaults of 7 and 3. So again, I'll go ahead and make sure that's selected, click on close, and that'll put that buy signal underneath that particular bar. Now here's a sell signal there. And as you can see here, these are kind of hard to see. So I'll go ahead and just double click on the candle, and I'll just change it to, for example, like to a bar chart. And I was experimenting with these different colors, but I think just the white bars actually show pretty good. And there you can see very clearly, the buy and sell signals there. And one of the advantages, of course, by using the expert advisor, all you have to do is open up your chart, apply the expert advisor, and as you get new data, those signals will be generated as the data comes into the chart there. So that was Kraft Heinz. We'll go ahead and close that one down. And the other one that we're getting a buy signal on right now is Dr. Pepper, because again, this particular bar right here closed above that line, and that upward green arrow is basically indicating that point there. Okay, so yeah, so if you're interested, I think this is actually a pretty interesting indicator / system. I've actually have done this presentation now a number of times, and I've gotten a fair amount of feedback on it there as well. And of course, one of the nice things is just it's super simple, number one, and number two, it's super customizable there for you as well. And I've got some of the feedback that I've gotten recently are just some of the different or interesting ways that some people are using this. I talked to a gentleman just yesterday actually that's using the strategy here, and he's using it as a type of a trailing stop. Talked to another gentleman that's using this in conjunction with another system to identify or basically support whether he wants to be long or short at different points and so forth. So again, give it a shot, take a look at it, and if you want to make modifications to it or come up with a different way to use it that works for you, I'd love to hear back from you on it as well. So yeah, just let me know. It's great always getting feedback on these different systems like this. So let me give you just a quick run through of my website and what we do at Learn MetaStock. At Learn MetaStock, what we do, of course, is we'll help you with whatever it is that you have that you're working with on your MetaStock program itself. And we can help you in a number of different ways. But up at learnmetastock.com, if you go through our site here, some of the different areas you want to take a look at, for example, are, like our live classes. We do up to 3 live classes per week on Tuesdays, Wednesdays, and Thursdays. So tomorrow, for example, we're going to be doing a class on the forecaster. Wednesday, we'll be doing one on the expert advisor. And then on Thursday, we'll be doing our first formula writing class. We've got a number of different formula writing classes, but this is the first one in a series. Then, in addition to those, if you can't make the, if you can't make the live classes, the timing just doesn't work out for you, where the majority of our people spend our time is inside the video library here. And if you can't make our live classes, just click on this category right here, which is called live class recordings. And what we do is we put the previous week's recordings on the site for you, so you'll never miss anything, in case you can't make our live classes there. And this area here, again, this is our video library here, and you can see we've got a number of different categories here based on whatever it is that you want to learn more about. And as I was saying earlier, like one of my favorites is the Explorer, for example. I mean, the tool for the Explorer, I think, is it's so versatile, and there's so much that you can do with it. Just absolutely, I think it's fantastic. But we've got a ton of training for you here on these different categories. And so basically, once you pick a video, for example, like the introduction to the Explorer, for example, just open it up. Of course, then you can click on play and watch it. But in addition to that, with a lot of our videos too, we also have quizzes that down here at the very bottom. If you click on the quiz here, what this will do also is it'll reinforce, for example, what we taught you in the video there as well. So that can be a nice learning tool there for you as well, in addition to actually just watching the videos. But as you can see, we've got classes on just about every category you want. So for example, if you want to learn more about system testing, for example, go there. One of our most popular areas, and this is actually where we got our class today, is underneath this trading strategy section. And this is what Jeff was referring to when he gave me the introduction here at the beginning of today's class. And that is, a lot of times what we'll do is we'll take these different published trading strategies from either a book, magazine, maybe video, whatever the case may be, and we show you how to duplicate it inside of MetaStock. So one of the areas that we use a lot is from Stocks and Commodities Magazine. If you subscribe to Stocks and Commodities Magazine, they have an article archive section where you can look up about any type of technical criteria you can even dream up and you'll find articles on it. And we use that a lot. That is a fantastic resource for more information. And that's where a lot of our different classes come from and so forth. But like today, for example, the one we're doing today is called the Supertrend indicator. But if you want to go up and watch it on our site, just go ahead and click on it. And then to download the formulas, just scroll down and then you can click on this link right here, and that'll download the formulas directly into your MetaStock program. So I've got formulas on every single one of these trading strategy classes and videos that you'll see inside this category here. So every single one that you've got here, I've got custom formulas for that you can download directly into your MetaStock program that I think can save you a massive amount of time and effort, to say the least. All right. And then lastly, I'll just scroll back up here to the very top here and just show you, lastly, is up here the weekly market outlook. We do just an overview of the markets there, just to kind of give you a quick idea what we feel that the market is doing at that time. And then at the very bottom of this page too, a couple other areas that we've been doing now for, gosh, quite a while, probably well over a year now. We run two different reports. We run a report to help identify securities that are in the strongest sectors and then the strongest securities inside of that sector. So that's a report that we'll run. And then this one is an external relative strength report that'll tell you the securities that have gained at least 20 points of relative strength in the last month. And these reports, again, are things that you can download directly into your program there as well. So anyway, so I hope that that's helpful. And at that point, now what I'll do is I'll go ahead and hand it over to Jeff and let him take it from here.
Before we let you go, Kevin,
Yeah.
Cynthia wanted to know if you've ever seen anybody pair with ADX, the the Supertrend indicator with ADX.
Well, that's well, if you go up, as I was saying, I mean, if you go up and watch some of these videos that have been done on it, you'll see all different types of combinations. And one of the beautiful things, again, is that once you start to learn a little bit more about that, those are the kind of questions that you'll be able to ask yourself and say, hey, I want to use an ADX indicator, and I want to basically buy it if the ADX is positive, or the positive is above the negative, whatever, or the ADX is above a certain level, in combination with the Supertrend indicator itself. So, I mean, that's the kind of thing that you'll be able to basically learn how to do yourself and put in whatever type of combination that you want. But yeah, we've tried a lot of different types of strategies and combinations. And again, I think it's actually a pretty interesting indicator because it is so open and you can combine it with anything you want.
I just love that about not only the service, because it kind of helps you do that, but just the ability to go, hey, what if? I like this indicator.
Exactly.
I like this indicator. What if? And the thing is it's not too hard if you have just somebody to show you how. Do you know where we could find somebody that would show you how, Kevin?
I love it, Jeff. Love it.
All right. Cool. Well, I'm going to go ahead and just kind of show them how. Hold on just a second. Thanks a lot, Kevin. I really appreciate that. That's a great.
Yeah, thank you. Appreciate it.
All right, let me go ahead and do this. And I'll talk about how you can do it. So as we had kind of talked about, Learn MetaStock does have basically hundreds of instructional videos. And Kevin actually did a very thorough job of showing that to you and kind of how it works. But he's got videos on basic MetaStock. He's got expert advisors. He's got system testers, videos on stops, videos on formulas, videos on systems. Really, really comprehensive service. In addition to that, he actually really did a better job this time of showing out the systems that he's got with it. As part of learnmetastock.com, that's just one of the classes that he talks about with the Supertrend indicator. He's got 21 complete systems comprising of 9 different templates, 62 indicators, 14 expert advisors, 28 different system tests, scans, all that stuff is actually included. What we're doing is if you haven't used Learn MetaStock before and you want to get a subscription, it's normally $99 per month. What we're going to do for you is we're going to give you a 3-for-1. So if you sign up for a month, we'll give you the second and third month for free. Basically, it's $33 a month. I'd recommend this for you if you're a new customer, or even if you've been using MetaStock for a while. I've said it several times today, like MetaStock's a great toolbox. There's a whole bunch of tools in there. And just like any other toolbox, the better you understand how to use the toolbox, the better it's going to work for you. So this is a good opportunity to give that service a try, learn a lot about MetaStock, and learn a lot about how to use that MetaStock subscription, especially if you're new too. What a great way to kind of get some up to speed really, really quickly. So to do this, you can go to metastock.com/learn MetaStock 3-for-1. You can give us a call, 800-882-3040. You're welcome, Cynthia. Thanks for the question. And you can go to metastock.com/saleschat. In addition, we are pairing that up. It's the final thing that we're going to include with the Summit Action Pack. So this morning we talked about Vin's Vora, his very popular victory method, and all the changes, the take profits, the addition of the other two systems, the market overview, the ability to look at the screen and see what the daily and weekly is telling you without looking at the weekly and the monthly without looking at the weekly and monthly. Massive overhaul to that system. Very, very popular system too, method 2 or version 2. You're also going to get Power Bundle 360, Super Signals, Trend Radar, the Buff Dormeier Analysis Toolkit, Serge Berger's Vertical X Pro, Oscar Carboni's Trend Lines and Training, 3 months of learnmetastock.com. All of that would be normally $6,528, but you can get it for just $2,436. Let me fix this slide again. And
Jeff, my humble apologies if that's my fault.
I was kidding.
My fault.
It's totally fine.
It's my fault. I apologize.
No problem. We changed it, I think, every time. So $2,436 will get you that whole thing. You can do that at metastock.com/summit deal. You can call us at 800-882-3040 or metastock.com/saleschat. So one last thank you to Stocks and Commodities Magazine. Really appreciate their sponsorship. And if you don't do anything else, I just want to remind you, MetaStock's been rated #1 in its price category for 31 years in a row. We talked about all the power tools that have helped propel it to #1, like the scanning, testing, all of that kind of good stuff. If you want to do an extended trial, you can also do that at metastock.com/summit deal. So with all that being said, let me go ahead and put that in the chat here. And this. And this. My thanks to all of the presenters today. Really appreciate it. Thank you for being here all day. It was good to see you. I hope you learned something. I hope it was helpful for you. And I hope to see you again at another one in the future. Stay safe, stay well, stay healthy, and I'll see you soon.